Ladies and gentlemen, thank you so much for joining us today for the Binance Off the Charts virtual conference. My name is Tina Baker Taylor, and I will be your co host for the Europe segment, along with my compadre, Josh Goodbody. Hey, Josh.
Hello, Tina. Hello, everyone. It is really great to be here, and we're super excited to have you all joining us. The date is July the 14th, 2020, so we are now officially celebrating Binance's 3-year anniversary today. How about that? Can you believe it, Tina?
It's
Just
incredible.
3 years ago, Binance launched. Crazy, huh?
It's amazing how far Binance has come in the last 3 years. From a crypto to crypto exchange in 2017 to offering financial product suites with payment channels, supporting more than 180 fiat currencies today, among many other milestones.
Absolutely. I mean, that's non-stop building. So Binance really has been on a relentless mission spreading the freedom of money. We've been through a Bitcoin halvening, a bull and a bear run, and now we're here in 2020, 3 years later.
Well, the team today has been hard at work pulling together a really engaging program with some of the industry's leading minds to discuss the key themes that are happening in our industry today. We'll cover policy and regulation, blockchain and global health, data and analytics, and the latest Web3 and DeFi trends, and even trading strategies a bit later today.
Pretty packed agenda. And we also will have 3 NFT giveaways throughout the event. So do stay for the full program for a chance to win some of our limited edition prizes. And so before we kick off the full program with our first keynotes and panels, it's our absolute pleasure to welcome Binance's founder and CEO, CZ, to make a few remarks. Welcome, CZ.
Hello, Josh. Hi, Tina. How are you guys?
Good morning.
Great.
Over to you, CZ.
Sure. So I would like to take this opportunity to thank everyone for joining our first virtual conference. This is the first time we're doing this, and it's very exciting and quite interesting for us as well. And I want to thank all the speakers for attending and all of you guys for listening to our conference. So Binance has been user-focused from day one, and our team is very hardcore and passionate about increasing the freedom of money globally. And we feel very strongly that this increase of freedom of money will benefit people from all over the world. And people sometimes often ask me about what's Binance's secret for success. There's really only one word: we built. So the team has been working really hard over the last 3 years. It's actually phenomenal just looking back, taking a moment to reflect how much they have built in the last 3 years. So let me take this very quick opportunity to introduce you to all of our products. I think most people do not know all of the products we see in Binance. We started with a spot crypto to crypto exchange first. And then today we also have futures options. In futures, we have multiple futures options. We have perpetual futures and delivery futures options. We're adding more products as well. We have multiple fiat gateways now. We're no longer a crypto to crypto exchange. So we support 180 different fiat currencies in the world. And for most currencies, we have multiple channels. We offer staking, savings, mining pool, loans, P2P, trading with fiat, OTC, and we're very soon, today, we're launching a card. There are many other services which I'll just read out the name. We have Binance Launchpad, Binance Labs, Binance X. All of those deal with investments, tokens, helping projects to grow. We have, on the other products, people probably don't know, we have a Binance widget. We have Binance Access, allowing other merchants to display trading features on their own website that has liquidity passed through Binance. Binance Broker, Binance Cloud. We have a number of fiat exchanges, with the most recent one on Binance UK launching soon as well. And on the blockchain side, we have Binance Chain, Binance Smart Chain, Binance DEX, BNB, and we have a Venus project with 4 stable coins and counting, with Binance USD and Binance GBP, and Binance Korea Won, and BIDR, the Indonesia rupee. So there's just a lot. I can go on for a long time. We also have a lot of portfolio companies. Unfortunately, we're only allowed it a few minutes. Looking forward, I think with COVID-19, there's a shutdown of the global economy in most places. And we're seeing civil unrest, police brutality, quantitative easing, and soon hyperinflation. So I believe a lot more people will move into crypto, and we're ready to serve them. We want to provide them access to crypto. It's as simple as that. So I think lastly, I want to thank all of our community for your support, because without you guys, Binance will be nowhere, and all of our success to your support. And I would like to thank all the Binance angels, the Binance team, and all the speakers in this conference. So thank you so much for your support, and we hope you enjoy this conference.
Thanks so much, Susie. So for everyone who's joined us, we got started a little later than planned. So our agenda will be moved forward just slightly by about 10 minutes. So keep that in mind as you follow along with us today. I am delighted to be moderating our first panel today, Shaping the Future of Policy and Regulation.
Awesome.
Josh?
Yeah, but first, a reminder to our viewers, we've also got a dual session, which is running concurrently to this en español. Entonces, para nuestros seguidores en España y en América Latina, en el local stage tenemos un panel con David Ferrer Canosa, la secretaria de Política Digital para el Gobierno de Cataluña, y Luis Baello, nuestro director de España. So please remember, you can switch between the global and the local stage at any time. If you're viewing on Binance.com, you can do absolutely the same. So remember, you've got that choice.
Great. Thanks, Josh. So without further ado, let's get started. It is my pleasure to welcome the first panel to our stage today of regulatory and advocacy experts. First, Robert Kopich, Secretary General at Blockchain for Europe. Delphine Forma, Board Member of Crypto Valley Association. Anson Zeal, Chairman of Access, which is the Singapore Cryptocurrency and Blockchain Industry Association, and Tyler Werty, co-founder and board member of HODLPAC. Hi, guys. Thanks so much for joining us today.
Hi, happy to be here.
Right.
Thank you so much.
Thanks for having us.
Brilliant. So we only have about 20 minutes. So let's jump right in. And I think that our first question will allow you to kind of introduce what you do. So first up, advocacy work requires an enormous amount of dedication. In your roles supporting the industry and policymakers both, I'd like to ask you each about some of your significant successes. So Anson, let's start with you. Access was one of the first cryptocurrency or crypto asset industry bodies formed in about 2014 and has earned a real place of influence with your local regulator, MAS, Monetary Authority of Singapore. Could you tell us a little bit more about the code of practice for digital asset industry that you recently worked on with MAS and how you think it's going to benefit the ecosystem? Anson, I think your mic is not on.
Sorry about that.
There you are. That's all right.
Hi. So just want to say very quickly, 6 years ago, my advisor told me when I had my first meeting with MAS that my call to action then was to have a second meeting. This was 6 years ago. Yeah. So fast forward 6 years, the code of practice is a very big part of the ecosystem now. It gives the banks, the MAS, different stakeholders to see how we standardize the procedures of what crypto companies do for AML and KYC, and now including travel rule as well, and how they assess the different risks. So we have been working together with MAS facilitating this in consultation with the Association of Banks. Mm-hmm. And now with this and the new license that just came up, basically companies can just follow the code of practice, treat it as a guide. And then afterwards, you can also use this towards getting the license, as well as talking to different stakeholders, and most importantly, to the banks.
So really practically useful. Delphine, the Crypto Valley Association has been very active also in the support of the promotion of crypto assets, specifically in Switzerland, but elsewhere as well. Switzerland took the early lead in developing clear guidance around tokens. Can you share some of the ways that the CVA has been supporting the ecosystem on policy development? I believe you were heavily involved in the interpretation of AML regulations with the CIF.
Yes. So hi, everyone. Thank you for having me today. I'm very happy to be here. So yes, in the CVA, we actually support and connect the startups and established enterprise to policy recommendation and project across verticals. We initiate and establish research, organize conference, hackathon, and other industry events. So the way we work is that we have different working groups which are in charge of a specific topic to support the needs of the community and influence, obviously, the policy regulators. So for instance, as you just said, Regulatory Affairs Working Group, which I'm part of, has been very involved in influencing local and global regulation. And as you just mentioned, very recently, we have just going back and forth with the State Secretariat for International Financial Matters, the SIF in Switzerland, regarding the modification of the AML regulation in light of the new DLT law. So what they have asked us to do is mainly to work on definition, what is a hosted wallet, what is not a non-hosted wallet, and how we will apply AML regulation. So we were in the final stage, and it's very good because they have really taken into consideration our opinion. So this is basically how we generally work with Swiss authorities. They really see us as trusted partners. And on a more global level, very recently, and it's not out yet, our stablecoin task force is also replying to the consultation paper of the FSB on the regulatory, supervisory, and oversight challenges raised by global stablecoin arrangement. And also, and also maybe you've seen it on social media, very recently we have also released a paper on trusted case ceremonies guidelines. And the aim is really to improve awareness of the importance of protecting digital assets in a safe and secure way. So I think like really, I would like to use this forum to thank all our working groups members, because without them, we won't be able to be such a powerful association and be able to influence regulation. So thank you so much for that.
Brilliant. I have, a bit of a surprise comment question for you, Delphine. I know that Crypto Valley has done a lot of work over the last, 18 months to ensure that the board of directors for Crypto Valley had a nice balance of diversity. So I was super delighted to see you join the board of directors as a very knowledgeable woman in the space.
Thank you so much.
You're welcome. Robert, let's move over to you. So Blockchain for Europe is one of the newer advocacy bodies formed in 2018 to address an entire region versus an individual jurisdiction. As we know, advocacy and lobbying in Europe is very different to other parts of the world. And so in addition to bringing communication, to bridging those communication gaps between the industry and policymakers, you also have the added responsibility or challenge of bridging communication across 27 member states who may have completely different views on policy and risk appetites. How do you navigate this for the industry?
First of all, thanks for having me, and happy birthday to Binance. Great what you're doing, and you will be probably doing in the future. That's a very, very true point that you just made. So the European level, as many of you know, has several layers. The one that's really truly European is the European Commission with the European Parliament, all located in Brussels. And then you have the second layer of the legislation process is the member states. And to link them, we have to operate on several levels, basically. So we have to operate in the Brussels level with the Commission and the Parliament, and then also with the member states. And we try to do this in connection with all of them all together, So to make this a success, we have to bring them together, to connect them, and make them all aware of what the other one is doing. And that's also one of the beauties that I think we bring to the table. So we talk to all the jurisdictions at European level, so Germans, French, but also the Finnish and the Latvians and Cypriots and Maltese. There's large and big countries in the EU, so it's sometimes not so easy, and sometimes they don't even know what the other one is doing, how far advanced they are. And so we had a very positive example for that we've been to Finland, for example, and then a couple of weeks, and we talked to the tax authority, and a couple of weeks later we went to France and Belgium, and they were complaining about how you can use, or basically not aware of how you can use taxation models on blockchain to make it more efficient for the state to collect taxes, for example. And we just been in Finland where they're exactly working on this. And we told them like, hey guys, talk to your Finnish colleagues. They're exactly doing what you're doing. Just pick up the phone, which they eventually did. And now, you know, they're collaborating on this. I'm not aware of what's the outcome of it, but, you know, sometimes this is what we also bring to the table to make others aware of what they're doing, because everybody, and I mean, Brussels is a bubble, but not only Brussels. So, you know, Berlin works on their things, Paris works on their things. And then you have the industries in those markets that sometimes think they're doing a unique thing, or, you know, disconnected to the others. And then, you know, you have to bring them together. And we're basically operating as a platform between the industry, the supervisory authorities at European, but also member states level and on the European level, and try to help the harmonization to take place, in this case, literally, because often, and I think everybody's aware of that, the biggest issue in the blockchain space and in the crypto asset space is still education and understanding. And there's so much expertise in Europe that often is not used enough or promoted enough even. And we try to do that. I think we're relatively successful with that. I mean, we make workshops for European policymakers and commission people to really understand what's going on, but also what they should be aware of when they're regulating these things. And I think this is key for the future to make innovation happen at the European continent. And that's what we're trying to do. And we will be trying even harder in the future, because as of September, things get serious. You know, the European bodies will promote their new proposal on crypto assets, digital finance, and all the horizontal applications like smart contracts and so on. And then, you know, this thing gets a big deal.
Yeah, yeah. Well, I know that me personally, Robert, you and I, and Anson, you and I have worked on many, many projects cross-border, trying to instill some of that harmonization. And we find that often we're the man in the middle that is informing policymakers where they might have a gap in their knowledge. But talking about that influencing the policymaker, Tyler, what you do is slightly different. So previously you worked in the advocacy space on initiatives like the Token Taxonomy Act, and then you've co-founded HODLPAC earlier this year, which again is a little bit different. So can you explain for our viewers, especially those who might not be familiar with the American political system, what the purpose of a PAC, or political action committee, is, and what are HODLPAC's mission and initiatives?
Absolutely. And first of all, thanks for having me. I'm happy to join you guys today. And let me say that I'm happy you said HODLPAC. Usually I get HODLPAC. There's some, you know, it's the great tomato debate of our industry. So it looks like we're on the same team on that one. Yeah, so to answer your question, so political action committees are you know, U.S. organizations that raise money privately to influence elections or promote legislation, and they're regulated by the U.S.'s Federal Election Commission, the FEC. There's two different kinds: regular PACs and super PACs. That's probably not too important for our purposes today. So suffice to say that, you know, PACs raise money to support you know, politicians for a certain cause. HODLPAC's cause, as you may be able to guess, is you know, dedicated to supporting candidates for the United States Congress in the both House and the Senate, you know, whose policies would promote the development of crypto in the you know, the crypto economy more generally in the United States. And you know, we have several other advocacy organizations in Washington D.C. and in states across the country. Like the Blockchain Association, Coin Center, you know, the Chamber of Digital Commerce, you know, they all work on behalf of the industry, and they all do a fantastic job in promoting our interests, you know, in Congress and in the executive branch, in the judiciary, states, you know, across the board in the United States. But you know, what we thought was missing was a grassroots organization. One that would, you know, I don't know if that term travels across the Atlantic, but the grassroots kind of means, you know, support from the bottom up, you know, engaging the people. And there was also no, you know, permanent fundraising operation. So those are the two kind of gaps that we wanted to fill with HODLPAC. And we thought they would, you know, doing that would go a long way in supporting, crypto-related legislation, like the Token Taxonomy Act, which, might not be the perfect solution, but, it's definitely a step in the right direction. That would go a long way in supporting those things in Congress and getting our representatives to pay attention. So lastly, HODLPAC is we could have set ourselves up as a traditional PAC, which means we would just collect money and kind of make the decisions on behalf of our donors, but that we didn't think that would be very aligned with the ethos of the industry. So we set ourselves up as a community governed PAC. And we definitely, we want to kind of leverage the tools of our industry, specifically those in the DAO space, to decentralize power, build a community, leverage the wisdom of the crowd, all the great things that we love about crypto in this organization. So we're not a full-fledged DAO yet. We're set up kind of as like a Web 2.0 version of a DAO right now, but we're experimenting with things with like quadratic voting and other types of decentralized decision making, and hopefully soon we're going to be able to move into more of the Web 3.0 version of that with ERC20 based community tokens as governance. So that's HODLPAC. We're a community governed PAC to support crypto in the U.S. Congress using the tools of the industry to do so.
I love it. Well, it's much easier to incept influence if you're starting with somebody that agrees with you to some degree in the first place. So pretty exciting stuff. So we've got about 5 minutes left, and one of the key things that we're hearing a lot from policymakers and kind of the next wave, I think, of policy development is really around stablecoins or so-called corporate coins and CBDCs, which are kind of lumped together and conflated often in discussions, probably erroneously, but major reports have been published by central banks like the Bank of England and FATF week before. And as Robert and Delphine said, we're awaiting reports from the BIS and the FSB. So I wanted to quickly get each of your views on upcoming policy around these types of tokens. Delphine, let's start with you. Libra Foundation is established in Switzerland, and Libra seems to have awakened many of the governments around the world to the opportunities of tokens and digital assets. Do you think these so-called corporate coins like Libra could be the driver for mainstream adoption?
So yeah, I do think some Libra initiative has a lot of positive effects, but also negative. Positive in the sense that you really raise awareness globally on virtual assets and their potential for disruption. And that I find it really, really cool. But it also has a negative effect, like it has slowed down a lot the processes with FINMA, for instance, to be regulated in Switzerland, because they have been focused a lot on how they are going to potentially regulate this kind of initiative, looking at which kind of regulation will apply to it. So I think this kind of corporate coin can have the potential for mass adoption, but only if they do in fact remain stable, are very easy to use, like user-friendly. It should be super easy to use that, and stay under sponsorship of very large firms. But I also see like a lot of issue with that. If we talk about the corporate coins, not about like CBDC and all that stuff, the biggest issue would be around data privacy and data control. Like if you look at Facebook, they control WhatsApp, Instagram, they already have access to so many data that as a user, I don't think I would ever touch Libra because I would be too scared that they have too much information on me. But I might not be, some other people might think otherwise. So I do think they will drive mass adoption at one point.
Okay. Robert, what do you think the policy and regulatory implications are for a global currency or a so-called global currency like Libra?
I think that's a very good question, especially in light of the FSB consultation that is still running till tomorrow, if I'm not mistaken. I think the key thing about stablecoins is that you have to agree on how you regulate them. And I think the approach to say there's global stablecoins and there's non-global stablecoins is to be blunt, very ridiculous, because by nature, every stablecoin is global, potentially. And the FSB even acknowledges that. So, and I think by now it's really clear that this definition makes no sense. And the Commission, for example, and also we're very aligned on that. We take the approach of systemically relevant stablecoins, and then have a risk-based approach on how they should be regulated. You know, it's a more principled approach, a bit like you would look into other financial actors, because it's about actually really like what harm can it do to users and what benefits can it bring to the users. And it's not about if it's global or regional. I think, and that's something that got started, and the whole Libra debate definitely did one thing, is that it speeded up the process of thinking about correct taxonomy and what the hell we're actually talking about, because everybody's throwing around those terms of virtual asset, crypto assets, and utility tokens and all this stuff, and then you have two people from two regulators, sometimes even in the same jurisdiction, and they don't understand the other one. And that's a big issue. And honestly, that's the first thing that we need to flag and that we need to address. And I think then something like Libra loses a lot of its scare, because you can tell this is blue, this is red, and this is green. And then everybody knows, you know, it's like, I think the issue really, and that's my last thing I want to say, is everything in the space goes so fast that it overwhelms regulators. And I think all of us, or all our duty, is to help them understand and cope with it. Because if we don't do that, then they will go in a defensive mode and just stop innovation, and it's very bad. And nobody wants that. So I think it's all on us to make them understand and make them believe in the potential of it.
Okay, so I have 1 minute left. I'm going to split that time between Tyler and Anson. Both of you, I wanted to ask a little bit more about CBDCs. So first, Tyler, we've seen the digital dollar initiative emerge from the US, perhaps on the back of Libra discussions. What do you think the implications for the digital dollar could be for crypto more broadly if this gains momentum?
Sure, and I'll be quick, Anson, so you can get in here too. I think Libra was a big motivator. Also, you know, the response to COVID-19, where, you know, money was being made available to individuals and businesses, and like they needed to get it out quickly and weren't able to put kind of the old financial systems, you know, restraints on full display. So I think those are two motivating factors. I think there's also there's a few different versions of digital dollars that are being discussed. And, you know, I think the crypto community should be hoping for, you know, the tokenized, you know, programmable, you know, decentralized option that's being introduced in the US, into the debate into the US. I think that's the best thing that we can look out for in an increasingly digital economy. We need a digital cash to be able to, you know,
Agree. Anson, CBDCs, are they going to help or hinder the roadmap for crypto, for digitally native crypto?
So this is a half glass full or empty thing, because it depends on the pros and cons on which side you see it. So when I talk to my members, basically we can keep on just being in our own shell in their own crypto space, but many of the exchanges want new liquidity, want to scale. If you want the old money coming into the system, you need to comply with some of the regulations. Okay, so by using CBDCs, if eventually it does link to our ecosystem, there will be a flood of new liquidity for everyone. But in terms of which one to use, Asia has a very different sort of culture. So for example, China or even parts of Asia, privacy is not a thing. Most really don't care. So you can see that WeChat, for 1.3 billion people actually use it, right? So even for Singapore's context, we're in both. Temasek has invested in Libra, as well as Temasek, the Sovereign Wealth Fund, and also MAS is saying they'll support the Chinese digital currency. So it depends. We have to see the development on how it goes, but definitely, to me, overall, it's positive for the whole ecosystem.
Fabulous. Guys, I'm so sorry to cut us short. I always enjoy these conversations, but we're out of time. So thank you all so much for joining us today. And hopefully we can pick up this discussion maybe in another channel sometime soon. Thanks very much.
Great. Thank you
you.
so much.
Thank
Thank
you
you.
so
much.
much.
Bye.
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 Great. Okay. So moving on. Our next panel focuses on bridging crypto and traditional finance with panelists who span the breadth of the token lifecycle from platform to issuance to retail utility and institutional investment. Please welcome our next panel moderator, Binance's Ajit Tripathi, who will host our next panel. Enjoy.
Hello and welcome to this Binance Off the Charts virtual conference. Today, we are going to be talking about bridging crypto and traditional finance. My name is Ajit Tripathi, and I'm an executive director in business development at Binance. And a lot of my work focuses on our banking and fiat partnerships with traditional finance. So I tend to be a little bit qualified to discuss this topic. With me, I have Charles Hoskinson, the famous founder of Cardano and CEO of IOHK. We have Rich Teo, who is the CEO of Paxos. And we have Hani Rashwan, CEO of 21 Shares AG. Please say hello to our audience, Charles, Rich, and Hani.
Thank you for having us on.
Hi, everyone. Thank you. It's a real pleasure to have you today. So, we have only 20 minutes for a topic on which we could probably spend all of the day, but we're not going to do that. I have a question for all of you first, right? So on Twitter, and I shouldn't say this, but I do spend a fair amount of time on Twitter. I've been hearing about this institutional wall of money that's going to come into crypto. And I've been hearing about it for 2 years. When is it coming?
Well, that's an interesting question. The big issue is that there's a lot of infrastructure that has to be built around the crypto markets to enable institutional money to safely enter the space. And also there has to be a matching set of regulatory standards that come as well. So everything from what is a token? Is it a security? Is it a commodity? To how do you get custodians? How do you get proper banking relationships? To will the SEC ever approve an ETF? These types of things. And over time, we've seen a tremendous amount of maturity thanks to companies like Paxos and Circle and Coinbase and others in the US markets, and great companies in the European markets. And of course, great companies like Binance in the Asian markets and globally. But it just takes time. I mean, it took a good 50 years for us to build the US markets. And we've been building the crypto markets in less than 5 years, and they're growing much faster than any of those markets grew.
Right, absolutely. Rich?
Yeah, I was going to say that, I agree with that. I think, we're still quite a lot of the framework left to be built. And a lot of it is around what regulation says and what people can do and what kind of companies can enter what space. But I think the other piece of it as well is that existing financial institutions need to work with companies within the space. And so there's also kind of an upgrade within the space where standards have to be increased, where people have to seek certain regulatory standards, where people have to seek certain KYC AML standards as well, and all that's part of that combination, right? So it's how regulators look at the space from the outside, but how our industry is in a continuous upgrade as well. And we kind of see many good examples of that, and companies doing a lot more in the space. Obviously, Binance being one of them, doing a lot more in the space to basically get up to that standard where traditional financial institutions would be a lot more comfortable working with crypto-related companies.
So I think I have an even more positive take, given our position. We're the world's largest issuer of crypto exchange traded products. We are designed to be a traditional bridge for institutional and retail investors into the crypto world. And I can tell you two things that should be noted here. One is that we meet with institutional investors on a daily basis. These meetings would be hard to get if they were not interested. They would be a lot less engaging if they were not interested. And just today and tomorrow, I'm meeting with pension funds and with insurance companies, folks that would be incredibly helpful in being added to the crypto ecosystem, but they are doing it quietly. They're doing the due diligence quietly. and they're excited and prepared to enter through our products and through others as well. The other thing that I think should be mentioned, and this is really, really important, is that some of the institutional money has already come into the space, albeit indirectly. We've seen some of the largest endowment funds from the United States invest indirectly in crypto through venture capital funds, for example. And we've seen some pension funds and some insurance company, although smaller ones also in the United States, that have invested directly as well. So I think those two are positive directions here.
And
right,
just
absolutely.
To follow that, Ajit, real quickly, there's a question, the concept of liquidity and size that you have to think about too. These institutional investors, some of them control trillions of dollars. That's larger than the totality of the entire cryptocurrency market. So you can't just expect the floodgates to open and hundreds of billions of dollars to enter in overnight. Usually it's done indirectly or in small amounts. And then over time, confidence builds up. Some of them also have restrictions on the class of assets they can invest in because of their LPs or other such things. So it's just it's a process, and it's really moving along much better than it was even in 2017, for example.
So what's fascinating is that in 2009 and 2010, the idea was to disrupt traditional banking and disrupt traditional financial markets, and we started with this whole Occupy Wall Street notion. And in all these, in 10 years, we've come a long way towards essentially, where we are starting to talk about pension funds starting to invest in digital assets and so on. So now, are we still realizing some of the benefits of crypto technology and blockchain, which were really about disintermediation, decentralization, and essentially giving access to retail customers, to grandma, to a whole new class of assets and opportunities to create a return? Because if this is just about banks and large investors, then what's the real value of the technology we are building? I think that's a question that needs to be asked.
Right. Well, we have extensive infrastructure in Africa. We have an office in Ethiopia. We regularly travel South Africa, Rwanda, and other places, and we bid on large-scale projects with hundreds of thousands of farmers to millions of people. We're also doing payment systems and identity management, credential management in the country of Georgia. So, this idea of can we give economic identity and banking services and of financial access and inclusion to the developing world or the people who don't have it, a fair marketplace, it's something we care a lot about. And this technology is unique in that not only can it provide that, it also can provide the property ledger, it can provide the voting system, the identity management system, and basically anything you want. These assets can be securities if you want them to be, and so forth. So you can build a stock market. It's just these things do take a lot of time because there are legal infrastructural issues, economic issues that you have to resolve, and you measure progress in years to decades. But as we do this, what it means is you're bridging 3 billion people who don't have access to the global markets with the 4 billion who do. So it gets it very excited for institutional investors and the big guys in Wall Street, because they say, okay, well, those 3 billion people have trillions of dollars of locked up wealth. And if we can now onboard them into a system, we can create all kinds of new financial products. We can create all kinds of new investments. So there's a marriage that is mutually beneficial on both sides. And it accommodates exactly what the philosophy is, which is disintermediation and pushing power to the edges. But it also allows us to all win together.
Absolutely.
There's a direct link between the two. I mean, I'm in the crypto space because as an Egyptian, I was really drawn to not being reliant on your own central bank and the policies and the politics behind it. I really enjoyed seeing the amount of female empowerment when one can control their own finances in a specific way. I don't think any of this is precluded by additional stronger links to institutional investors. On the contrary, I think that once we allow and once we enable institutional investors to get into this space more easily, there will be more resources and more caliber and more commitment in the space that will enable a lot of these other applications to be built and for the network to be stronger and more supported, etc. It's one of those areas where gold is fantastic to use as a hedge, and you have the power of both buying gold bars and storing it, which might be the best way of doing it, as well as an institutional investor buying a gold ETF. So nothing there is limiting to the other.
Right. So I think we generally agree with the concept that if you can get products directly to the consumer, you can tokenize a whole series of assets, And that's going to be very good for financial inclusion. It's going to lower costs. It's going to bring a lot of people into very interesting, very exciting products. Unfortunately, we've been, Paxos has been around for a long time, since, I guess 2011, 12. And what we saw from the early days, unfortunately, was that there were a whole host of companies claiming to be tokenized versions of a lot of things that just simply didn't exist. Right. So, gold's a great example, because there are a lot of, historically, a lot of tokenized gold products that didn't turn out to have much gold, tokenized dollars, they didn't turn out to have much dollars, and so on and so forth. And so, one of the things that I think is going to be different when you want to directly approach the consumer is that you're going to give people the confidence that whatever this token represents actually exists. Right. So, one of the things that we worked on over the last couple of years was to basically be a good legal holder of these assets, where we can verify that they actually exist. So we have a gold product called Pax Gold, where we verify, and we get the New York Department of Financial Services to actually regulate it and ensure that it exists. What quantities, the physical goals, linking it to specific gold bar and specific gold vaults. We do a similar thing for dollars. Like the Binance dollar, where we verify and we confirm that it's fully backed by $1. So I think as we push these products out to the consumer for daily use and to get more acceptance, just having that extra layer behind it is going to be great for tokenizing, anything, including gold and cash, like you mentioned.
Yes, I come from traditional financial markets. I worked for 4 of the largest investment banks in the world. And one thing I recognize is that traditional financial infrastructure is very heavily regulated. And the way it's become regulated is through a series of accidents, right? Certain things went wrong in traditional markets, in the stock market, and there was a regulation that was created, or a new rule that was created to address that issue. So now, over a period of 50, 60, 70 years, we've ended up with this large mass of rules like Dodd-Frank and so on that govern the conduct and behavior of market infrastructure, market participants. Now, crypto offers a lot of opportunities to simplify this, right? So, I mean, NASDAQ has been looking at it. A number of market participants have gone to regulators and proposed ways of simplifying market infrastructure. Do you really see some of the regulation changing or improving or evolving as a result of the new technology that's available in crypto assets?
Regulation is both an economic, cultural, and political animal. So there has to be financial incentive for regulation to move in a particular way. And what ends up happening is, if you get a lot of large financial institutions, you tend to get regulation that only large financial institutions are comfortably navigating. And small people tend to disappear. And you see a lot of things like BitLicense and so forth crop up as a competitive hedge, basically. And it's not just in our industry. You also see the tech giants like Google and Facebook and Microsoft always trying to find a way to sneak their way into the financial world, and then they kind of get batted away. And these are huge entities, right? So, but at the end of the day, you have to ask, if you can build a different regulatory standard, let's say in Ethiopia or Egypt or some country, and then suddenly you have 100 million new customers, and those customers have trillions of dollars of collective wealth, and that system is significantly superior and more automated than the systems in the Western world, then that first, they're going to be more competitive, make more money. Second, what will happen is that traditional financial entities will start demanding regulatory changes because they're now facing competition that's more agile than them, that they can't control through their marketplaces. We saw the same thing happen with, draw an analogy with the internet and newspapers. If you ask the newspapers to make regulations about the flow of information,
you're going to have a lot of paper.
Yeah, exactly. The internet would be like totally shut down, but they didn't have that choice. And so they basically had to go online and compete by the internet's rules instead of their own rules. And I think the same thing will inevitably happen in the Western financial world.
Right. So you're saying we have to build something better and show it. Right.
In some of the examples that Charles brought up here in Africa, I think mobile money is a great example of this, right? Because it was in a lot of places not very well regulated, and that came over time as more and more people started using it, and as it became inevitable. I think we're going to start seeing some of these new things, and some of us are already involved with speaking with certain countries, speaking with certain regulators on creating the best framework moving forward.
I do think, though, that back to what you said at the start, which was that a lot of rules come from issues that happen in the space and frauds or whatnot that have occurred before. And you kind of see the evolution. People get nervous about consumers losing money. Regulation comes in, and in the end, there has to be a balance. And what we're seeing with great examples of where people can spearhead regulatory change and give confidence that this service is good, really is by providing a service that makes a lot of sense, being actually a very responsible entity, and going back to and making sure that the people are happy with the service. At the end of the day, like, we can innovate as much as we want, but if people aren't really happy with the service, and there are issues with the service, then we're going to get regulated significantly. So I think it's up to people in the industry who are innovating to make sure that they're doing the right things. And when I say the right things, I think there are a couple of regulatory principles that kind of transcend time and innovation, and that's things along the lines of making sure you don't lose your customers' assets, making sure that you hold capital against potential losses. And I think that if a combination of these core principles would happen in innovative companies, I think regulation could look a lot more favorable.
Absolutely. So, in your work around the world with various governments and customers from different backgrounds, what do you see are the biggest opportunities for financial institutions to innovate using this technology, right? So I'm not talking about essentially the decentralized finance space in this case. I'm talking about the opportunity for institutions to innovate using crypto assets and crypto asset technologies. Where do you see the biggest opportunities are for institutions driven by the profit motive to create new products and services?
Well, generally, anywhere you have liquidity asymmetries, these are huge opportunities, whether it be with businesses where they just don't have markets that allow you to securitize the company easily, or you see land where there's just a lot of locked up value there. And everybody acknowledges that the value exists, but there's just no mechanism to get money in and out. So securitization of things, so you don't have to reinvent the wheel. You can just take ideas and concepts that have existed for 50 plus years on Wall Street and apply those principles in places like Ethiopia or Rwanda or so forth. Now, the advantage is that you can do this at a much smaller scale. So instead of saying, okay, we can only securitize something at $100 million, $50 million range, now we can do it all the way down to maybe $50,000 or $100,000. And the other thing is, because you can now automate tons of things. You can automate regulation, you can automate dividend payments, you can just do all kinds of things with security tokens you really can't do in the traditional financial world. And you can demand a much higher level of transparency with these systems. You can also bridge the trust and credibility gap, and in many cases actually even somewhat create some resistance to local governments that might not be as stable as they need to be to earn that trust and credibility. So it's probably a combination of evolution and revolution. The revolution comes from the fact that we're actually onboarding millions of people that haven't been in the system. But the evolution is giving them access to concepts and ideas that have existed for a long time, but localizing those to scale down to much smaller per person amounts, but collectively still be in the trillions.
With regards to what you specifically said about financial institutions, I think right now what we're seeing with financial institutions, traditional financial institutions across the world, is really a capital crunch. And when we see the need for capital, we see two areas where blockchain crypto tokenizations will work really well. The two general areas. I think I guess one product in one area, but I think we're seeing interest, and I guess many people are seeing interest in stablecoins being used in financial institutions. That's going to reduce a lot of cost, improve speed, improve the infrastructure, a lot of transparency and all that kind of stuff. So I think a lot of that makes sense for traditional financial institutions. But with that as well, I think when you think about investment banks, for example, the amount of capital that they could save by doing delivery versus payment on their trades. So it frees up significant amount of capital. Assets move with great transparency. Clearing, obviously would be reduced. Settlement times would be instantaneous. So I do think the incentive for financial institutions to actually look at that area is very high, right? Because it frees up a lot of capital from the new regulations coming in and the increased capital crunch that banks and investment banks feel right now.
Yeah.
I think there's been iterations as well on the infrastructural side. Our products are mostly listed on the Swiss and German and a few smaller stock exchanges, and we deal with very traditional financial service providers. We managed, for example, to get our regulators to accept stablecoins as a full underlying asset that can have an entire product built around it if we want to. But what we've ended up using.
Hey, Josh.
And we're back. Okay. Hey, everyone. So we're running slightly delayed. Our apologies. So we had to cut that video a little bit short, but have no fear. You can still catch the rest of the panel online. So thanks to Ajit, Rich, Charles, and Hanny for that panel. You will be able to catch the rest of that a little bit later on.
Brilliant. Stay with us for our upcoming in-depth discussions on Web3, DeFi, proof of stake, and blockchain analytics.
Yeah, and we also have 3 lucky draw NFT segments randomly spaced throughout the program just to keep you on your toes. So stay tuned for a chance to win 100 BNB or a very funky limited edition Binance jersey.
Cool. Our next panel on the global stage, moderated by Camilla Russo from The Defiant, will be joined by Joe Lubin from Consensus, Rune Christensen from MakerDAO, Jamie Burke from Outlier Ventures to discuss the rise of decentralization. Then our next panel will be hosted by Charlie Shrem, crypto OG and the host of Untold Stories podcast. And he'll be joined by Carlene Chem from CoinMarketCap, Vincent New from DApp Review, and Tom Lee from Friendstrat Global Advisors, to discuss bringing blockchain analytics to the masses.
Awesome. And on the local stage, we're discussing proof of stake, and we're very excited to welcome Bobby Ong from CoinGecko, Igor Runitz from BitRiver, John Devados from Neo, and we are following that with a panel in Espanol discussing NFTs and DeFi with John Izaguirre from Ontology, Pablo Candela Andrade from AV, and Josep Risoc from EOS.
Great. But first, we'd like to share a little bit about our Binance story and our journey over the last 3 years.
Binance started as a simple crypto-to-crypto exchange. From the start, we wanted to do things differently by providing robust customer service, acting on user feedback, and continuously improving our offerings. Word quickly spread. Within 5 months, we were the most widely used crypto exchange in the world. From there, we invested our success into growing the ecosystem and making it more collaborative and inclusive by creating platforms to identify and empower other innovative crypto and blockchain projects. These were some of the first steps we took towards increasing the freedom of money for people around the world, an initiative we're still just getting started on. As we neared our first anniversary, we launched our first partner fiat to crypto exchange, bringing digital currency to an underserved market and bridging the worlds of cash and crypto. Weeks later, we launched the first blockchain-powered nonprofit to increase transparency, efficiency, and accountability in charitable giving, as well as 2 free learning centers dedicated to expanding crypto and blockchain knowledge. In 2019, we continued our ecosystem focus, launching the community-driven Binance Chain blockchain and decentralized services, delivering new levels of freedom to our users. Meanwhile, Binance Coin reached number 6 by market cap, one of the highest ever reached by a utility token. And we introduced the Venus project to develop localized stablecoins worldwide, in parallel with a host of fiat initiatives to reduce the barriers of entry to crypto for all users. Along the way, we added new services and features to the Binance Exchange, like margin and futures trading, and savings and staking programs, delivering key requested features to our users. 3 years in, and one thing is clear. At Binance, we're committed to advancing the crypto cause, growing together with our community, and powering the next generation of innovators with open platform initiatives designed to build key crypto infrastructure. We aim to support all popular currencies by the end of the year, providing even more ways for people to access crypto in order to increase the freedom of money for people around the world. So thank you for helping make our vision possible. We can't wait to show you what's next. Let's take crypto off the charts together.
All right, welcome everyone. We are at the panel that's focusing on today's cutting edge Web3 and DeFi solutions with some amazing panelists here. We have Joe Lubin, he's the founder of Consensus, Rune Christensen, the founder of MakerDAO, and Jamie Burke, the founder of Outlier Ventures. Thank you so much for being here in this panel and sharing your interesting thoughts. And so, okay, so we're talking about what this new web will look like or should look like, but what about what's actually happening right now? And what I see is that decentralized finance has really taken off. You know, it recently, the assets locked in these platforms recently crossed 2 billion. Tokens are surging. There's different estimates that say around 100,000 to 200,000 users are in this ecosystem. So there's huge growth by almost any metric. And it looks like this is the area that's making the biggest strides towards this Web3 new paradigm. Want to ask whether you agree with that statement? I mean, is like the financial use case taking the lead? And you know, like what in DeFi do you see is you know, most exciting to you right now? So maybe Rune can start, since you know he's the founder of DAI, which is kind of the backbone of this ecosystem.
Sure. So I definitely think that I mean, I agree that DeFi is really what's taking off to some extent of Web3, right? And it's the beginning of seeing all of these like all of this potential, all of this interplay of the new technologies actually make a real difference and be used by people at scale. And I think the reason why it is DeFi that's happening first of the Web3 vision, even though, you know, in the early days of Ethereum, for instance, it certainly was not given at all that it would be finance or be the big thing. It was really like, you know, there's so many different paths this could take. I think in hindsight, the reason is that finance is just a low-hanging fruit for Web3 to really disrupt, because if you look at how legacy finance, or, you know, the legacy financial system is structured, it's just so based on this model of restricting access, you know, of controlling identity, controlling access, controlling connection, and so on, right? And you have situations where there are tons of people that, you know, don't have access to the US dollar, for instance, and then if they can get that through DeFi, through DAI, for instance, that just becomes an immensely popular product. Just something as simple as that, having access to the US dollar. Or maybe even more powerfully, what we're seeing currently really, you know, what has exploded in the last year or so is this idea of being able to get returns, right? So actually being able to invest without any barriers to entry. So even if you're based in, you know, countries in South America or Africa or Southeast Asia or something like that, which is something that we in Maker always been focused a lot on, that there's a lot of people that are basically completely cut off from the global financial system in some places. And the fact that you can then give them that access through their mobile phone, that actually is it's very powerful. And it also just, because of that value, it has shown itself to become, I mean, at least the beginnings of popularity. But all in all, I still think it's important to recognize that DeFi actually still is. I mean, it's just in the very, very early days. Sure. And one of my favorite quotes that I can't remember who made it, but it's that the total users of DeFi right now is still pretty much equivalent to that of an indie computer game. So it's not really like a global thing just yet, right? It's actually still a pretty small ecosystem. It just has immense value because it's finance. It's not, you know, computer games, right? It's actually the most powerful type of system that exists, right? So even with this modest user base that exists right now, the value is still just so immense. And the next step is going to be, I think, like the connection into the real world, when we actually start to see things like tokenization of real world assets. that's what in Maker we are really focused on. Is like that's the next big step. That's when things really get real. And also just like better user experience that can bring it out properly to regular people at a greater scale.
Yeah, it was kind of the low-hanging fruit because the current system just works so poorly, I guess, and is bringing incredible value even at this very early stage. Joe, do you want to add on to what Rune said? Do you think DeFi is actually what's bringing Web3 forward?
Yeah, absolutely. At this point, so I think it's fair to say that DeFi is low-hanging fruit at this point, but it's only low-hanging fruit because of a set of enablements that have happened over the years. And so we can look all the way back 10 years, essentially. So the first use case was cryptocurrency, and that was low-hanging fruit for a few people and really valuable for certain people around the world, including at least one person on this particular panel, the moderator. I know that cryptocurrencies had effect in your life in a certain political context. And as we developed more and more innovation, so 5 years into it, we have a platform developed that enables smart contracts, guaranteed execution, essentially. And a whole lot of activity happened around that, a lot of experimental activity. People were creating their own coins. People were creating their decentralized organizations. We got out a little ahead of ourselves, I think, because we didn't have the prudent thinking and structures in place for potentially good governance. And when things like ERC-20 standards and other fungible token standards and non-fungible token standards developed, that basically gave us a shared language on which we could build the next evolution. So we started issuing tokens for different projects. We started issuing tokens knowing that exchanges would recognize them, knowing that wallets would recognize them. Fast forward to building different governance systems, and essentially we've gotten to a point where things like price stable tokens, DAI and others have enabled yield to come into the picture. Yield has enabled more decentralized financial protocols. And so it's a pretty logical progression, I think. And this stage, decentralized financial protocols, where we've democratized, or early stages of democratizing finance, taking the power out of the hands of the financial priests, access to the financial gods of money and interest and equities and bond issuance, and giving control of the full life cycle of a digital asset to anybody who wants to learn enough to take control and to make good use of that. That's an incredibly empowering situation that we find ourselves in, and it's going to be enabling of the next set of innovations. So I think we'll see the DeFi ecosystem just expand enormously quickly. We'll see things that we couldn't contemplate before in traditional finance. Flash loans are a simple example, but one can imagine bots that just scour the decentralized universe, running around securitizing things. So it will be a fascinating world to imagine, and the foundation. It really has to be that decentralized finance plumbing, and it's going to draw in so many new business models. We're seeing that already, and it's going to bring in a lot of legacy businesses to reimagine how they offer their their wares to their clients.
I love this kind of idea of having completely crazy use cases emerge from this, like bots securitizing stuff around the world. And I also kind of like this progression of how different financial use cases on Ethereum have emerged from cryptocurrencies to fundraising to stable coins to now yield or lending out those stable coins to get yield. Jamie, what do you think, just to lead off from what Joe said, what do you think is the next logical progression in DeFi from what's happened so far?
Yes, I mean, again, I'd agree that a lot of it feels like a natural progression. So if you speak to a VC, for example, who's not of Web3, it's just blockchain might be one thing that they'd look at. They'll generally think it's all fintech. So this distinction of DeFi to them doesn't really make that much sense. They regard it entirely as fintech. And actually, if you look at what we've witnessed or are witnessing, is this bottom-up formation of an alternative financial system that's native to the internet. So, if you look at how capital markets have formed before, modern capital markets sequentially probably going to follow the same path. As Joe said, there'll be new and different things that emerge, but there'll also be a lot of similar things that are just replicated by smart contracts or anything else. And so I guess, calling it DeFi now is making the distinction that some of that innovation is being productized in a way that could be understood as financial services and potentially used in the same way. I think it's a natural consequence that you start at high value transactions, high value assets, and then over time you might apply the same infrastructure. If you think about public key infrastructure and all these innovations that are currently used to secure high value assets, over time that same infrastructure could be used to secure intangibles or low value assets like your data, your personal data, which is very difficult to even price right now. I think if you look at how the industry is evolving, and again, to kind of riff a little bit off what Joe was saying about the level of autonomy that might begin to exist in these systems, it's one of the reasons why we invested in a project called Fetch. They're really AI, machine learning people. And I think once you start to combine this kind of composable AI Lego with money Lego, I think it gets really interesting. But if we look at today, the startups that we're seeing go through or apply for Accelerator, a lot of them are focused on things like data. So of course, with the success of Chainlink and Oracle's, this focus on the data that comes into the system from the real world, the quality of that data, because the system can only be as good as the data that's being fed into it. So we've got projects like Dear Data, for example, that are focused on bringing a higher quality of data that is like compliant, whereby institutional product could be built, like indices, for example, that can begin to attract more institutional money in. And I think if you look at some of the products, whilst we're starting to see improvements in UX and usability, things like Dharma and what have you, they still don't give a full picture on the risk that's inherent into the system, whether that's smart contract dependencies, economic relationships between multiple protocols. So there is a huge amount of information asymmetry. And therefore, if we look at this as a speculative system, what that means is you're going to have people coming in, and you can look at what's happening with TikTok now and the whole Dogecoin thing. There's definitely going to be a new wave of retail investor that's coming in and has no chance at all of understanding the complexities of the system. The products that they're using will only kind of be relevant for one protocol when you might have several performing specialist functions. So I think we're starting to see a lot of different startups looking to try to address, reduce these asymmetries at a product level, but then also from a kind of security perspective as well. So I think that usability of
money Lego is a nice concept, but how that actually translates into, you know, products that anybody could use, a retail user could use, I think was still some way off.
Right.
So I think Jamie's point about autonomy can't be overemphasized. I feel like we are entering a new economic age. Often I call it the age of automated and objective trust, but you could also think of it as the age of automated autonomy. And so we, in our systems, are building digitization, we're building standardization so we can all work together more fluidly. More recently, we're building tokenization so we can tokenize all the things and bring digitization and standardization to all the things. Automation is all part of that. And the really interesting element, the element that is going to be the competitive advantage for entities that jump into the Web3 technology and ecosystem earlier is the fact that there are autonomous elements out there that run by themselves, that work by themselves, that make hopefully the best choices, and that you can run your own startup, your own entity, and focus on your core competency, and you can outsource to these incredibly smart, capable, automated systems that can basically, so we, and Jamie has been tracking AI for a really long time. I've been tracking it for decades, and for so long we've heard about these intelligent agents that are coming around the corner, and so many people have been doing research, but we didn't really have the platform on which intelligent agents could actually have any sort of effect or their own agency. And so we now do. We can have autonomous agents, and soon we'll have autonomous intelligent agents that can do our own bidding in lots of ways. And so the corporations of the future that string together a whole bunch of these things are going to be operating 1,000 times faster and better than everybody else.
And I think just to close off on that point, because it's a really interesting one, this is why I believe user centricity is so important, because previously, if you look at machine learning, it's largely to serve a platform, and you know, we're just the training data. When you have a web that is oriented towards user sovereignty, these agents work on behalf of the user, and you can trust them to do so, and not an alternative stakeholder like a platform and its shareholders.
I'd love to get some, like, take this idea and like really make it concrete for people listening. So this idea of agents working for like self-sovereign users, like what does it exactly look like for, you know, everyday people? Like how will this become a product? Like how, yeah, like in what ways will it impact everyday?
Can be as simple as you training up an AI to understand your taste in shoes, and the AI is just constantly scouring the internet and perhaps other resources to identify styles that it thinks you might want to be aware of, and it would know your pricing preferences. It might place bids for you. You might give it parameters to enable it to act under its own agency. So very simple example. In DeFi, you can imagine something that just is fairly simple, not very intelligent, but just gets you the best yield at all moments.
Right. So I guess like the difference with Web 2 in this case would be the execution, because I think right now, like we have like some machine learning that can recommend like different movies or shoes or whatever. But I think there's like this lack of like executing for me according to like presets that I give the robot.
Yeah, so I think two pieces that enable it are one, that these bots would be realized as software on your phone, but also smart contracts on the blockchain, and they would have access to money. They would have control over the ability to spend money on your behalf. And they would be unstoppable execution machines. So if written correctly, they interact with your user interface, and nobody's going to be able to thwart them in bidding for what you ask them to bid.
Right. And I think an interesting element here is that like shoes or assets could very well be tokens, and I can be buying a fraction of like a very like exclusive piece of, I don't know, like limited edition sneaker or something like that. Like we've already seen happening. Yeah,
I think it wants further. I mean, imagine you have a hotel room and it has its own agent, and it optimizes its capacity or its yield, its pricing. So you end up with a marketplace of agents that could represent a person, a group of people, a thing, and the agents interact with one another to optimize, find price discovery. It's a kind of a form of collective intelligence, each optimizing for its owner.
No, it's a crazy new world to imagine. And just to wrap up, I think we're right about on time. We talked about all these amazing ideas for the future, but for this year, what do you guys think will be kind of the major development, either in DeFi or Web3 in general? And yeah, if you can just keep it brief, and then we can wrap up with that. Yeah, whoever wants to start.
I think that something I think we pointed to right now is this rediscovery of tokenomics and what's happening with DeFi tokens, right? Where you're seeing strategies to create this viral interest in new projects by giving out free tokens basically through some sort of like direct engagement or usage of the system. Which I think is it's a really cool use of the power of DeFi and the power of blockchain. But in my opinion, it's kind of like what the really big step that is going to come after this is we start to get this increased engagement, this understanding of the power where you can give some tokens and you can build a huge user base. Is really that what's still missing from DeFi right now in 2020 is this. It's a term that actually comes from within DeFi, right? It's the concept of economic bandwidth. So basically, sort of I would say the capital or the collateral equivalent of scaling. Basically, and this comes back to the whole concept of like the fact that the community is still pretty small, right? That it's also very self-referential, you could say, right? It's kind of, in fact, it's kind of like a little bubble, right? Where everything is sort of interacting with itself within DeFi. But what's missing and what's going to be such a huge breakthrough is when you start to be able to sort of pop this bubble, right, and break through the membrane and actually get this more seamless integration of the really cool stuff that's being built within DeFi today. And then, all the companies out there, the financial markets out there that are looking for some sort of technical innovation to improve their, their products and services and rates and so on. And once that happens, that's when you also really that's when you can get the scale, you can get the extra legitimacy into DeFi, where then, I think that once that starts to happen, that's when I think a much broader group of people will finally be interested to think, okay, when Joe Lubin is talking and Jamie, when they're talking about autonomous agents and so on, it's actually real, like it's actually going to happen because I can see this, I can see how it's starting to integrate everywhere. And I think we're right on the cusp of that actually beginning to happen.
Yeah. Joe, do you want to go for this year's development?
Sure. So I feel like DeFi is certainly going to be the next major explosion. And DeFi is an enabling element along with zero knowledge proofs for another wave of adoption that I believe will sweep a lot of enterprise into the Web3 ecosystem. And we don't need the scalability of layer 2 on top of Ethereum 1 or even Ethereum 2 in order to enable a lot of that. So Ernst & Young and Consensus have created a set of techniques, built a protocol called the Baseline Protocol that enables organizations to sync up their agreements, to sync up their business processes, and demonstrate that they are in lockstep via zero knowledge proofs on Ethereum. And so multiple counterparties can enter into agreements, business relationships, transactions, leaving all of the sensitive data on their side of the firewall in their systems of record. These can be traditional databases or blockchains or whatever, and link all those together in a global frame of reference, the Ethereum mainnet, via zero knowledge proof. So no sensitive information is leaked, and essentially organizations can do things that they couldn't really do before. Where, you know, if you get pricing for some element that you're procuring, generally that set of promises doesn't follow through. The vendor will have the vendor's agenda and the buyer will have the buyer's agenda, and there's no automated way at this point to guarantee that all these agreements proceed properly. So Baseline Protocol is bringing in currently hundreds of organizations. We've demonstrated that SAP can be linked up to Microsoft Dynamics. Microsoft Dynamics can be linked up to Google Sheets, and we've got a whole bunch more demonstrations. All of this sits on top of DeFi. So we can, using price stable tokens, we can tokenize inventory, we can tokenize invoices, we can factor invoices. So enterprise is not only going to start using public mainnet Ethereum to link up their traditional business processes, but they're going to start to experiment with DeFi to finance.
Super interesting. So
do other elements.
So both Rune and Joe talked about different ways of piercing this self-referential DeFi bubble and bringing in the outside world. Jamie, what do you think to finish up?
Yeah, so I'm actually really excited about 2020, you know, despite perhaps because of everything else that's going on in a broader kind of macroeconomic sense. So on the one hand, I think we've got this maturing Web3 stack, thanks to a lot of the good work that, you know, people on this panel have been doing over the years. And we're starting to see a lot of middleware form around it that's making it usable. When people think of adoption, they usually think of end users, consumers. Actually, the kind of first batch of people that need to be onboarded are 99% of developers. There's a lot of interesting middleware that's coming through that's making this stuff easy to use, to deploy. And then at the same time, I think we're going to have some breakthroughs in seemingly simple technology that are beginning to form standards. So the DID standard around decentralized identifiers, and effectively identity. You can have verifiable claims, you can verify things about people, organizations in a zero knowledge proof environment is a huge innovation, and at the moment is the solving for decentralized identity is something that's actually really holding back the decentralized web. But what I'm excited for is, you know, what's broadly going on in the world, which I think is going to accelerate adoption, like the demand side. You know, with everything that's going on with COVID now and how nations are responding with monetary policy and stimulus, I think this is going to increasingly drive capital into the asset class. And with the advent of DeFi and things like stable coins and ways of, you know, removing a lot of the volatility, that's going to be easier to do. I think if you look at this generational shift, it feels like there is a generation that is now native to Web3 in a way that none of us probably on this panel are. And with high levels of youth unemployment, probably a permanent shift to a digital gig economy, that people just aren't going to have jobs anymore. In combination with this explosion in gaming and virtual goods, you know, you could imagine that there is a generation that is only ever going to know digital wealth. And the fact we've now got crypto debit cards means that they will be able to spend that wealth in the real world. And then lastly, we're beginning to start to have Web3 gateways like Brave browser. You know, people are using Brave because it's a better browser, not necessarily because it's got anything to do with blockchain. It's abstracted that complexity away, but it is introducing a wider population to tokenization, to DeFi in browser. And I think, you know, that perfect storm of things, as well as this maturing stack, promises, it really feels like the beginning of something, I'd say.
Yeah, I agree. It does feel like we're in the cusp of this thing, you know, getting even bigger and more interesting with, you know, new players like Joe mentioned, enterprises, new assets like Rune mentioned, and more capital, more people coming into the ecosystem. It'll be such an interesting year to watch. And thank you all for discussing this with me. This has been a really fun and interesting conversation.
Thanks, everyone.
Thank you. Bye.
Thank you.
Hey everyone, I'm Charlie Shrem, and we're here today at the Binance conference Off the Charts. I'm so excited to be talking to Caroline Chan, who's the interim CEO and Chief Strategy Officer of CoinMarketCap, Vincent New, the CEO of the DApp Review, and the editor I was just reading actually the other day, Thomas Lee, the Managing Partner and Head of Research at Fundstrat Global Partners. Thomas Lee, you always have a lot of great things to say. First of all, thank you guys for being here today, and this is so exciting. Binance 3-year anniversary. This conference is awesome. Good morning, good evening, good afternoon. We're in like crazy times, and Thomas, you study data for, you know, not just in crypto but all across, you know, the world within a lot of different industries. You know, like transparency with data, you know, and analytics has been something in crypto that has been talked about and has gotten better and gotten really good over time. But now with like the COVID-19 world that we're in, a lot of people are saying, oh yeah, now we're seeing the mainstream media lie to us through numbers and charts and data. Do you think that's actually the case? Is that happening? And what type of comparisons, what type of things can they learn from the crypto world from us?
Wow, yeah, that's a great question, because, you know, number one, just in the last 20 years, the percentage of the world economy that's driven by information now is more than 50%. So, you know, if we think about every generation, the percentage of how the world operates and how it grows, it's increasingly just about information exchange. And so, you know, 20 years from now, I think 75% of all the growth in the world economy is going to come from just movement of information. And you're absolutely right. You know, what's been kind of strange about coronavirus, I mean, one, it's something we won't have seen in 5 lifetimes, but there's so much data being produced around it, you know, cases and deaths and hospitalizations. And you're right, there's a question of integrity that comes up, because number one, you know, policymakers would like cases to be lower, and some are kind of insisting that maybe we...
Yeah, there's agendas.
Yeah, there's agendas. And at the state level, you know, hospitalizations actually result in payments, COVID hospitalizations to hospitals. So there's an incentive for hospitals to report COVID positive because it's, you know, it's Medicaid.
Most people don't realize that. You would think the incentive is to be the other side. And so they're kind of, you know, like no standard kind of was created there. Caroline, like, you know, with CoinMarketCap, you're talking about bringing data in, all sorts of data from all different sources in real time constantly. And I was asking Thomas a similar question. Can they like learn from us what we've had to do, because our industry is always looked at, in the beginning at least, as this untransparent thing here, and now we have more transparency.
Yeah, I think so. I think one of the key things about CoinMarketCap since the start is we keep trying to make the data as easy to understand as possible, right, for the end user. So I think that's kind of the same idea here. Like if you want transparency, people must be able to understand what that data point stands for or what it really is supposed to mean. So like, for example, like with CFC, like why use the term coin market cap? Like why borrow the term market caps? Because people kind of understand the construct of what that is. And you try to put that in a way that's a lot easier for them to kind of understand like the underlying meaning or like kind of get a grasp of what it is that you're really trying to present in front of them. So I think with this whole situation, especially like COVID, obviously there are a lot of agendas. Like I think for us, keeping that kind of transparency around how this data is derived, making it easy for people to understand it, making sure it's as widely distributed as possible. Like that's got to be the way that we have to keep driving the industry forward. So I think like we're setting a standard as well for what and how easy data should be accessible for everybody who is interested in it.
Yeah, for the rest of the world, data right now, I mean, that they're seeing all this information, data, and they're like looking at charts.
Mm-hmm.
Everyone has become like a chartist. I joke, my mother-in-law is charting COVID cases, and everyone has become that. And I feel like in the early days, the lack of data turned a lot of people off, but that's gotten so much better. And now, what type of data do you think people are looking for who are not in our industry, who want to jump in? What type of data and analytics do they want to see on different blockchains to try to gauge different things?
Yeah, so I think I'll answer that and then Vincent can add on because obviously he is the one with the experience on the blockchain side. So I think just from my perspective, like what kind of data people who want to come in want to see, I think there are quite a few things. We have talked to a bunch of regulators, we have talked to a lot of institutional folks as well, in addition to obviously our users as well, so retail users. So I think the main thing is people coming in want to understand like what's like the different parts of crypto that might have seemed kind of shady to them, right? So for example, we launched this liquidity metric. So there previously, I think there's no like kind of set way of looking. Yeah, so like it's hard for people to understand like how liquid is something. So we try to use the same principles, like make it easy for people to understand using a score, using a metric to understand like how liquid is a market, and then just put a score to it so you can understand and compare all of these different markets easily. So I think like that's one thing, like in terms of transparency, making it easy to compare. In addition, I think volume obviously is like a big question as well. People have been questioning that, like Bloomberg, Wall Street Journal, all kinds of publications have previously kind of criticized the space for inflated volumes. So I remember in our roast, 7th anniversary roast, like Charlie, your comment was absolutely first at the top of that list. So like your comment was your eyebrows show more real volume, right? Than the current crypto space.
I can't believe I wrote that. That was like my tour de force that week.
That was very good. It was very good.
Yesterday, something similar happened, but yeah.
Yeah. Yeah.
Vincent.
So I think volume.
No, you perfectly segued into Vincent because I was going to ask some of the questions. So now, like, they're in the space. What do they want to see? Your DApp review is awesome, by the way. I think everyone needs to read something like that on a quarterly basis to understand what does on-chain, like now we're in this ecosystem, what does on-chain transactions, what do on-chain transactions mean? Like what's happening, who's doing what, where are they at, like tell us.
Yeah, sure. So firstly, I want to add some insight about those like data manipulation because like we have like similar issues. So basically we are analyzing the transaction data from the public chains and then we aggregate those data by smart contract, by users. And we have some like rankings by the dApp usage, by the dApp volume. And then we found that some developers, they are trying to create like fake accounts and do lots of like transactions to fake their volume, to fake their users. So to get into the top 10, top 5, so that they can get more exposure, to get more users, click their dApps. And so we actually unleashed some of the dApps. And then the other day, some of the developers reached out to me and say something like, hey, Vincent, why you unleashed us? I'm just like saying, you know what you did, bro. So it's like, then some of them they just like stop their like faking script, and so that we like list them again. So yeah, so that's interesting. We are actually making lots of efforts. We spend lots of resources on trying to provide accurate and most comprehensive data to our users. So yeah, so back to the questions. So I think we are trying to provide the most accurate data in the debt space, and for people who are interested in the debt market. So people could have a really clear picture of what's going on in the debt market, and what is the most popular debts, what is the growth driver. So just like we have just published the Q2 debt market report today. So from the report, you can see the total transaction volume of debt market in last quarter actually hit an all-time high of like 16 billion.
Wow.
So it's an increase by like 150% compared to last year Q2. So there's lots of like insight something like this to help people to really understand what's going on, who is using, so what kind of dApps people are using. There are like DeFi, games, crypto arts, and NFT, and also there are some like high risk dApps. You know, basically I'm just meaning some scam dApps or some Ponzi scheme.
Yeah.
So yeah, so we are trying to provide a more clear picture to our users about the entire dApp ecosystem.
Yesterday, I was talking to the chief strategy officer for chain analysis, and he was like, you know, before I started the company, I didn't have any money, and so I couldn't even afford to go to Bitcoin conferences. And he said in 2014, he was at a conference in London that he promised to live tweet in exchange for a free ticket. It's crazy that, you know, here we are a few years later and he's running a company, you know. And anyway, so he told me the story, and in the story, he said how I was on stage and you know, and a lot of other people, and he said he remembers everyone was talking about, yeah, Bitcoin's amazing and crypto's amazing and we're going to do this and do that. But he said there was no data on the screen. No one was showing any data. There was no data to back it up. And he basically said to himself, we're about to go through like maybe a year or two of like really just flat. And he was right. Now that here we are today, and I asked him the same question, I'm not going to tell you his answer. Tom Lee, I'd like to hear your answer first, but I want everyone's answers. Where are we now in that? You know, not like where are we now in the bull or bear market, but in terms of data, 2014 till now, are we completely in the same place? Are we double? Are we better? Are we less? Tell me.
I mean, there is no shortage now of ways to find data and measure data. And I think there have been some really novel ways for people to interpret the data these days, you know, whether it's, you know, vintage of wallets, movements. But you know, from what I've kind of learned from following financial markets, sometimes too much data is actually a bad thing as well.
Why?
Because it doesn't allow someone to find the right abstraction. You know, so I think curation is sort of born out of, you know, too much data. And I think another one of the challenges, and I think this is really where the curation comes into play, is, you know, is really the quality of the data. Because, you know, there can be a lot of aberrant signals generated. You know, like how do you treat restated data or fat fingers or misreported data? You know, do you want to, you know, how do you treat it in retrospect? So I think that there's a lot of things that if you're trying to develop signal or even correlations, it's important for someone to actually curate the data. So I know it sounds strange, but it's
not. It's not strange because you can have like someone could be up at 3 a.m. and he fat fingered a sell and by mistake or whatever, and then like someone the next day you have someone trying to do TA off of that person, but that shouldn't be part of the TA. You know what I mean? So 100% right.
Yeah, and there's also you know, the ability for people, because they're aware of how things are being abstracted and crawled and captured, to manipulate the data too. So I think, you know, we make an assumption when we look at numbers that it's a uniform or homogeneous cohort, but if there's manipulation or, you know, large players or even people with incentives that are mixed, it makes really studying the data very difficult.
Caroline, what do you think?
Yeah, I do agree with some points that Tom has made here, especially with like a lot of data. It means that you kind of need a way to present the data so that people can intuitively grasp what the data is, right? But ultimately, I think like with all the data that we have in this space, like the quality of the data is not the same, obviously, across different platforms, across different companies as well, right? So I think like to know whether or not data is of good quality, you kind of need to understand the methodology behind it, like what, like how the data is being processed, how it's being treated, how it's being kind of displayed, things like that. I think for the end user, like they can't really get into all these technical details, which is why like there needs to be kind of trust in the data that you're seeing, like who's providing this data, right? So in traditional financial markets as well, that's the reason why like things kind of consolidate over time as well. Like people go for like trusted ratings and things like that, because I think like there's a lot of it, and people just need a way to make sense of it in an easy way. And I think something that came up recently that I found really interesting from that side of the world is like there are like hedge funds now, they are looking at this Robin Track platform. So basically it's just kind of scraping Robinhood, and which has an open API, which is unusual for I think like financial platform, right? So I think that's interesting. So like people are kind of seeing more and more of that kind of data. People are building more products off of it. I think that is kind of where you kind of see the crossover as well, like more of that open data. There's a lot of that kind of data in crypto as well. So more and more, I think people are gonna have to start to understand like how do you deal with all of this different data. So I would say that we are definitely in a better place now than we were in 2014. Because we do have more of it, but it's just a matter of how do you deal with it? How do you trust it? How do you
Well, we
use
have
it?
good curated data. The three of you guys are the data, giants here. You put out, Thomas Lee, you put out curated data. Vince, same thing with you. Vince, how do you curate that data? Like, how do you take? I apologize if I call you Vince. By the way, I know your name is Vincent, and Tom, I apologize too.
No problem.
I always do that. How do you create that data? Like you're talking about on-chain transaction volume. How do you know it's not someone doing the same amount of volume between each other? And then you're putting out a report that people are reading. They're assuming that you're doing that due diligence. Do you ever feel nervous or conflicted? When you're trying to do your best.
Yeah. So believe me, it's painful. It's definitely painful.
Yeah.
Every time every time we are doing a report, we need to like double check and triple check all the data and to make sure it's as accurate as possible. So basically we saw there's too many data manipulation, and we need to integrate the data, trying to filter out all the scamming data, all the weird data, and to reflect what is the true usage of each step. So it actually took us a lot of time, a lot of like developers trying to build some algorithm and to recognize what is the real usage, what is the fake usage of those data. So yeah, just as I said, it's painful, but we have to spend more efforts to make it like more accurate. But from my point of view, I think it's still in the early stage of the data in industry and in crypto. Like we have many data providers, but I don't think we have many consumers of the data. If you think about the traditional finance industry, like there are Reuters, there are IC Capital, there are Bloomberg, there are Trade News, there are many like data providers, and there are so many like institution investors, and there are many professional investors. They bought those data, they use the data
But
to
it's
do
different
trading.
type of data, though.
Yeah, exactly. I'm just saying, like in this industry, I don't see many people who like to spend real money to buy those data. So
Yeah,
I would say it's still in a very early stage.
Could you imagine people in our industry paying $2,000 a month for a Bloomberg terminal for the crypto space? I mean, like, because I wanted to get access to the Bloomberg terminal because you have like Bloomberg terminal has some really cool data about like COVID, like open restaurant reservation data and stuff like that. I want to read that, but it's like $2,000 a month for this like extra computer. I don't, necessarily want to do that. But so you're saying the consumer isn't, they aren't I think what you're saying is that everyone wants free data in our industry. We all want it for free. We all want curated data for free. And there, you know, even the industry of paying for like newsletters and things like that, I'm surprised there is an industry around that for our space, because we're all coming out of like the file sharing world and things like that, where we're used to free stuff.
Yeah, right.
If I could sort of add something to this conversation, I've found that in the traditional financial world, as more information has become available, and then people lock onto a metric, it's turned people into momentum chasers, because they see a metric, and if they think it is associated with the price going up, they buy things where that metric is rising. So too much information is allowing people to actually make less informed decisions, because now they're relying on a metric that's rising. And you're right, if I was preying on that, I would make free information available, just like Carolyn mentioned about Robin Track, you know, that's now become the victim of how hedge funds will exploit that information. And then it makes more momentum even bigger. So it's a double-edged sword, I guess I would say. And that's where, you know, you're right, free can be dangerous as well.
Like everything, the perfect thing that we need is balance. It sounds like we're all agreeing that balance and good curated data and unmanipulated data, and that we're moving forward. And it sounds like we're all in a really good place, and you're making me all bullish and excited for the future. And so thank you guys for being here today.
Thanks for having us, Charlie.
Thank you.
Great. Thanks again to our panelists, Joe, Rune, Jamie, Camilla, and Charlie, Carlene, Vince, and Tom. Coming up, we're excited to announce the winner of the European Binance Influencer Award and the Binance Launchpad Project of the Year.
Very exciting. And do remember, we also have 3 NFT lucky draws happening throughout today's event, as well as a chance to win 100 BNB and a limited edition Binance jersey. But before we get to that, let's take another look at the Binance journey.
What does it take to connect billions of people, to transcend borders and rewrite the system to be more fair, just, and free for all? It takes a willingness to challenge old principles and create a new foundation that forever changes the way we transact and interact, because financial freedom belongs to everyone. Over the past 3 years, you've watched us grow from a cryptocurrency exchange to a comprehensive blockchain ecosystem to build today's crypto world and the crypto universe of tomorrow. We were never alone, because from day one, we've been working and growing together in support of a shared vision to increase the freedom of money for all. The freedom to earn, the freedom to hold, the freedom to spend, share, and give. No matter who you are or where you come from, it takes a community to change the world. Though we still have a long way to go, let's take these next steps together. Because together, we'll unlock the freedom to do more.
Welcome back. And thanks for joining me. Looks like I have Wade joining me today, or am I going to be joined by CZ? Let's see. It's CZ. Hi, CZ.
Hi, Tina. How are you?
I'm great. Thanks for joining me to present the first of our Binance Awards.
Yeah, so the Binance community never ceases to amaze. So this year, we're celebrating the standout people and projects that have contributed the most to our community and blockchain ecosystem. We will be announcing the Binance Award winners throughout today's event.
Awesome. So we'll be recognizing winners from the following categories: the Binance Chain Wallet of the Year Award, the Binance Angel of the Year Award, the Binance Launchpad Project of the Year, and our Philanthropist of the Year Award.
It's a tongue twister, huh?
It is a tongue twister.
So we're also very excited to announce the winner of the first ever Binance Influencer Award. And thank you to our community for nominating your favorite influencers. And in fact, all of the Influencer Award nominees and final winners were selected by our community. So Tina, let's go ahead to the first awards.
Okay, so let's kick off with the 2020 Binance Awards. Our first category, the European Region Binancer Influencer Award. The European Binance community had some exceptional nominations with nominees from multiple countries. We selected the winner based on the total number of votes from across Binance's social media polls and Google Form surveys. Keep in mind, only votes from verified Binance users were tallied, and the nominees were
I guess they deliberately spaced this out for the attention part of it, huh?
Yeah, we were gonna voice over it.
Because we're not professional moderators.
Well, I had it all ready. Okay, you're up.
All right, there you go. So the winner is Asher. So congratulations to Asher.
Congratulations,
Hello, Binance.
Asher.
Thank you for this nomination. Thanks to my community for their vote, for their support. It's very important for me. I'm very proud to put the French country forefront today, because today is the birthday of Binance, yes, but it's also a very important day in France. It's the day of the revolution. Now you know, and you can say it, Binance birthday, it's a holiday in France. Thank you, bye-bye.
Congratulations again to Asher. CZ, should we move on to our next award?
Yes, absolutely.
Great. Okay, so the next award is for the Binance Launchpad Project of the Year. Over the past year, Binance Launchpad reignited crypto and blockchain fundraising. This award recognizes some of the best performing projects. The nominees include projects launched in the past year with a positive ROI since IEO. In addition to ROI performance, we consider the project's contribution to the Binance ecosystem and the success of their campaigns within the Binance community. Of course, we excluded projects that were acquired by Binance. Let's see the nominees.
So Binance Launchpad have actually looked at a very large number of strong projects in the space. Selecting this number of strong projects has been very difficult. So the first one is Kava, Enron. Yeah, all of these projects should be very familiar to our users. Band. So Katesi, so a couple of decentralized oracles, a couple most of these projects are protocol levels. Let's see who the winner is. The winner is Kava.
Kava.
And congratulations, Brian Kerr.
Nice job to you, Kava. What did Brian have to say?
Hi, this is Brian Kerr, CEO and co-founder of Kava Labs. I am incredibly honored and humbled to receive this award as the Binance Launchpad Project of the Year on behalf of Kava and the entire Kava community and ecosystem. It's been a tremendous year for us. Hundreds of businesses have deployed nodes across the globe. We've built a cross-chain bridge to enable the very first cross-chain DeFi applications. Lending with BNB, we've worked hand in hand with the Binance Chain developers to get this done. It's been a lot of hard work, but it's very humbling and we're very honored to be recognized by Binance. So thank you.
So congratulations to Brian Kerr and Team Kava. And I want to take this little quick note to say congratulations to all the other projects as well. Getting on Launchpad itself is really difficult. Getting nominated by our community is also very difficult. So we want to congratulate everyone for participating as well.
Absolutely. So at Binance, we're really looking forward to seeing many, many more projects like Kava make a positive impact on the crypto industry. Josh, over to you.
Brilliant. Super stuff, guys. Thank you, Tina. Hi, CZ. So it's time for our product announcement. We have some very hotly anticipated news to share with you. I think some of you might have guessed what this might be. We may have name dropped it a few times, but we are today on our 3rd birthday officially launching the Binance card. So CZ, could you give us an idea of what our users can expect?
Yes, so to all of our users, thank you guys for being so patient. We actually, this is one of the very few products we actually announced a bit early. So we actually announced it back in April. And it's taking a while to get the card ready, but we wanted a really smooth experience. I wish I can demo it in real person, but it's actually quite difficult to demo without revealing my card info. We have actually 2 versions. One is a virtual card that you can use, or that you can just use. You get a virtual card number first, and then we also have a physical card where you can use in physical stores, and both work exactly the same as a traditional credit card. So I think that demo you can visualize by yourself anyway. And the best part is once you apply, you get the card, and then once you get it, you just swipe it as any regular card. And the best part is the balance. You can just see the transaction logs in your Binance account, and you see BNB or BUSD or BTC being deducted from your account. And it's just a great feeling that well, at least for me, I no longer have to worry about selling crypto, convert to fiat currencies, and then move from a bank to a card, etc. So I don't have to worry about that at all. And now I can pretty much stay fully in crypto. And so we are also very excited to announce that Europe will be the first region to get our card. And Josh, you can probably provide some more details.
Yeah, absolutely. So we're starting the rollout of this in Europe, as you said, and we're starting specifically in France and Spain. So to our French and our Spanish communities, we hope that that's some welcome news. We know that you've been asking us for a long time. So it is coming your way very shortly. If you've already signed up for the card on the landing page, well done. That means you're right at the top of the list already. So well done for getting in there early. From this week onwards, we'll be inviting you to apply and activate your card. You'll be getting an email from us shortly. So CZ, you've been playing around with this in a real live environment. How have you found your experience in testing the card?
It's so bad that it's so addictive. I've been buying so much more stuff than I normally would. So for me, it is a great experience actually. So it's very smooth, and the best part for me is even for right now, even in the early stages, we're rolling out with limited countries for users. But for those users, you can use the card worldwide. So you can use the card anywhere in the world, pretty much anywhere credit cards accepted. And you can use them on brand name stores like Amazon. You can use it for Uber. So all the stuff works. So my experience, I was blown out. I thought that card would be accepting it in a relatively small number of places. There may be some user experience issues. And so I think the team has done a superb job sort of ironing all those issues out and making sure the user experience is good. So
awesome.
with that, I think I'm finally going to be able to unbank myself. So I think that's going to happen soon.
Amazing. Unbanking the banks. That's a role reversal for sure. So what I'm going to do now is just bring up my screen to give you a couple of little teasers as to what this does. So I hope you can all see what I'm presenting here. So let's talk a little bit about what users will be seeing when they sign up. So this is the landing page that you'll be seeing. A little bit of a sneak peek on the card artwork. We're not going to show you any more just yet, but it's going to be very kind of in keeping with the Binance branding. Very slick, very simple. But we're not going to reveal any more of the secret sauce on that just yet. Let's talk a little bit about what this card is. So in a nutshell, it's a crypto debit card. And this for us has been one of the most important things as we build this product. We don't want people to have to convert their crypto into cash and then spend it. We want you to be able to hodl and spend as you go, right? That's the most important thing. So no need to convert up front. And conversion usually attracts a bit of a fee. So it's been really important for us to let people hold on to their crypto and spend it as they go. So in terms of the crypto assets that you can spend on the card, what should users expect, CZ, in terms of compatible crypto assets?
Well, initially, obviously, we will support BNB, BUSD, and Bitcoin. We'll start with that three, and there's a very good reason for it. I think Josh will allude to that a little bit later. Mm-hmm. And if our users want to see other coins, they can make also a request to us, and we will, in the future, I do see we supporting a larger number of coins, but we will start with this three first.
Excellent. Very exciting. So what you can see here is the card's dashboard. Of course, Satoshi Nakamoto is our first client, as you would imagine. So what each user will have is a virtual card at the outset. So once you've applied, you're going to get your hands on a virtual card, which you can use immediately. So that's pretty cool. You can add this virtual card into your Google or your Samsung Pay. So you can actually start using this in your kind of day-to-day spending within your mobile browser, within your app environment as well. But of course, there's going to be a physical card attached to this as well. So within all of this, there's a really easy to use dashboard that you can see here up on my screen, where you can keep track of your spending and your usage. So we're really trying to make this as easy as possible for people to be able to use their crypto and track what they're doing with their crypto. So what I would say though is this is a beta version. So bear that in mind. As with everything that we do, we're going to make it bigger and better over the next couple of months. So feedback is super important. You get your hands on this. Please do tell us what your thoughts are. And we do tend to kind of make incremental improvements over the next couple of months. So, keep your eyes peeled for product development on this side. So CZ, in terms of what makes this different, what makes this a bit of a showstopper from our view, what plans do we have to make this, should we say, the best crypto card on the market?
Yeah, I think the first step is really simple. It's just to make it really easy. I think Binance have the largest active user base in this crypto space, and this card works directly from your Binance account. So I think that's one of the really key part. You don't have to go to a different site. You don't have to transfer your funds into a different place. So that's really key. The second really big one, we do plan to launch a BNB cashback program going live very soon. So we want to be able to reward our users who spend their BNB or spend their crypto. That will launch, the next step will be to launch this in other regions. And this is also one of the reasons why we want to start with BNB and BUSD first. So we want to push these programs live very soon.
Excellent. Yeah, the BNB cashback is something I think that we've heard on Twitter for the last couple of months.
Yes.
People are so excited about that. So it's coming, but bear with us. So we're working, day and night to make this accessible to all of our users. We're starting off in Europe. France and Spain will be our first launch countries for the beta version, but we will be rolling this out globally. This is very much a global product for Binance. So on that note, if any of you watching now are interested on getting your hands on a Binance card, please do go to card.binance.com and you can register your interest and sign up. And as soon as it's available in your region or your country, we're going to send you an email, invite you to apply for the card. So Cece, thank you so much for joining us on today's product launch. A real pleasure. Let's keep things going. And we're fast approaching our Asia Pacific section of the day. Very exciting. Hello, Tina. I can see you've joined us again.
I have indeed.
We're keeping you busy today. Excellent.
Yeah, it's great. It's been such a great day so far.
It is. Yeah. So we've covered a lot of ground. Where are we then, Tina?
Well, so it's been a pleasure to kick off the event from Europe, but it's now time for us to hand over to our MCs from the Asia Pacific segment. So I'd like to welcome Hazel Watts and Min Park, and Josh and I will say goodbye for now.
Goodbye for now. Thanks, guys.
Okay. Thank you for part one of Off the Charts. My name is Min Park, and I'll be co-hosting the part two segment with my wonderful co-host, Hazel Watts.
Thanks for the intro, Min, and welcome everyone. We'll be presenting the APAC section of Binance's 3-year anniversary today. We've come a long way in the last 3 years, and we're thrilled to celebrate our big wins and share what's in store with you today.
I agree, Hazel. We've definitely moved leaps and bounds the past few years, starting with the CoinMark acquisition, Swipe partnership, and Binance Chain upgrade. 2020 has been quite an exciting time.
Definitely. And today we have an amazing lineup with some of the industry's leading minds. We'll be discussing key themes around emerging uses for digital assets across the region, public health applications for blockchain, and much more.
We're also excited to share the first of the 3 NFT giveaways coming up next. Use your phone to scan the QR code on the screen for a chance to win one of 333 possible rewards. You can win a limited edition Binance jersey, VIP level ups, and even up to 100 BNB.
So try your luck and make sure you've downloaded the Engine wallet to receive the NFT and prize. Let's kickstart this giveaway video.
Okay, our first panel in the Asia Pacific program is about crypto's global expansion, evolving uses for digital assets. Please welcome Peng, Jiho, Sam, Juan, and our moderator, Wei Zhou, CFO of Binance.
Sam, you got to fix your camera. What's up, guys?
Yeah, there we go. Hey, how's it going?
Hey, Justin, got to turn on your camera. Can't wait to see you. Awesome. I was joking with the guys in the Telegram chat. This is the mother of all panels. This is I call it the mope. This is probably the most powerful panel in crypto right now. We basically got the famous like the almighty Justin. Justin here representing Tron. We got Sam Beckman-Fried here representing FTX. We got Juan here representing Travala, and we got Jiho representing here Binance Korea, and then Kai here representing Toko Crypto. Me personally, hey everybody, my name is Wei Zhou. I'm the CFO for Binance, and then we're here basically to talk about how do we make our industry. I think everyone here is under sort of the one dream of basically how do we grow an industry 100x. And I think the easy way to do it is basically, you just grow 10x twice. Pretty easy to get to 100x. But I think, the beauty of having the panelists here is I think we have a broad coverage, both in terms of geographies, but also in terms of specific products and in terms of the platform that everyone here is building. So I'm going to open it off. I think right now we're talking about growth, right? We're talking about we've been in this industry for for 3 years, 4 years, 5 years. So how do we expand the use of digital assets? So I would actually started off with probably Justin and Sam. What are some of the most exciting products that you see on your platform before on sort of the product side in terms of Justin and Sam and Juan. And then before I move off to sort of Jiho and Kai to talk a little bit about what they see sort of in their specific regions in Korea and in Indonesia. So I think Justin's off camera right now. So I guess Sam, you want to kick us started? So what's the most exciting thing you see on your platform right now?
Yeah, I mean, we've obviously been rolling out a ton of stuff, and I think a lot of it's exciting. I think our move contracts are maybe one of the coolest things we have. They're basically futures which expire at how much Bitcoin moves in a day or a week or a quarter. And the cool thing about them is on the one hand, they're really clean and simple to understand. Like everyone knows what how much Bitcoin moves tomorrow means. It's really intuitive to think about. But on the other hand, for people who trade options, they're sort of very purely just volatility measures. Like that's sort of exactly what they are. And so they're simultaneously really great hedging instruments and also really fun, intuitive things, to use in your trading.
Great. I guess Justin, I'll move to you. You've been running, building Tron, and then directly, and then also now basically moving into a BitTorrent, and then also now you've run, I guess, Polonius Exchange as well. Of all these things that you've done the last few years, what's like the single product that you're most excited about on all of your platforms?
Yes, I believe the one of the single product we think has the most potential is the BitTorrent product. So BitTorrent has been in the whole decentralized space for quite a long time, for almost 15 years, and BitTorrent has over 100 million active users in the ecosystem. I think the only thing we need to do is basically integrate the blockchain technology into the BitTorrent ecosystem to make all these 100 million active users get the exposure to the blockchain industry. So that's why in this year, we introduced BitTorrent Speed and BTFS, and of course, DLive. We also hosted Binance conference today to our users. These three products basically shape the foundation of the content ecosystem and the decentralized storage infrastructure and downloading infrastructure for all the users. I think this year, 2020, we will ship the BitTorrent Speed, BTFS to 100% of our current users. That's definitely, I believe, everybody will see a lot of the progress on BTT ecosystem. And
Sure.
of course, we are also the first launchpad project on Binance.
Yes, Tron is from way back. Seems like so many years ago.
Yeah.
Yeah, I guess Juan, I'll move to you. I think you know, you guys just announced a partnership with Expedia, and then I think and then also we announced the Binance investment in Travala. And then with the announcement, I think of the Binance card, which is provides an off ramp for I would say a lot of people, who have Binance account and have wallets with Binance. What sort of I mean, in my head, I know what's going to happen, but sort of what are you most excited about in terms of a product that you're going to roll out on the Travala platform?
Yeah, thanks, Wei. We're very excited about building a one-stop shop for travel solutions. As you know, we offer over 2 million hotels across the world. We're now boosting over 600 airlines as well globally. We are very excited to bring to the Travala.com platform more verticals within travel, from vacation rental to tours and activities, car rentals. So we have that one-stop shop for any travel needs. And we really boost these frictionless on-ramp into crypto. That's one of the things that obviously we're very keen to work towards with the help of Binance as well. But to have that real use case for mass crypto adoption through something that is very familiar to everyone, which is travel. I mean, we all travel despite of COVID at the moment with some restrictions, but travel will be back, and we want to be ready for when that happens by offering that level of user experience that is above anyone else in the travel industry, and also a one-stop shop solution with all travel needs.
Sure. Thanks, Juan. Jiho, I'll move to you guys. I think you guys operate within the regulated space. I think in Korea, and then Kai with Toko Crypto. Toko Crypto is the first sort of exchange to receive a license from the Bapepti in Indonesia. Jiho, I understand Binance Korea is in the process of applying with sort of the new regulations that have come out in Korea from a licensing regime perspective. So I mean, I think whereas I think a lot of the people within the crypto space, we see regulation as a sort of very foreboding event. But what do you guys see in terms of within sort of your jurisdictions in Korea and in I guess Jiho first, as sort of like in terms of popularizing digital assets within a country that has probably one of the highest sort of digital asset penetrations? It's like, what do you see in terms of from on the regulation front, on sort of development of the licensing front in Korea that's really gonna help our industry to grow 10x in Korea?
Yeah, I think regulatory issues is all about making sure that people don't get hurt. Now, I come from a startup background, and when you're developing products, you're taught that you're supposed to move fast, break things, and if something doesn't work, start over and just continue doing that until you satisfy your customer. But if you're touching onto finance, like if Twitter goes down, you don't lose your house, right? But if you're touching on like even a little bit into the finance area, like people can get hurt if you like mess up. So I think the regulators really want all they want is to make sure that people just don't get hurt. And coming from that perspective, I think it's actually very progressive for the entire industry. So if clear boundaries are set, it would actually empower more entrepreneurs to enter this space because they know exactly what their boundaries are and exactly know what they need to do to make sure that whatever products and whatever experiments they're running don't end up hurting people, even if that wasn't like their intent. So I mean, here at Binance Korea, we're doing all we can to make sure that that is one of our #1 goals. We are still a very early company here in Korea, and building that trust, I think, is very essential.
Sure. And Kai, I'll turn to you. I think one innovative product that you guys have launched is the BIDR stablecoin. I would say, for me, I think that's something that I found to be quite exciting, especially given the I would say given the relatively early nature of the sort of the digital asset industry. And then, but the thing is despite being the international industry, I think Indonesia has, the regulators have at least, come out and with pretty clear set of rules on how they're going to regulate it, and which, Toko has gone and gotten that license. And is in the process of basically, getting all of the ducks lined up to get additional licensing required to offer a full suite of digital asset services in Indonesia. But can you talk a little bit about, on the product front, a little bit more about the BIDR product, and then maybe even just give us a little bit more introduction into Toko Crypto?
Right, sure. Thanks, Wei, and hi to my fellow panelists. So like Wei mentioned, yes, Toko Crypto, we are the first cryptocurrency exchange to be regulated by the Commodities and Derivatives regulators over in Indonesia. We built Toko Crypto from the ground up with that in mind, that we wanted to, basically Indonesia is pretty new to the entire crypto space, right? But they have been one of the first countries, I must say, that have stepped up, and BAPTI, which is the name for the Commodities and Derivatives regulator, they have stepped up and they came to say, hey, like what Jiho mentioned, they wanna come in and make sure that people's assets are safe. And it is why since the start we have built Toko Crypto from the ground up, making sure that we comply with the regulations. We were in there in the boat together with the regulators, building the regulations from the ground up, and that managed to get us the first, basically the first registration and license from the regulators. Now, with that being said, with this license, it has actually granted us huge access, huge access, and it enables us to be able to offer more products which we are all very excited to be able to roll out. Like what Wei mentioned, BIDR, that is a particular product that is very exciting and something that we are really pushing it to roll out more, because it targets the remittance space. IDR, rupiah is a controlled currency. Now with the forming of BIDR, this opens up a whole list of possibilities that could potentially happen. Just yesterday, we launched BKRW USD pairings on Toko Crypto, and this essentially opens up that option for, let's say, business owners over in Korean business owners over in Indonesia, to allow that fiat channel, that remittance channel, for them to be able to move their money from Indonesia over and back to Korea. Now that is just one of the things that we are super excited for. Being a regulated entity, it also allows us to offer products like futures, derivatives, and options over to our customers. And that is something that we are currently working on and that we're really excited to be able to roll out in the foreseeable future.
Awesome. I'll move sort of, I think we're, just to give you guys a heads up, we're about halfway through our panel. And then I actually want to talk a little bit, I'll talk about something that I think everyone on this panel should be excited about. I want to talk about the future. Because one of the effects that I think COVID has had is actually, I think, that one of the things that I've sort of philosophized about is COVID has pretty much brought things forward. We're basically 5 years into the future now because of COVID. With sort of working habits, with in terms of how we live, and then in terms of how we interact with technology, how we sort of being stuck at home all the time, and then even more so by force, if anything. So I kind of want to sort of like I want to start with Sam again, because I think you probably think about this all the time. And if you don't, then it's just sort of like what, like this is something that just sort of like what's been the, like, what's been the biggest impact on your business, right? That's been brought by COVID. Given that, and then how are you visualizing it? How are you sort of, how are you formulate sort of a strategy to sort of get grasping it and then take advantage of it?
Yeah, I mean, so I think the first thing is that there's a lot of ways in which it's changed our business less than you might expect. And a big part of that's just like it's a digital industry. And so, as compared to a place where the core interaction is in person, there are ways in which we got off relatively easy. And it's also been like relatively less bad here than in many places. And our office still hasn't shut down. We've been here every day. So it's, our work life has been, I wouldn't say uninterrupted, but less interrupted. I think, the biggest things that I think it's done is it's, the world's just been changing a lot faster and sort of, in much larger ways than we were used to. And I think that it presents a lot of opportunities. And I think it also sort of shows us that, that there is sort of pretty big opportunity for us to really think a lot bigger in terms of who we are and what we can be as, first of all, just a set of things that are going digital is sort of increasing by necessity, but also as we just see, in general, how big things can change so quickly, and other things can sort of become big. And I think it sort of caused us to think a little bit bigger than we otherwise would.
Justin, I'll turn to you here. I think you probably have a very diverse suite of products, in terms of, and then also I think in terms of your background from gaming, so you've pretty much have lived online your whole life, and how has COVID sort of brought if it brought Future forward to today, what's been the biggest impact on your business? You're on mute. Yeah, there you go.
I believe the biggest impact COVID have on our business is everybody has got used to decentralized like management and the decentralized like work style, So before that, I mean, even myself, we always do remote management because we have like, just like as Binance, we have like office all around the globe. But after COVID, I mean, this kind of the decentralized management and decentralized work style has been, I believe crypto is the first industry in the whole world to have this kind of the decentralized work style, right? But after COVID, I think Twitter, like Airbnb, Uber, like Facebook, lots of the big Silicon Valley companies start to move to decentralized work style as well, so remote work. I believe this is the biggest impact. So, for example, for me, I haven't been travel for like almost half a year. So basically, the majority of the time I have been spent on Zoom and Telegram and all other communication channels, try to talk with our employee and team and to develop our product. So that's why I agree with you that COVID actually 4 to 5 year like before like drive like everybody basically migrate to online life.
Yeah. And Juan, I could imagine this, your industry has been impacted the biggest, right? The travel industry. But from talking to you, a couple of weeks ago, and then in a month before, we're seeing green shoots, right? In terms of traveling bouncing back. And one of the concept that I've heard, at least, is basically travel bubbles that are basically, domestic travel or travel between countries that are quote unquote safe. Because I think I haven't left, and I've left my apartment multiple times, but I haven't left sort of the city that I live in 6 months. This is the longest I've stayed in one place, like since I was like in school. I'm dying to go somewhere, anywhere but here.
Yeah. Yeah, for us, definitely, we've seen a significant amount of pent-up demand that's basically coming up in travel bookings, particularly over the last 5 to 6 weeks. Some of the restrictions have been lifted across the world. This is obviously the consequence of having people locked up for weeks or months. That as soon as you give them the opportunity to travel, at least domestically, vacation travel is something that people are jumping on. There's amazing deals. We have deals up to 40% discount in different top destinations that normally will cost you an absolute fortune if you can even find a decent hotel and so on. So yeah, definitely COVID has given us an opportunity to distribute our team and distribute the way that we work, just as Justin said, which I think is obviously moved us forward in time, at least by 5 years in the way we do things. But it's also given us an opportunity to look at the whole travel space and identify opportunities that will strengthen the Travel.com brand going forward. As you know, in these tough times, there's always opportunities that come with it. And yeah, we also, spend this time focusing on improving the product and making sure that we come a lot stronger on the other side. So yeah, we're happy to say that, we saw a drop in revenues close to 90% as soon as the lockdowns started back in March. But we've seen a nice sharp recovery coming across the globe, including the United States and some other countries. They're still having, significant numbers of infections and so on. So there's a positive outlook for travel as a whole, particularly within domestic travel.
And Jiho, I'll come to you sort of like in terms of its impact, because we launched Binance.kr, the cloud exchange, in the middle of COVID, right? And then I think we missed our timetable by a couple of weeks at best. But you had to basically run around Korea in the middle of COVID and coordinate with different vendors on the ground there. Sort of how has sort of that impacted business in Korea and your business specifically?
So because most of the population in Korea is so densely packed into Seoul, it's very, very common for most of like anyone that you need to meet up with is within the Seoul metro area. So it's very natural for people to just like ask to go out for lunch, go out for dinner, and just get business done face to face. Now that has gone down a little bit, and what I felt was most disruptive was that although Korea is still a very connected country, there is still a lot of stuff that where people are required to go physically to a specific location to sign something or fill out papers and whatnot. And like some the easy banking stuff, again, it's all online. But let's like, for example, I needed to get a loan because I needed some quick liquidity on fiat about 2 weeks ago. I had to go to my Citibank. They asked me to sit like for 2 hours and I just had to wait and watch them like literally move papers around, ask someone for their signature and whatnot. And I think the banks are realizing that that is not scalable anymore. People are becoming more decentralized. They much would like to enjoy their space, doing whatever else other than going to a physical location and just waiting there. So I think that is really pushing Korea to rethink how they're doing a lot of the stuff that they thought was okay up till now. And I think like blockchain crypto will kind of become the driver behind that, because they're not going to be able to build up an entire like monolithic system like over the course of a year to fix that problem. They're going to need to go through, they're going to need to look at existing technologies. And I think like blockchain crypto just is right there, just waiting for them.
And Kai, I think Indonesia has been, I would say, heavily impacted by this, right? But I think to echo sort of what Jiho said and everybody else has said, sort of like as people have been working from home in a country where I think it's just as dense and just as concentrated in Jakarta, how has that impacted sort of as I mentioned, same as Jiho, you guys launched the exchange in the middle of COVID, in the middle of a lockdown.
Yep. I think the sentiments chime with the others that are on the other panelists that are on this panel. But I think for Toko Crypto, it's for us when we launched and when Binance Cloud, basically when Toko Crypto went live with Toko Crypto 2.0 that's powered by Binance Cloud. A lot of the access, like fiat channels, a lot of those access were already built. So for us, it was really more about rolling it out, getting the product to people and user acquisition, which we find somehow it's kind of easier to reach out to people during this particular situation. When I call someone, and I wouldn't have to wait to schedule my calls, or when my sales team calls up someone, they do not have to wait to schedule their calls. If you attend webinars, it's instead of just having to spend money on an event space, spend money on marketing. It's very easy to connect with people, and you get people that I just finished a webinar with Emergo Indonesia, who are in the same group as Cardano, with close to 100 people. You don't normally see this kind of attendance in Indonesia. I guess you can, for those who have been in Jakarta, you guys would also attest to this, is that the traffic in Indonesia is crazy. It's madness, man. And people who attend events, usually you get 200 and sign up, that maybe only 50 turn up. But with this COVID that's going on, more people are, it's whetting people's appetite to want to learn, to want to explore more. And I think that's a kind of like a positive outtake on this entire COVID situation in Jakarta.
Awesome. I guess we'll come to sort of. I'll give Justin and Sam sort of the final two comments here. Justin, I'll start with you. What do we have to look forward in terms of product release wise? Because you talked a lot about BitTorrent and all of its sort of its applications, and I think for Tron basically what do we have to look forward to?
Yeah, for this year, I think Tron, the focus is on decentralized financing. We have been doing a lot of the work on decentralized finance since last year. So that's why we launched the JST token as a core token in the Tron DeFi products. So we have seen a lot of the progress on Ethereum network. For example, Uniswap, like Compound, MakerDAO, Synthetics, and all those DeFi projects. And the Tron developers is also trying to build all these kind of the decentralized finance product on top of Tron. So that's why I believe the DeFi on Tron is a good opportunity. And recently we have launched JST token. It's like, so you can take a TRX as a collateral and it generates the stable coin. And second step, we will see the decentralized lending platform and decentralized exchange, and also decentralized derivative and decentralized BTC on Tron platform. So that's why I believe this is like one of the most important things on Tron network. And also on CeFi, we have been seeing a lot of the progress on USDT on Tron network. We also collaborate with Binance on this and launch several campaigns for USDT holders on Binance projects. I think these projects is also welcomed by the community. Right now we have over 400K users on Tron network using USDT every day. And we have seen over 5 million transactions since we launched USDT on Tron. So that's why I believe the growth of USDT is also very exciting in this year.
Yeah, I mean, I actually think stable coins is like it's going to popular. I think if any single digital asset outside of Bitcoin and BNB, I would say stable coins. I think for Binance, we've launched I think five stable coins so far. Now we have BUSD, but also sort of BKRW in conjunction with Binance Korea, BIDR in conjunction with Toko Crypto. And also sort of BGPP, and then I think we have a few more in the pipeline coming this year. For that, I want to thank our panelists. I would like to thank Justin and Sam, and Kai and Jiho and Juan. Thank you very much for your time, and thanks for everyone for listening to our and watching our panel.
Thank you.
Thank you.
Thanks, guys.
Thank you.
Thanks, everyone. Thank you.
Thank you, guys.
Thanks. Yeah. Bye-bye.
Thanks, everyone. Definitely the MOP of panels, with a very strong lineup. It's exciting to see how many different new ways we can explore digital assets.
I'm definitely with you, man. That was quite an engaging discussion. I'm especially excited to see how these new blockchain and crypto products for travel will pan out for next year. So stay tuned for our next session, Emerging Applications for Blockchain and Crypto, moderated by Genping Liu, partner at Vertex Ventures and well-known VC across Southeast Asia. And after the panel, we'll go straight into a special video we've created for Binance Turns 3, which shares our amazing stories so far and our aspirations for the future.
Please welcome Joseph, Ken, Richard, Juling, and our moderator, Genping.
Hello. Hi, everyone.
Hi, everyone.
Hi, Genping. Hi, everyone.
Yeah, just now Joey had a very great session about the product. It seems like everyone knows everyone in this field. I'm kind of newbie in this sector. Maybe just a quick intro is that I'm from Product Venture, which is basic platform on Temasek. That I'm personally very interested and the sector has been following the trends. And one of the major trends I'm really following is emerging applications. This is from classical VC perspective. So today we have a great panel with Joseph, King, Richard, and Juling with very diverse background. I would let them to give them like their quick intro and then name one of the most accepted emerging applications from their perspective first. Maybe we can start from Joseph.
Thanks for having me here. We are very excited to celebrate the third year of an anniversary for Binance because Binance is in our governance council for the Clayton blockchain. Okay, so for Clayton, it is a blockchain developed by GrandH, which is a subsidiary of KakaoTalk. KakaoTalk, sometimes people call it the WeChat in Korea, has around 50 million users all over the world in Korea. So like WeChat, we have different functions like game, hailing, and other functions. And Clayton is the new function in KakaoTalk Messenger. We actually have a digital wallet called Clip in the KakaoTalk Messenger, where you can send the Clay token to your Kakao friends in 1 second. You don't need to wait for 10 minutes for the settlement. And we also have a lot of reputable companies in our governance council besides Binance. So for example, in China, we have Hashkey. In Japan, we have Gumi. Of course, in Vietnam, we also have VNG, the IT giant there. In Korea, we have LG, we have SK, and of course, Kakao and the gaming giant Netmarble in our governance council. We are actually looking forward to develop our business overseas, and we just celebrate the first year anniversary for the Clayton blockchain last week. So going forward, we will expand with Binance and other governance council members to overseas countries, both vertically and horizontally. So we will offer new blockchain products. So in terms of vertical expansion, and for horizontal expansion, we also expand to other countries, working with Binance and other governance council members.
So what's your most accepted emerging application? Payment?
In Korea, actually, if you read the news, everyone is talking about Clip, our digital wallet in KakaoTalk. Just imagine if you have a digital wallet in WhatsApp, WeChat, that you can send your token to your friends without memorizing their address. You don't need to memorize their public key. You don't need to memorize your own private key as well. It is just like you pick your friend in your Kakao Messenger, and then you input the number of clay that you want to send to him or her, and then that's it. That's done. We got 100,000 users for the first day when we launched this service, and we launched this service last month. Now we have got an increase of 70% in our number of users in the digital wallet already over 1 month. And we expect this trend is going to continue because in Korea, we are seeing that many companies, like the game companies or the IT companies, they are actually digitalizing their assets and allow users to have more control over their own assets. So we are going to launch game NFT items, blockchain mileage, blockchain coupons. And actually, one of the Kakao subsidiaries, Kakao Game, they just launched a blockchain game called Crypto Dragon. And you can actually send the Crypto Dragon token in the Kakao digital messenger to your friends, just like sending a message. So I think it's a
application. Yeah. Okay, cool. Maybe next, Kim from gmoz.com. Can you introduce yourself and share the most accepted application?
Hi, thanks for having me. I'm Ken Nakamura, and I'm the CEO of GMOZ.com Trust Company, which is a New York subsidiary of GMO Internet Group. So GMO Internet Group is a Japanese publicly traded IT and finance conglomerate operating since 1991, which consists of 140 group companies with about 30 of them operating outside of Japan. We have a regulated internet bank, a crypto exchange, FX trading platform, which have done the largest trading volume globally for the past 7 years, and the largest payment gateway provider in Japan. So our New York entity will be issuing the first regulated JPY-backed stablecoin, Japanese yen. It's called the GYen, along with the USD stablecoin ZUSD. We're currently in the final process of the New York Trust Charter application with the NYDFS. And once the license is granted, we will be launching on Binance in the next few weeks. So in terms of application, I'm very excited with a company based out of Japan that's in the trade finance industry. They're called Standage. They build a blockchain-based platform where people can buy and sell goods across border. They essentially match sellers and buyers on their platform, facilitate logistics and financing, such as letter of credit. And they're all doing this on blockchain in a very cost-effective and time-efficient manner. What I found interesting was that people in Africa are buying goods from Japanese sellers and making payments in stablecoin. And what's more interesting is that buyers, their go-to exchange to gain access to stablecoin is Binance. So they go to Binance to purchase US-backed stablecoin to make payments to the Japanese sellers. Because there's no JPY-backed stablecoin in the market, they make payments in the USD-backed stablecoin. And then the Japanese sellers would go to exchange to convert stablecoin to BTC. And then they send the BTC to exchange based in Japan to convert it to JPY fiat. So all these processes can further be streamlined through a deeper integration with stablecoin issuers like ourselves for efficiency. And I haven't seen a full stack trade finance company like Standage. So I'm very excited to see how they will further evolve.
Wow, thanks for sharing. This is an interesting B2B application.
Mm-hmm.
So next, let's get Richard from Vit Lam to share.
Yes, absolutely. Thank you. And hello to my fellow panelists. It's great to be here. So I would say Vit is probably the best kept secret in crypto land. Vit is a public blockchain that's predicated on free and fast transactions. That's the main value proposition. Our main flagship product right now is VitX, which is our decentralized exchange. And what's so special about this decentralized exchange, you may ask? So here are a few different ways where it's different. So number one is that it's a truly decentralized exchange, and yet it's operating extremely quickly thanks to the good infrastructure provided by the Vit public blockchain, which I can go into the design of which in a little bit. And it has great user experience similar to a centralized exchange, thanks to the fast settlement speed. Now, when I say it's truly decentralized, I'm talking about the fact that it has on-chain order book, it has on-chain matching engine, and these are different mechanisms to put in place to make sure that your assets are safely in your own hands until the point when you're trading on the exchange. And then separately, aside from the fact that it's decentralized, it's fully open. So let me explain what that means. So number one is that it is fully open to operators. So anyone can become an operator and list his or her own coins on the operating zone and subsequently collect trading fees for the coins listed on that zone. So it's fully open from that perspective. Separately, it also offers a VX token. Basically, you can transmine and you can liquidity mine on the exchange in order to own the token. And then this token fully entitles you to proceeds from the exchange. So basically any listing fee, any trading fee the exchange collects will be distributed to the VX holders, VX being the token. So basically VTEX is a fully decentralized exchange that ensures security of your assets, and it offers the fully open infrastructure so that anyone can become an operator listing their coins. And ultimately it shares the proceeds with every single trader and every market maker on the exchange. So those are basically the main value propositions of VTEX. And Now, so what's so special about the underlying chain that powers VTEX? We are basically the first infrastructure to have implemented smart contract capabilities on a DAG framework. And this is based on the block lattice flavor of the DAG framework. Apart from VTEX and Vite, we also have a Vite wallet on which we basically support very notoriously difficult to integrate coins such as Grin. And we currently also offer support for ETH and for various other chains, and then a BNB obviously, and then a few other chains to be supported soon too. So check us out. Great to be here.
So is it fair to say that for you, the most accepted application is Bisley DeFi?
It's a decentralized exchange. Decentralized exchange, and the interesting thing is that by staking Vite to the decentralized exchange, you can actually earn VX, and the current running rate is around 20%. So in terms of satisfying the demand for yield farming, the decentralized exchange definitely offers that. And as I was saying, there are various different ways to earn VX. The two most important ways and easy to understand ways, one is to trade on the exchange, and then in return you get the coins. And then the second way is to liquidity mine, which is to basically market make on the exchange. And then the interesting thing is that the VX that you get is not just a VX. It's not just like comp where you get governance capabilities. You are actually entitled to proceeds from the exchange. The listing fees, the trading fees, they are completely shared with holders of the VX token.
Okay. Yeah, okay, next we got Julian from ALF to share.
Hi, Genping. Thanks for having me here, and hello everyone. Great to be on the same panel. My name is Julian. I'm the co-founder of ALF, and ALF is a cloud-based blockchain that is built to help business to grow. Yeah. So what we are trying to offer is that we want to help businesses to go beyond digitalization, but rather to build various applications on blockchain. So what we're offering to them is a full suite of things to make this much easier for them to happen. So first of all, using the ALF Enterprise solution, which they can download by any cloud service provider such as AWS or Cloud or Google Cloud, any companies can launch a ALF Enterprise blockchain within 15 minutes. So that they don't need to worry about building a blockchain themselves at all. And what is even better is that they could customize any modules on that blockchain, be it on the consensus or on the network layer or the smart contracts part, which will really make this fully owned by them. And this can be customized for their own need. Yeah, so to demonstrate that, actually one of our engineer has took his spare time to build a POW-based blockchain using ALF technology. So what you're going to see is multiple blockchains. Some of them are in POS, some in POW, and some in DPoS for various companies, and they will be all running. And what this can help companies is that they become more comfortable using blockchain. First, starting with more of a consortium setup. Then after that, they have the option to join the ALF public network in the future. So we also, that means, in the multi-chain structure, we allow different businesses to with each other. So the interoperability is something that we offer to them when they are ready to work with other business. So on that note, yesterday we just published a smart contract address on Ethereum. So this is what I personally call it a wormhole, which we're gonna do some amazing things between Ethereum and ALF. So this will be a start to show many things that includes token migration, free movement of assets between the different blockchains in the future. Yeah, so that's what we can help business to start their journey on blockchain. Then the second step we're trying to help them is to demonstrate or to work with them hand in hand to explore use cases. So I'm going to talk about two business cases, which I personally feel very excited about. So the first one is about bringing more transparency and fairness in business conduct. So let's take, in many emerging markets, where school allocation or even certain resources needs to be drawn on a lottery basis. And usually the lottery is a black box. So using ELF depose mechanism where we already have a random beamer, so that is the part we could generate verifiable randomized numbers to make lottery transparent and to eliminate the black box. And second use that we're working on is about fintech on virtual gift cards. So we've been working with the largest gift card exchange called Amazon in Japan to rebuild the new platform for them. So using blockchain technology, Amazon is going to change the way how gift cards are issued, are stored, redeemed, and also exchanged people. Yeah, so this is something that we think can really unlock a lot of liquidity and also help countries that are still using gift cards to really make it happen.
Okay.
Yeah.
Yeah. Thanks to Julian for sharing. I think because of time constraint, we just managed to go one round in introduction. So I think that's the end of the panel. But just to summarize, seems we have we have different applications, different chains designed for different purpose, and we support for 2C and 2B applications. So I guess maybe that's thanks for our guest Sharon, and let's catch up next time.
Thank you, guys.
Okay, thank you, everyone. Okay, bye-bye.
What does it take to connect billions of people, to transcend borders and rewrite the system to be more fair, just, and free for all? It takes a willingness to challenge old principles and create a new foundation that forever changes the way we transact and interact, because financial freedom belongs to everyone. Over the past 3 years, you've watched us grow from a cryptocurrency exchange to a comprehensive blockchain ecosystem to build today's crypto world and the crypto universe of tomorrow. We were never alone, because from day one, we've been working and growing together in support of a shared vision to increase the freedom of money for all. The freedom to earn, the freedom to hold, the freedom to spend, share, and give. No matter who you are or where you come from, it takes a community to change the world. Though we still have a long way to go, let's take these next steps together. Because together, we'll unlock the freedom to do more.
Great. So thank you to all our panelists. I've especially enjoyed the insights and predictions around payment applications and stablecoins. And I have to say, our special anniversary video really captures Binance's future-looking team and vision for financial freedom. So stay tuned with us for an in-depth discussion around what's next for blockchain and crypto in India.
Please welcome Naveen, Michelle, Sandeep, Navin, and our moderator, Ajit.
Hi, good afternoon here in London. My name is Ajit Tripathi, and I'm delighted to host 4 of our illustrious panelists. Naveen Gupta, who is the Managing Director of MENA at Ripple, MENA and Southeast Asia. We have Sandeep Nailwal, who is the co-founder and CEO of Matic Network, Nishchal Shetty, who is the founder and CEO of WazirX, and Naveen Surya, Chairman of the FinTech Convergence Council. Gentlemen, welcome to our 3rd anniversary conference, and we're delighted to have you here. So, I mean, coming from India, and I've been here for 10 years now, everything that goes on in crypto in India is of great interest to me personally and to us in Binance. Now, what's taking India so long to get on to the crypto journey, right? When we look across the region, China has made a lot of progress in the space. Obviously, there are other Asian countries in the Far East that have done really well in crypto. Why is India so slow off the gate, Naveen?
I think it has to be regulations, right? So as you know, in India, 2017, it was among the top countries in terms of crypto trading in India. And after that, there was a ban, or sort of call it the quasi ban, where the exchanges could not get a fiat on and off ramp. And that essentially made sure that the industry essentially disappeared. And now after the Supreme Court verdict is out, whereby the ban has been lifted, the growth of the industry is again there. But it's primarily around regulation. So wherever there will be hazy regulations, wherever there would be on and off switches, there will not be confidence in the market for both enterprise and individual players to come and play.
Right. So I guess, Nichal, you've been fighting this battle for some time in India, and you have set up a very successful exchange. So what made you get into crypto, given the relative lack of a crypto ecosystem in India? And how did you get with the idea of idea of Rex?
The thing is, when we were launching WazirX, there was still clarity. At least there was no banking ban, and the ban came into effect after about 3 weeks. So I don't know what I would have done if there was already a ban. Would I have launched? I don't know. But when you look at the last 2 years of the ban, I think most entrepreneurs did not take the plunge into crypto in India because of the banking ban. You do not want to start up where you cannot even have a bank account. How do you pay employees? How do you pay anything? So I guess we just happened to be a bit early and somehow survived through building P2P and stuff. But to your answer to your question about the whole why has India not been able to progress is this. While regulation is one aspect, but then we've seen a lot of industries where regulations not always clear in the beginning. That does not mean that we do not progress in that industry. So I think the banking ban has to be like the biggest factor to India being behind right now. Hopefully now things have gotten better. So I think 18-24 months from now, we wouldn't be asking this question. If things go right, we should probably be, up there with the other countries.
Yeah, see, I agree with you that, regulation is blamed around the world, but that hasn't really stopped the growth and adoption and mainstream adoption of crypto in most other countries. I haven't really seen, Bitcoin mining operations come out of India, or lots of new protocols come out of India until, I guess, Matic really got started and practically got a lot of traction. So Sandeep, what got you into starting Matic, and why do you think there aren't so many other innovators like you out there?
Mindset is more on the application space, right? And that's why I think we were not, like Indian developers were not that prominently featured across the globe when, the protocol wars were there. Like, 2017, late 2017, 18 were more like protocol wars, right? So we Indian developers have not been on the global stage that much, except except maybe only about except Matic network or something like that. But I think a lot of Indian developers are actually working for in the protocol level for overseas companies. And the reason again comes back to the same situation, that due to this regulatory non-clarity, the VC investments are very constrained in India, right? And then for building a blockchain protocol, it's very hard to compete and first of all build and then compete against the incumbents across the globe, which have raised millions of dollars in funds, and then they can hire any kind of researchers and all that, and then spend money and out market you also and all those things. And with crypto, the geographical kind of boundaries also don't play that much of a big role. You can hire a marketing agency here and then pay them in, I don't know, maybe USDT or some stable coin or Bitcoin or whatever, right? So due to that, first, because of non-funding, a lot of protocol teams don't get that much promoted here. So that culture of having those protocol companies, like for example, you would know about full node offices in, let's say, Berlin, right? So a lot of protocol companies come out of that. So that culture has not cultivated over here. and that's why a lot of our protocol engineers are working with the overseas companies. And when we actually were starting to hire in Matic, once we raised a bit of funds and all that, we initially thought that we won't be able to find good protocol developers maybe from India, but we were very pleasantly surprised that now our team, we, in spite of us being fully open to hire from outside, we most of our, like 90% of all our developers are from India, and some of them are really good developers. Like they keep getting poached by the external companies. So I would say that in protocol side of things, due to the funding and non-clarity, as Nishal was also saying, that people are not taking a plunge, entrepreneurial plunge into this. So due to that, in protocol wars, we might be a bit behind. But for the application era that is now coming, once the protocols, protocol or scalability and all these things are fairly solved, I think on the application space, you would start seeing Indians more prominently, because our developer mindset is like that.
Yeah.
We are running multiple accelerators. We see much better applications in Indian context for like which have real world use case than overseas applicants.
Makes sense. So on a related note, Naveen, so what are you doing to change this environment and create sort of a more friendly setup for crypto entrepreneurs in India?
So we represent, as you know, the group of crypto exchanges from India. And if we do 100 things with regulators like RBI, where either we kind of agree, or let's say it's 49 things where we discuss and find a trade-off. This is one thing where we actually went head on and took this case against RBI notification that it released. So there was no blanket ban, thankfully, from RBI or from the government. So that actually saved the industry. And there's an interesting song from Leonard Cohen. I don't know if you heard. It says that there is a crack in everything. That's how the light gets in. So thankfully, we found that crack in the current ruling, and we got some light in. And we should thank that Supreme Court to take that view. Now, at this stage, we need to work very closely with the industry, because all said and done, the real concern here is about lack of education, understanding, and the real right from the government policy makers to the regulators. We need to educate them as much. At the same time, I think the industry, while they have taken huge efforts, kind of some risk mitigation measures, but it needs to become more and more visible. Even pre this ban and pre this any discussion, we were actually very closely discussing on taking a very vocal, very visible campaign out to kind of make it very clear to the government that we actually care about the customers, and these are the set of things that we are doing for them. Like we do insurance, keep doing, the IRDA keeps doing campaigns, the mutual fund companies keep doing the campaigns. I think some of those activities we're trying to work with the industry and see that it's not just about what you do as an individual company in your company, on your website, in your system, but as a collective industry. How do you show that you're actually doing something impactful for all of them? And of course, the one big thing that we're all working with is the self-regulatory body. I think that would go in the right direction. That's where the whole focus is just now from our association.
Yeah, so, and this is a question for all our panelists. When I speak to policymakers and regulators in India, and I've been connected in this ecosystem for about 6 years now, then their main complaint is that there are no real consumer applications, right? And I'm not agreeing with that. I'm just saying that the question they ask is, who needs crypto? As in, what are the consumer applications? And I know all four of you have been working in different ways on creating applications for consumers, which I call grandma. So what are those applications, and how would you convince the regulators that crypto is actually useful for the consumer?
So good part, Ajit, is that I know one entity I can't name, but they're working and they're very close to RBI. They're working on a huge system, which would be, again, world's first in a payment clearing side. You would see something on a blockchain coming. There is a serious effort that is going on to create a government issued digital currency. So at least these two applications are surely happening at a very macro level. There are a lot of others that are happening, probably other colleagues can talk about.
Right.
Yeah. On the micro level, like we also see a lot of entrepreneurs building, like I can't exactly speak for like crypto specific use cases, but I'm talking more about the blockchain specific use cases, right? Where people are deploying applications on public blockchain. So definitely in some way or the other, protocols get involved, or like the crypto gets involved. So people like, recently we've been talking to a team which has built this, kind of these Naxal affected areas in Bastar, in Jharkhand, state of Jharkhand and all. where they have built these grievances, based grievances application portal in the local area, and they have onboarded local bureaucracy into it. And that, their complaints actually go onto blockchain, right? So once they are there on blockchain, there is accountability, some level of accountability into it. Like some journalist can pick it up and then, can make an issue out of it. So these bureaucracy have a pressure to solve those issues. So those kind of real world use cases, like a team working for farmers, supply chain. And in India, still, the farmer supply chains have a lot of corruptions and all that. So, they are trying to solve this quality or the trackability of these applications using public blockchains. And that's why, I was mentioning that some very solid use cases and real world applications of public blockchains.
I think to add to that, if you think about it, I think we're just moving ahead of the time. I see crypto and the whole blockchain ecosystem. We are at the infrastructure laying stage. It's like the roads have not been laid, and we are saying where are the supercars or where are the amazing cars? I can't see them. We need to understand the reality today is that there's no infrastructure in the either even globally to build something that is I think able to onboard millions of users. And the other thing is in India, for example, if you do not have access to banking, if you do not have access to clarity, how do we expect products to be built? I mean, first we have to create a playground for people to come in, and that itself is missing. So I think that when the question is asked, where are the applications? I would say, where is the infrastructure or where is the regulatory clarity? And that is what I think right now as an industry we're trying to set. And once these are done, I think 1, 2, 3 years from now, we would start seeing all these applications that people are asking for. Yeah. That's one part. I think the other part is crypto itself is an application, the ability to transfer value on the internet from one person to the other without any other barrier or middleman. I think that itself is like the greatest application that we've ever thought of. It was not possible 10 years ago before Bitcoin ever became a reality. So I think that itself is like the biggest application, send value from one person to the other, peer to peer. There's nothing better than that, I think, in terms of application.
So that brings us to you, Naveen, right? You've been working on remittances for a long time.
Yeah. So we are already live, right? In a number of other countries around the world where we are using XRP as a bridge asset to essentially move value from one fiat into another. We are live in Philippines, we are live in Mexico. And that's what something we want to do it in India as well. As you know, India is the largest receiver of remittances in the world, $79 billion a year. 35 million Indians live overseas who send money back to their families or their loved ones. The grandma example, there are a lot of grandmas who every day receive money from countries around the world. And also, you may not know that, but India sends about 18+ billion overseas for education, medical, and other purposes. So there is about $100 billion, which pays on an average 7% in FX and fees. So that's $7 billion of Indian money getting lost somewhere. The second thing is I take even a more simpler example. You look at the yoga market in India, right? Globally, yoga market globally. Yoga is to India what pizza is to Italy, right? So maybe there are millions of yoga teachers in India who can teach, and all of us
need to do yoga. That's right.
Absolutely. I mean, and anybody on this call can essentially learn, but their biggest problem would be how to pay that $10 to a person in India who's teaching yoga. And crypto is a great way, because otherwise you'll spend $100 to pay that $10 to the person, right? So 100 billion yoga market, and there will be many Baijus equivalent of platforms who will then originate from India, who will build on the top of it.
Yeah, so I have two other questions. So in Europe, we've gone through a long journey towards regulation, right? And we are continuing to create a harmonized regulatory framework across different European jurisdictions. What stops India from looking at the work that's already been done and moving away from the ban and creating a regulatory environment that allows crypto businesses to operate in a more innovative environment?
Ajit, I think the Indian government mindset is still not very clear. I think, as I said, that it's not really was a ban and it's not really lifted. Like what Nishil said, it is actually a fundamental issue still remains. In fact, there was a bill introduced, and part of the reason we got favorable verdict because there's been no clear ban from the government, and this is the reason. But at the same time, there was a bill introduced during tenure of the last government, I mean the same government but last tenure, which actually expressly talk about banning all private cryptocurrencies, but fundamentally at the same time allowing all blockchain uses, also allowing issuance of central government kind of a digital currency. So it's pretty, if you see, it's like an oxymoron, right? That you one side you're kind of stopping something, other side you're adapting it. Thankfully, that bill did not get clear. So the situation is pretty grave. We just got a small, really that crack and some light into it. We need to actually work harder with them, and their mindset has to change. I would say probably there is still some scope, because if there is a favorable verdict, which means there's some rethinking happening. There is a parliament level committee getting constituted to relook at it. I think we need to put all our industry resources, including global knowledge, and work with them very closely to educate them. We tried it last time. Somehow it went into a different direction, but we need to redo it again. And probably that's very critical at this stage.
And Naveen, you published your own ideas on what the regulatory framework should look like. What are the key themes there?
I think our number one theme there is really public consultation, right? So, and Indian government has a history of that. If you look at number of laws that have been built in India, there has been extensive public discussion. And I think once that happens, all the people in this room can essentially present their case and essentially talk about what are the benefits of crypto and how some of the concerns of the government around AML, about financing and things like those, consumer protection, can be mitigated, and at the same time bringing innovation to the Indian masses, right? So that's what we have been asking about, public consultation, and after that, go from there.
Yeah, so I'm Indian, right? And one of the things that Indians are great at is competing. So, I mean, that's how so many Indians have done well in Silicon Valley and in tech and so on. So maybe somebody should talk to the government and say, look, China is getting so far ahead. President Xi has announced a national strategy around blockchain. US, the SEC has made favorable pronouncements. Europe is UK, France, Germany. I mean, so there must be some competitive drive out there to say, for the government to look at and say, well, if all the other countries see value in this, then maybe we need to look at this in a different light and create an ecosystem that allows India to sort of get ahead of the competition.
China, of course, is a wrong example, but anyway.
Well, it's a great example given the relationship. So,
it works both ways, so yeah.
Right.
So, yeah, I think, so Ajit, we have to, the thing is, we have to understand that India is a large country, and it's going to take some time for the idea of crypto to ease into the country. And what you're seeing right now, all of these, the talk about a ban or unfavorable regulation, all of this is actually a process. And I don't personally believe, and a lot of us don't believe, that there will ever be a ban. But this is just a work in motion. So we will definitely see regulation, and they'll definitely be positive. But I think until then, we all have to fight for it. We all have to do what we are doing,
And I think one more thing that can add a lot of value is that if we have these startups, coming up which utilize blockchains in building consumer applications, and then government knows that okay, these are millions of users who are using, if not like millions, at least 1 million users which are using various blockchain enabled applications. And that's why like companies like us are promoting startups which actually add value to the governance related use cases, where they are actually adding using blockchains to provide transparency and the immutability and all those benefits of the blockchain, openness and everything. And our current government is very receptive of those things.
Yeah, like, I agree with that, because I used to work in enterprise blockchain, and there are all the IT services companies have tons and tons of enterprise blockchain developers, just not that much going on the public blockchain space, and that's what needs to change. So last question before we close, what is the one thing that each one of you plans to do to change the picture in India towards a much more favorable environment for crypto?
I think getting SRO in place from our side would be one big thing that we need to do, because, and again, I would repeat, blockchain is not the problem, technology is not the problem, is the private cryptocurrencies is where the government doesn't like, they don't have a comfort. So we need to fix that.
From our side, representation to the government and bringing the example from what Singapore has done, what Japan, Mexico, Philippines, everybody else is doing. And like you rightly said, Ajit, asking them, these examples are 2 or 3 years old, where things have been active, live, and learn from that and decide the strategy for India.
For us, our objective is, I would say just make it a $1 billion company. The more value you create, no one's going to destroy it. So just going for that.
Fully agree with Nishchal also. So our goal is also to bring in like first get these startups to build like really solid end user blockchain applications and make $1 billion startups from there, and also bring in existing $1 billion IT companies into the blockchain. So recently Infosys like joined Matic Network as one of the validators and everything, and we are trying to build more and more such organizations, large Indian organizations, onto the blockchain landscape.
Thank you so much for your inspiring words and truly impressive vision and plans. It's an honor and a privilege to host you guys. And I'm sorry we only have 20 minutes today, but hopefully we'll meet again for a longer conversation. Thank you so much for joining us.
Thanks, Ajit.
Thank you.
Bye. Bye.
Bye.
Great. Thank you to all our amazing panelists for the in-depth discussion around the unique challenges and opportunities in India. Next, we have a special keynote presentation prepared by the best-selling author of The Blockchain Revolution and executive chairman of the Blockchain Research Institute.
Please welcome Don Tapscott for his presentation and Helen Hai for the later fireside chat.
Well, thanks very much. And I'm delighted to be here, as it were, today. The Blockchain Research Institute has a great relationship with Binance. And in fact, I'm the honorary dean of the Binance Blockchain Institute in China as well. And I know that power corrupts and PowerPoint corrupts absolutely, but I would like to put a deck up on the screen and take you through a few big ideas having to do with the current situation around the global pandemic. First of all, I'll just say a word about where I am right now. I'm in Canada, and I've been with my extended family up here in our lake house for a while. If you're going to be stuck somewhere, I guess this is a pretty good place to be stuck. But the pandemic has created a truly extraordinary situation in the world. The economic costs are staggering, the human costs are incalculable. And it's causing us to re-examine many of our leaders, institutions, and even systems. And hopefully there will be some good and some change that comes about from this. The pandemic has a lot to do with data or lack of it. Our supply chains have failed us terribly. How can it be that we can't get a paper mask to a frontline worker? And there are many, many other challenges that fortunately are addressed by this new generation of blockchain technology. So let me start by just giving you a little personal history on this and how I came to this conclusion. Some of you may know, I wrote a couple of books in the 1980s that nobody read. I think my mother bought most of the copies. And I was asked 20 years, I finally wrote bestsellers in the 90s, The Paradigm Shift in 1993, which was obviously a big book, and The Digital Economy in 1994. It was the first bestseller about the web. And 20 years later, I was asked to write the anniversary edition of The Digital Economy. And I had to reflect on what's happened. And it occurred to me that we've gone from a first era of the digital age with mainframes, mini computers, PCs, the internet, the web, social media, the cloud, big data, and that we're entering a second era where we have technology that learns to do things that it wasn't programmed to do. Technology infusing itself into the physical world, billions and trillions of inert objects have become smart communicating devices, soon not just communicating, but doing transactions, and other extraordinary technologies. And I came to the conclusion that the foundational technology for all of this second era was in fact blockchain. And to us, it represents the second era of the internet. And this is important on when we think about public health. What is blockchain and what does it represent? You see, for 40 years, we've had an internet of information. But when I send you some information, a PDF of this deck, an email, photograph, I'm actually not sending you the information, I'm sending you a copy. And that works great for information. But when it comes to assets, the things that really matter in our economies and in our society, things like money or security, stocks, bonds, contracts, deeds, um, uh, land titles, uh, assets representing energy or the data in our identities, or other assets like art or music. When it comes to assets, sending a copy is a bad idea. You don't want someone copying your identity or your vote. And if I send you $1,000, it's really important that I don't still have the money, right? So for for decades or years, cryptographers have called this the double spend problem. And the way that we manage this problem in our economy is through intermediaries, banks, governments, um, transfer agents, escrow agents, stock exchanges, social media companies, and others perform all of the business and transaction logic for every type of commerce. They identify the assets, they identify the parties, they clear and settle transactions, and overall they've done a good job, but there are growing problems. The last panel referred to some of these. I mean, they exclude a couple of billion people from the global economy. They slow things down. You talked about remittances. Why does it take 4 to 7 days from money sent from a doctor in Toronto to his mother in Shanghai? And why is he charged 10 to 20% for that? They capture our data, and that means that we can't use the data to plan our lives. We can't monetize the data, and our privacy is being undermined. And overall, they're centralized systems. That means that they can be hacked. There are two types of these systems that these things run on, those that have been hacked and those that will be hacked. So what if there were not just an internet of information? What if there were an internet of value, some kind of vast global distributed ledger where anything of value from money to securities to music could be managed, stored, transacted in a secure and private way? That's what Satoshi cracked. In 2008, he wrote this paper that broke the double spend problem. And it was the biggest innovation in computer science in a generation to me. And for the first time ever in human history, people can manage and store and transact with value, with assets, peer to peer. And trust is not achieved by an intermediary, it's achieved by cryptography and collaboration and some clever code, which is why we call it the trust protocol. Trust is native to the medium. Internet of information going to an internet of value. Now, I've said that this is more secure. I had a great analogy, I thought, for explaining that. But on late night American television, there's a very popular show with a guy named John Oliver, and he did a whole show on blockchain where he had some fun with my analogy. So I'm going to show that to you now.
Process the network uses to verify records, it is very secure. Now relax. I'm not going to get into what that process is or how it works, but I will share a really helpful, really dumb metaphor for why it is safe.
The way I like to think of it is that a blockchain is a highly processed thing, sort of like a chicken McNugget. And if you wanted to hack it, it'd be like turning a chicken McNugget back into a chicken. Now, someday someone will be able to do that, but for now, it's going to be tough.
Hold on. That is an absolutely horrible thought. So why is that reporter so happy about the idea? Because if anyone ever figures out how to turn a chicken McNugget back into a chicken, that chicken is going to be up. He's going to spend the rest of his life suffering from PTSD and writing haunting poetry about the experience. The things I saw, buck, buckaw. My body is whole, but what of my soul?
My body is whole, but what of my soul? Anyway, you can see why I don't use the analogy anymore. I still think it's a good analogy. So 5 years ago, I got lucky with the timing on this book and with my co-author. Did become the big bestseller on blockchain. The publisher says it sold more copies than all other books on the topic combined. And it's now in 20 languages, including in short form and long form Chinese. I also got lucky with my co-author, who turns out is my son, who turns out is brilliant. And he's a better writer than I am. So based on that, we created the Blockchain Research Institute. And this gets us into public health because we're investigating 110 projects on opportunities and strategies in many industries and creating close to 400 deliverables for our clients. These are some of the largest companies in the world and governments that are transitioning to enterprise blockchain. And one of the topics is blockchain for good. And there are all kinds of opportunities here, of course, that we can use blockchain for financial inclusion to instantly bring these people into the global economy. 70% of the land titles in the world are not enforceable, and blockchain can solve that problem. You mentioned remittances. Western Union shouldn't be charging 10 to 20% to send money from one country to another. There are many, many other opportunities. So what I'm going to talk about today is public health. Now, each of these is a 1 hour speech, and I'd be happy to spend 8 hours here if you'd like, but I think we'll just focus on public health. The pandemic. Well, there are a lot of different players involved here. We have the manufacturers of things like ventilators. There are the wholesalers that sell this stuff as part of a supply chain. Pharmacies have deal with patients and try and avoid drug interactions and medical records. Medical facilities are brimming with all this technology that needs to communicate and share information, and insurance companies are having a tough time. So let's focus in on a few of the subtopics here. First of all, supply chain. Our supply chains have failed us. We have hoarding for things as simple as toilet paper. And how do you know that a ventilator is a valid ventilator that comes from a certified facility? Well, blockchain will become the new supply chain. You think about it. This is a $50 trillion business that's about to be transformed. And in a supply chain, it's a complicated thing. If you have it, whatever it is, it came from a supply chain. And you've got trains and boats and planes and trucks and all kinds of various manufacturers and sub manufacturers and all kinds of borders and tax authorities and escrow agents and information's flying around using traditional EDI and ERP systems. You got faxes and email and paper. One of our colleagues at FedEx, an executive, said that the reason often that they know what's in a railway car is there's a piece of paper inside the car when you open the door up in a little envelope. Now, all of this is moving around. There are delays, there are lawyers, there are errors everywhere. Imagine if all of that were a shared network state, a single version of the truth, real-time transactions. There would be no payment and settlement delay of 2 to 3 days because the payment and the settlement is the same activity. It's just a change to the ledger. So this is a huge opportunity to create just-in-time supply chain solutions. And there are a number of opportunities that we've explored here in our research on blockchain and pandemics. First of all, we can better track the procuring of medical supplies. And there certainly would be no such thing as hoarding, because overall, why do people hoard? Well, they hoard because they have fear and lack of transparency in a supply chain. But you're not going to buy 3 years of toilet paper if you know that the supply chain is perfectly capable of delivering toilet paper to you. Now that's toilet paper, and the same is true overall for medical supplies. You can know the authenticity of these various medical assets. We can transform logistics, transport, and custody. You know, I was on stage with Fred Smith, who's the CEO, pretty much the founder of FedEx. And this was the opening session of Consensus a couple of years ago in New York. There were like 4,000 people in the audience. It's a little confusing because there were 4,000 people trying to get in the room anyway. But he said to me, we at FedEx reinvented the whole concept of the chain of custody. And now we want to do it again around blockchain. And we're just not, we're going to know a lot more about where something is. We're going to know how it is and when it is and what's in it and so on. And then we have all kinds of opportunities for blockchain and additive manufacturing on medical supplies as well. So there's a company called Moog, like the Moog synthesizer, not the same guy. It's actually his brother. And they create precision aircraft parts. And what they've done is they used to manufacture a part and then ship it out to, say, Boeing or Airbus. Now they 3D print the part in right in the Boeing's factory, and they use blockchain to be able to handle all of this. They've now moved into medical supplies that can 3D print medical supplies on site. So there are huge opportunities having to do with supply chains. I'm very pleased to announce that I've produced a new book here with my colleagues at the Blockchain Research Institute on the supply chain revolution. I just noticed on Amazon.com, it's now shipping, and it's the #1 new release in the commerce category on Amazon. So we're very pleased. Do pick up a copy. All right, the second problem has to do with health data. And this is a broader problem that we have in society about data, that our data is created by us. And the virtual you may know more about you than you do. The virtual you, you don't know where you were a year ago or what you spent or what you said or what diagnosis you had or what medication you took or what your temperature was or whether or not you were coughing or what you got on a test. Dozens of categories of data. You create this data, but it's captured by other institutions, banks, social insurance companies, governments, social media companies, and even in by big medical providers. And it means that you can't use the data to plan your life. But the bigger problem in a pandemic means that all these data are in silos. And so we can't aggregate this data to understand something. And imagine if we had a self-sovereign health record on a blockchain. It's in a black box and it moves around with you, and it's part of your self-sovereign identity. So the state in a crisis like this could mandate the availability of civilian data and critical health information. It could be anonymized. You don't necessarily have to have personal identifiers with that data, but maybe if the crisis is terrible, as it is in many countries now, you actually want to know about individual people and that they're moving around. But even then, you don't need to identify the person. You just need to know that this person is authorized to enter this facility, or this person is authorized to be able to, to perform a certain medical procedure or something like that. But you could have this anonymized data for epidemiologists and so on. But civilians could control their digital identities to provide pertinent health information. So you walk into a hospital and you reveal all of your medical information, regardless of where you are. And then we could have incentive systems to make our individual healthcare data available to appropriate clinicians and government planners. And the data could represent an entire population. So think about it. We've all got devices that are tracking our heart rate, and soon it could be our temperature, whether or not we're coughing or something like that. This data could be captured by our health record that sweeps up all this transactional and other data, health data, as we move along through societies. And the day that there's something out of order in a country, there seems to be a growth in people with certain kinds of temperatures and certain kinds of conditions and symptoms in a certain part. We could get all over it and have early warning systems to be able to stop it. And then, of course, once you're immunized, you've had a vaccination, or perhaps you have antibodies and they're shown to be effective. You could have a health certification attached to an individual's digital identity. This could solve the big problems. We could have our cake and eat it too. We can have the data that we need to have good health, but on the other hand, we can protect our privacy and rights as citizens. Now, how do we get the population to do the right thing, to behave properly in a situation like this? Well, there are two approaches, basically. One is you have the state force it, and that's happening in lots of places, including in Canada. It's inappropriate. You enter a public building in Canada, you got to wear a mask. That's the law, and sometimes that makes sense. But there's another thing that we can build into these systems, that people do the right thing. They act with integrity and they take care of themselves and others. You know, integrity is the foundation of trust, and integrity is about doing the right thing. It's about being considerate of the interests of the other party and abiding by your commitments. So we could tokenize all kinds of value to create incentives for good behavior. I'm involved in a company right now called carbonx.ca, where we're tokenizing carbon credits. And the goal is to change the behavior of billions of people in the world to attack the climate change problem. How do we get the right skills and talent into medical facilities? Well, it turns out that blockchain is critical for that too, around licensing and staffing, licensing of issuing medical certifications on a blockchain, and staffing, deploying the global, building a medical talent marketplace. And in our work, which is now available to all of you on this topic, we show how a global marketplace for medical talent can be created. And the final one is, how do we sustain the economy in a pandemic, and how do we come out of this? What happens when this blows over? And hopefully it will. Well, there are lots of things that can be done, but one of them is that we need digital cash. It turns out that money, cash, is not just the basis of organized crime, the drug industry, tax evasion, and all kinds of other problems. Cash is dirty and it carries viruses. Now, there are three types of these cash. There's self-organizing digital cash like Bitcoin. There's corporate digital cash or money like Facebook's Libra. And if Facebook can get away with Libra, and that's a big if, they'll roll that out across 2 billion people and they'll become the largest bank in the world by an order of magnitude. And then there's state-based cash as well, central bank digital currencies. And this is happening today. Money is becoming digital, not like we have today with Visa or WePay or any of these things. That's not digital money. Those are computer systems that represent money. This is actual money. And China, of course, is one of the leaders here. I was in China. The last time I was in China, it was a huge event. I was introduced by the vice chairman of the Central Committee of the Chinese Communist Party, and he gave greetings from Xi Jinping, who talked about the importance of blockchain and AI as two critical technologies to move forward. And China moving forward with its central bank digital currency would immediately cause a lot of disruption in the world. One of the things it would do is they would roll that out across One Belt, One Road into Africa, Southeast Asia, and it would threaten the supremacy of the dollar as the currency of record. It's an article by my co-author, Alex Tapscott, talking about this topic. So Mark Carney is proposing, the former head of the Bank of England, is proposing a global digital currency called he refers to it as a synthetic hegemonic digital currency, where all of these national currencies like the digital dollar and the digital pound and the digital euro and the yen, the RMB, and so on, would be rolled up into this synthetic currency. This topic is explored in some length in a new book by my co-author, Alex Tapscott. It's called The Financial Services Revolution. This is a gorgeous book, and he's written the first major section of this book. And if the top of your head doesn't explode when you read this, I'll be surprised. But it's a very profound look at this coming battle for money that's happening in the world and what that means. So that's the first thing we can do is move towards digital cash. There are all kinds of other things as well. Supply chain finance is a huge opportunity where we start to, and trade finance as well is pretty much moving to a blockchain with all of our major clients. We're doing a lot of work on the topic of insurance and risk management. There are huge opportunities here. And of course, blockchain is leading to the transformation of the deep structure and architecture of the firm. Companies are going to become more decentralized and more distributed. And this is a good thing because companies that embrace this technology are higher performance, they have lower costs, they're able to create better value for customers. And that's why we're very focused on the enterprise space because this is the new operating system for the enterprise of the future. So, to the extent that an economy embraces this technology, they'll do well. So, these are 5 areas where blockchain can help in a pandemic. And they're a subset of the work that we're doing on blockchain and public health. Um, you can go to blockchainresearchinstitute.com. And also, I'm pleased to say that this report on blockchain and pandemics, a very significant report. We not only made that available to the public, but we granted rights to Binance to translate this report into Chinese, and they're making it available across China. And it's our intention that people around the world will read this report so that we can help stop this pandemic now, because it's just getting started in some places like the United States. We're not in a second wave in the United States, we're just starting. But also that we can prevent these things with early warning systems in the future. Let me close with a couple of thoughts, then I look forward to a conversation with Helen. There are some challenges. Some areas this is moving very quickly, other areas a little more slowly. And there's a reason for that, is that with the Internet of Information, you just put up a website, 24 hours, you're in business. With the Internet of Value, we're talking about transforming a $50 trillion supply chain industry, transforming the financial industry. It's a multi-$100 trillion industry around the world. This is the biggest transformation of assets from physical to digital. That's what crypto represents. We're digitizing the assets of the world. And this is going to take a while for this to occur. There are big problems with scalability and interoperability, and companies like Binance, of course, are working hard on solving these problems. And there are exciting new platforms like Cosmos, the Internet of Blockchains, powerful technology. We've got even traditional um, permission systems like Hyperledger have embraced Besu and are launching initiatives to try and get integration. And interoperability is important because it means that there can also be scalability as blockchains interoperate. Blockchain has an image problem, and we're spending a lot of time working on that. Some of it's false. I mean, the association of blockchain with criminals and of crypto with criminals is really not a valid one. Criminals are always the first to adopt exciting new technologies, from the automobile to the flip phone. But and sure, maybe up to 1% of Bitcoin transactions are used for nefarious purposes, but we estimate over 3% of cash is used by criminals. And in fact, law enforcement loves crypto, real smart ones, because if you and I do a transaction, that's anonymous. But of course, there's proper KYC and AML that needs to be done for the transaction, but it's anonymous. But there's metadata that can help law enforcement agencies. And then the other one is that we have a big problem with our regulation environments. In most countries, we have this whole set of regulatory structures that exist for an old world of assets and an old world of finance. And this is hurting companies. And it's hurting economies all around the world. And we're working hard with regulators globally to try and fix this problem. You know, you have legacy attitudes about things. I mean, Jamie Dimon said Bitcoin's a fraud. He subsequently changed his point of view on that as he realized they're doing a lot with Bitcoin. But, leaders of old paradigms have great difficulty embracing the new. I'm old enough to remember Ken Olsen, the CEO of Digital Equipment Corporation, which is almost the largest computer company in the world in the 1970s. He said in 1977, there's no reason for any individual to have a computer in his home. Well, famous last words, and the company's now gone. So let me speak to you in closing about leadership. Paradigm shifts involve dislocation, conflict. This is a new paradigm, a new mental model. And they put boundaries around things. They constrain our actions. They're often based on assumptions that are so strong, we don't know that they're there. And new paradigms are received with coolness, even mockery or hostility. And vested interests fight against change. So, how are we going to find the leadership for change? Well, everyone has a role. And of course, those of you who are attending this wonderful third anniversary of Binance have self-selected as companies who have something to say. At the Blockchain Research Institute, this is our goal, to make this technology mainstream globally and to help companies that want to do that succeed. There's a big potential and there's a gap between deployment, and that's our role, is to fill that. I wanted to tell you about a couple of the big things that we're doing. We have the world's largest courses on blockchain, and they're on Coursera, the largest provider of online education, at least in the English language, and through INSEAD, one of the top 2 or 3 business schools in the world, often number 1, according to the FT. And you can get a 25% off these courses. We spent almost $1 million developing them by going to Coursera.org/promo/blockchain revolution. I'll give you a second to take a picture of that screen. Go there and register. And I'm very proud of these courses. We're also holding the biggest events in the world on blockchain in the enterprise. And our hybrid event, which will be online, but also a physical event, will be occurring in Toronto, October 29th and 30th. And this will look a lot like a TV show, highly produced. And we sort of proved that we can do this last week when on July 7th, we created the Enterprise Blockchain Awards. And we did this with hologram technology. And we beamed the presenters onto a beautiful multi-million-dollar stage, which is actually a digital stage. And it's just an example of how we can do stuff in this new environment. And we're determined to change the world here at the BRI. And we're out around speaking in front of the largest audiences in the world, and we'll be doing that again starting up in the fall and next year. Some of these are huge. This was 29,000 people. I was the opening speaker. Barack Obama was the closer. So let me just end with a thought. Can you do this? Can we transform public health for the better? Well, my view is the future is not something to be predicted. The future is something to be achieved. And we can achieve a different future if we want. To close, I'd like to use an analogy. At the BRI, we've been studying nature to learn more about distributed systems. And fish come in schools, bees come in swarms. Starlings over the moors of England come in something called a murmuration. And the murmuration is a word in the dictionary. Starlings are out over a 30-kilometer radius during the day, and at night, they create one of the most extraordinary things in all of nature. And the murmuration has a function. It warms the birds up for the cold night ahead, and it protects the birds from predators. On the right of the screen here, you can see a predator, a hawk, 25 times the size of a starling being chased away by the collective power of the little birds. Scientists that have studied this say they've never seen an accident. And there's leadership, but there's no one leader. And when the moment is right, magic happens. Now, is this some kind of fanciful analogy, or could we learn something from it? Well, the murmuration functions according to the principles of the trust protocol, and it's the implicit principles in what I've told you today. It's a giant collaboration. Remember, I said trust is not achieved by a middleman. It's achieved by collaboration, cryptography, and code. There's code in the DNA of the birds that gives it rules. A big rule is don't get too far away, but another rule is don't bump into anybody else. And the murmuration also has a great interdependence. If I'm speaking to a CEO audience, I say that business can't succeed in a world that's failing. And the murmuration functions as if the interests of the individual birds are connected to the murmuration as a whole. And overall, the murmuration has a great integrity. And integrity is really the foundation of trust, because trust is the expectation that the other party will do the right thing. Trust is the expectation that the other party will act with integrity.
Some things for us to take away. And now I'd like to introduce Helen Hai, head of Binance Charity, who will be joining Dawn for a fireside chat on pandemics, public health, and the blockchain revolution.
Hi, everyone.
Hello, Helen. I'm sorry. It seems that I got cut off, so, but I am here.
So Don, what a brilliant presentation. It's a great honor actually to have this fair chat with you. Let me ask you a question. Can you name top 3 industries that blockchain will transform? And can you give us concrete examples in those top 3 industries from your knowledge?
Well, the first one that people normally think of, and it's fair enough, is the financial services industry. And and as I said, this is a multi-hundred-trillion-dollar industry, and assets are becoming digitized. So there are various parts of that industry that are already dominated by blockchain. You have companies like Gartner Group who say, well, blockchain's not really a big deal. It's just going to be an add-on to ERP or CRM, but they're wrong. So in the financial services industry, trade finance, for example, is basically moving to blockchain. One Belt, One Road, the largest supply chain in the world, the trade finance on that platform is done through blockchain technology. We've got venture capital. You know, in the book 5 years ago, we said that venture capital will be disrupted in a decade. Venture capital was disrupted 2 years ago, where you have token generation events that have raised tens of billions of dollars and that have given people outside of the traditional financial power structure the ability to raise money for entrepreneurs. We're working with insurance companies that are embracing blockchain for all kinds of things because you can know the provenance of assets. So that industry is being changed profoundly. I focused on health today, Helen, because I think that this is a big one as well, that it could be the killer app for blockchain because we all care about our health and we have the irresistible force of pressures to control healthcare costs, meeting up with the immovable object of public expectations that our healthcare should be better, not worse, that we should have better ability to fight pandemics and so on. And in organizations like here in Canada, Toronto, the University Health Network is using blockchain for patient records, initially to enable patients to be able to give permission to researchers to use their health data under certain conditions, but the control remains with the patient. And then beyond that, it's really hard to say. You know, the blockchain oil and gas consortium, representing all the big oil companies in the Western world, has just joined the Blockchain Research Institute. And one of their CEOs told me recently that they believe blockchain is ready for prime time in upstream oil and gas. This is the reinvention of one of the most important industries in our economy. So it's just not true that nothing's happening.
Fantastic. And Don, you know, all you said, we actually love the government to hear because actually today the government is still holding a lot of powers, you know, in the world we are still in. So can you tell us, in your opinion, if people really interested in blockchain and crypto, where are the leading countries and in the regions, in the world of blockchain innovation, where would they come to?
Well, this is a really important issue. Think about it, that if the internet of information was based in Silicon Valley, where's the internet of value going to be based? Now, it won't just be one location, but if you can build a big blockchain ecosystem in a city or region, this is called jobs, innovation, economic development, capital flowing into that area. It's called tax revenue, social stability, and so on. So the stakes are very, very high here. And it's not going to be Silicon Valley because leaders of old paradigms have difficulty embracing the new. So at the Blockchain Research Institute, we actually track the top 15 cities. And I'll tell you that China has 5 of them.
Wow.
And I think it has to do with so you're the only country in the world that has a head of state who's saying this is critical technology for our future. Now, it doesn't mean everything is perfect in China, and there's much to be done. But you know, we're working with Hainan that has just created been granted by the federal government to be the global the Chinese Center for Blockchain pilots. You've got Shanghai, Beijing, Shenzhen, obviously, Hangzhou, Guangzhou. These are all areas that there's a lot going on. Now, there are other important areas that are surprising. Switzerland, because in Zug and now in Geneva, the government regulatory environment encourages this kind of stuff to occur. And in Europe, there are important developments now in Berlin, activities starting to be a big deal in Paris. And in North America, Toronto and New York are 2 huge centers.
Fantastic. And Don, actually, we are very thrilled you joined forces with Binance and also become the chairman of the China Blockchain Academy. And clearly, we intend to facilitate and provide government and enterprise education in blockchain. What are the user cases for government And what are you foreseeing coming up?
Well, one of the biggest users will be government. And 1993, a book came out called Reinventing Government that called for better, cheaper government. 1995, Al Gore in the US wrote this big paper called Reinventing Government. And the internet was supposed to transform government. I don't think it did. A lot of governments just use the internet of information to automate existing government processes. But now we have an internet of values that deals with assets. You know, governments have the biggest supply chains in the world. In some countries, the state runs all kinds of important things in the economy, like healthcare. We've got transportation and logistics, all that will be transformed by blockchain. And then, of course, a really big one, Helen, that I mentioned is central bank digital currencies. The countries that move most quickly on this will get huge benefits. They'll give central bankers the ability to manage the economy much better. You put money into the money supply, you can see what happens to it. Are people investing? Are they saving? Are they spending more? You know, you have a crisis like today. The United States is having a terrible time making payments to citizens. The Canadian government spent $1 billion just trying to develop a payment system for its own employees, and the whole thing failed. Well, how do you pay an entire population? With blockchain, you could helicopter drop emergency funds onto the mobile devices of an entire population. So governments could have a lighter touch on regulation with central bank digital currencies and so on. And this is the huge topic for us. And it's our work is being led by Alex Tapscott, who's one of the world's leaders in this area. And if people go to Blockchain Research Institute, they can learn more about this. And hopefully soon, they'll learn more about it through the Binance Blockchain Academy too, as our partnership grows.
That's fantastic. You know, Don, Steve Jobs once said, innovation distinguish leaders and followers. Right now at Binance, we believe we're actually leaders and shapers of the industry in the fronting line, drive the technology, looking for application. So what kind of advice you would give actually to all of us and also our product team, our tech team? What kind of things we can support blockchain to be more fruitful? I mean, how we can overcome some of what's the key bottlenecks we should actually challenge right now?
Well, I'd like to, that sounds like a consulting assignment. No, I know Binance pretty well. And of course I use it, have always used it. This is an extraordinary company. When you announce you're having your 3rd year anniversary, I was like, 3 years? Is that all it's been? And you have this huge juggernaut powerhouse that dominates a certain part of this market. But my view, of course, is that you've created a platform and a skill set to be able to provide leadership in many, many other areas in the world. I know you've used a term that I think is a good one, that in some ways you could be the sort of Amazon of the internet of value. You could be helping enterprises, because our big enterprises need help. They need the kind of engineering skills and sophistication to be able to transform their businesses. And Helen, I know you run Binance Charity. Binance could be a leader in blockchain for good, in helping solve many of these huge problems, from climate change, land titles, financial inclusion, discrimination, conflict, all kinds of big problems can be solved through blockchain. And that can not only do good in the world, but Binance could do well by doing good, in that this could be of enormous commercial value to the company. So you're at one of those turning points, really. You know, do you want to, your little jewelry company, do you want to become the Louis Vuitton global conglomerate that deals with all kinds of upscale items? Would be an analogy. And I think that there's no reason that Binance can't do that if you will it.
That's great. Thank you, Don and Helen. We'd love to chat more, but we've got to present our Binance Philanthropist of the Year award, as well as our Binance Influencer Award for the APAC region. It's a really exciting one for us because 100% of the Influencer Award nominees and final winners were selected by our own community. So thank you to everyone who participated.
The Philanthropist of the Year award goes to our committed partners who work with us to advance global sustainable development and combat world hunger and disease.
Philanthropy is something at the heart of human greatness. Today, the top 3 nominees are partners who contributed the most to our charity project, while Binance Blockchain Charity Foundation platform. Each of the partners deserves some great special recognition.
Indeed, it was a tough decision, but our judges based their decisions on a few factors: the project engagement frequency, impact on global sustainable development, and the total number of votes received in a poll on the official Binance Charity Twitter account. Now, here are the nominees. Okay.
There are our nominees. First up, we have Ripple.
Wrong. Crypto.com.
Congratulations, Paul.
Philanthropy is not about money. It's about the feeling and pain of the others and caring enough about their need to help.
Hi,
Therefore, I'm
Justin
thrilled to
Sang.
present.
Thank you and Binance Charity Foundation so much for giving Trung Binance Philanthropist of the Year 2020 award. I believe philanthropy is not just a word. It's passion, it's dedication. It's something from the bottom of your heart. That's why I choose the best of our leader, Binance, to enable blockchain technology accessible for philanthropy in the world. Thank you so much and see you next year.
Thank you, Justin. Albert Einstein once said, "Only a life lived for others is a life worthwhile." We really hope more partners will join us in our quest to help the most vulnerable people in the society using the blockchain technology and make the world a better place. Congratulations once again to Trung Foundation.
Fantastic. And now comes the time to review this year's community chosen APAC regional winner for the Binance Influencer Award. As we all know, APAC includes a ton of booming crypto markets, so we're excited to recognize the pioneers on the ground.
I heard some countries made a really strong showing for their influencers. So let's see who received the highest number of votes from verified Binance users. Now, here are the nominees.
First up, we have Kasif Raza from India.
Next, we have
Peter Singh, also from India. Deep Juhari from India.
Congratulations.
Hey guys, I would like to thank everybody who voted for us, and I would like to thank Binance as well for hosting these awards and recognizing influencers in India, because situation in India has been really skeptical from last 2 years when it comes to cryptocurrency. So we have been trying to do our bit to spread right awareness and adoption in India. So this award really means a lot. So thank you to everybody who voted for us, and thank you to Binance for hosting these awards.
Thank you. We never know which lives we influence and when and why, but we should never underestimate the influence we have on others. Therefore, congratulations, Aditya. We're excited to see more and more influencers join the Binance family, because it's about making others better as a result of our presence, and also the impact lasts in our absence. Last but not least, the key of successful leadership today is influence, not authority.
It's now our pleasure. It's now our pleasure.
I was just going to say thanks again, everyone, for joining us for these sessions. So we had some really great speakers, really great participants, lots of interesting insights coming out of this. And we look forward to having you guys join us for the next upcoming ones.
It's now our pleasure to introduce your MCs for the Africa and Middle East segment of our event.
Thanks, Hazel. Thanks, Min. Hi, everyone. Thanks for staying with us for another session of the Binance Off the Charts Virtual Conference. It's a pleasure to present another great round of panels and discussions. My name is Dami Odufua, and I'll be your co-host for the Africa and Middle East segment of our event today, and alongside my colleague, Omar Rahim. Hi, Omar.
Hey, Dami, how's it going? Good to see everyone. So yeah, we've already seen some fantastic content today. I'm sure some of you have been tuned in for a while, and we've got some excellent content for you coming up. So we'll be announcing 2 new Binance awards as well. So we have the Binance Chain Wallet of the Year award, and again, we have an Influencer of the Year award for Africa. Also, and I think many people know this already, but we have a very special guest joining us. I don't know who's the bigger draw here. Was it CZ or was it Akon? It seems to be half the people joined for Akon and maybe half for CZ. So we've got that coming up as well.
That's right, Uva. So the team has been working really hard and putting together some of the industry's leading minds to discuss some really important topics pertinent to the African industry. We'll cover crypto regulation in Africa, crypto adoption in Africa and the Middle East, blockchain technology, and so much more. And there's also going to be an insightful panel on DeFi and fintech ecosystem in Turkey.
Yeah, absolutely. And I think we've seen that a few times in the different regions today. The whole DeFi seems to be the buzzword for 2020 within crypto. It seems to be where all the chatter is in the industry so far. So I'd be really interested to hear that, particularly from the content in Turkey, which is in the Turkish language in one of our streams. So in addition to that, we also have 2 more NFT giveaways. I know we've been doing that throughout the conference. So throughout the event today, we've got the chance to win limited edition prizes. But before we kick off the panels of content, we do have an update for our community specifically on the MENA region. So we'd like to welcome at this juncture Jin, who's our Chief Strategy Officer. Jin.
Hi, Jin.
Hi, Dami. Hey, Omar. Thanks for having me.
No problem.
Yep. As you guys know, Africa and the Middle East are becoming increasingly important regions in our space. And Omar, again, I'd like to welcome you to the Binance family as you lead the MENA region with a number of growth initiatives that we have planned for this year.
Yeah, really excited to be here. I think, you know, the energy and the kind of the passion that the team have for pushing this freedom of money argument within crypto worldwide is just super exciting. So, and I guess the Middle East and North Africa are no different in that regard.
Yeah, absolutely. I had a chance to visit a couple of larger markets in the region last year at a couple of conferences, and having a chance to engage the community, local community there, you can really see that they're quite forward-leaning, and not only just the user community, but also the local government has been applying blockchain technology in a number of public services, and now we're seeing a lot more clarity from regulators with a path forward.
Yeah, I think that's an important point. I think we're really starting to see that. So, we went from a situation where initially there was a lot of skepticism, and largely that was due to a kind of a lack of information out there. But we're definitely seeing that move towards government and regulators welcoming it. And I think it was covered on the previous panel as well, on how can we make this technology kind of work for us. I mean, I've traveled in the region extensively, and when I'm speaking to whether it be banks or regulators, very rarely do you hear anyone say they don't believe in this technology. What they're perhaps not sure about is, how is this technology going to happen, and when are we going to see this big impact? So you've started to see a real kind of fundamental shift. And from the Binance perspective and what we're looking to do in the Middle East and North African region, absolutely, we're looking to sort of engage with governments and regulators and figure out what sort of works best for our community. And I think it's fair to say that's what sort of has led to Binance's push into the region, has been, as it always has been in Binance's short history, has been that sort of consumer demand. Our community in the Middle East and North Africa have been tracking our progress, and we're really keen to provide sort of tailored solutions for that market.
Yeah, I think, and we happen to be in a very good position there. While we haven't until recently begun planning for dedicated resources in the area, we have been lucky enough to be in a pretty good leadership role in a number of countries in the region. The brand has gotten out there, the users have embraced us. So I think now it's really the time to sort of invest in the resources we need to build out the infrastructure there, kind of grow and evolve the market. And I also think that region, having a few fairly sophisticated financial centers, is actually a good way to or at least a good environment in which we can see some pretty interesting innovation, not just locally and natively, but hopefully applicable to other parts of the world as well.
Yeah, absolutely. And you hear this term glocal, and often it can be corporate speak. But in the case of Binance, with a distributed team and a global operation, I think that's the approach that Binance has always taken, where yes, we're a global company with with that sort of worldwide reach. But one thing that's sort of always been impressed upon me has been that there's a lack of arrogance going into markets. We don't assume that we have all the answers straight away on day one, and we'll always look to tailor solutions to that local market. So I always think of it as a global company, but with kind of local customer service, which I know is sort of our service has always been about, really. The other thing that's worth noting is that, yes, for ease, we refer to MENA as a Middle East and North Africa as one block. In reality, we know there's sort of nuanced differences between those countries, that there are individual countries that have their own needs, whether it be products, services, or sort of attitude towards crypto in those countries. And, we see a lot of parallels with the development of the crypto industry in the MENA region, similar to projects we've previously taken on in, let's say, South America or other parts of Africa, perhaps.
Yep, absolutely. And I think the next step is really to identify and work with those partners to help us expand the suite of services and product offerings, and looking forward to your leadership in a number of those.
Yeah, absolutely. We're really looking forward to listening to the community. I mean, we've had a lot of feedback already on what our community are looking for us to build and provide in the Middle East and North Africa. So we're looking to keep that feedback coming, as well as you say, speaking to partners, whether they be government or private sector partners in the region to support those initiatives. And of course, with the current travel restrictions in place, it's a shame I'm not sort of traveling quite as much as perhaps I would have hoped. But rest assured, hopefully events like this have proved that we can do a lot in the interim with online education. But when travel opens up, certainly I'll be planning to spend a lot of time within the region. And sort of within, to give people a little bit more information on what Binance's plans are in the MENA region, I said that, we do plan on this consultative approach with the community. We really want to find out what's important to you. Probably the best place to go is our Telegram room. The handle is at Binance Arabic. That's our Arabic language Telegram room. And for other inquiries, you can email us at mina@binance.com. Jin, really great of you to join us. Thanks so much for that. And I'm sure the community will be seeing a lot more of you in the coming weeks and months.
Oh, well, thank you. Thanks for having me. And for everyone that's joining, thank you for joining the session. I'm going to stick around and see what's next. Looking forward to it. Thanks, guys.
Perfect. Thanks, Jin.
Awesome. Super excited to see support for these local markets on Binance. More great things to come.
Yeah, I think we've got a really good lineup of content. I'm especially excited about this stream, all bias aside. So yeah, why don't you tell us what's coming up, Demi?
Yeah, so let's get straight into it. I am delighted to introduce our first panel today on the global stage, titled Moving Towards a Cashless Society, How Crypto Revolutionizes Digital. And this is going to be moderated by Christina Corner of Cointelegraph.
Yeah, but just before the panel, we're going to take a 2-minute break and watch a video on Binance's story so far as we celebrate the occasion of our 3rd birthday.
Enjoy.
Binance started as a simple crypto-to-crypto exchange. From the start, we wanted to do things differently by providing robust customer service, acting on user feedback, and continuously improving our offerings. Word quickly spread. Within 5 months, we were the most widely used crypto exchange in the world. From there, we invested our success into growing the ecosystem and making it more collaborative and inclusive by creating platforms to identify and empower other innovative crypto and blockchain projects. These were some of the first steps we took towards increasing the freedom of money for people around the world, an initiative we're still just getting started on. As we neared our first anniversary, we launched our first partner fiat to crypto exchange, bringing digital currency to an underserved market and bridging the worlds of cash and crypto. Weeks later, we launched the first blockchain-powered nonprofit to increase transparency, efficiency, and accountability in charitable giving, as well as 2 free learning centers dedicated to expanding crypto and blockchain knowledge. In 2019, we continued our ecosystem focus, launching the community-driven Binance Chain blockchain and decentralized services, delivering new levels of freedom to our users. Meanwhile, Binance Coin reached number 6 by market cap, one of the highest ever reached by a utility token. And we introduced the Venus project to develop localized stablecoins worldwide, in parallel with a host of fiat initiatives to reduce the barriers of entry to crypto for all users. Along the way, we added new services and features to the Binance Exchange, like margin and futures trading, and savings and staking programs, delivering key requested features to our users. 3 years in, and one thing is clear. At Binance, we're committed to advancing the crypto cause, growing together with our community, and powering the next generation of innovators with open platform initiatives designed to build key crypto infrastructure. We aim to support all popular currencies by the end of the year, providing even more ways for people to access crypto in order to increase the freedom of money for people around the world. So thank you for helping make our vision possible. We can't wait to show you what's next. Let's take crypto off the charts together.
Hi everyone, happy anniversary Binance. Thank you very much for joining us here. So I'm Christina Lucrezia Corner, Managing Editor at Cointelegraph, and I'm very happy to introduce my wonderful co-panelists with whom we will be talking about cashless society, moving towards digital payments with crypto. So first I would like to introduce Sean Rowland, Director of Product at BitPay. Hi, Sean.
Hi, Christina. How are you today?
Oh, great. Thank you. How are you?
Doing good. It's a good morning here in Atlanta, Georgia in the States. So thank you for having me. I'm excited to talk.
Great, thank you. So the next panelist I would like to introduce is Tyler Spalding, co-founder and CEO at Flexa. Hi, Tyler.
Everyone, how you doing? Great to be here. Happy third birthday, Binance.
Where are you based, Tyler?
We're based in New York.
Nice.
So it's been a trying time, needless to say.
Perfect. Out to the Atlantic, guys. Okay. And my wonderful third co-panelist is John Kenneth, COO at Swipe Wallet. Hi, John. John? I lost you in my Zoom. Well, okay, let's first talk a little bit about this incredible recent months, guys. I think that you would agree with me that that was something incredible, unexpected, and totally out of normal. So my question to you is actually how this lockdown, COVID crisis period did impact the digital payment sector. Which opportunities did it give, and also which challenges did it produce for the sector? I don't know, let's start with Sean, maybe.
Sure, appreciate that. Yeah, I mean, starting in late February, March, at least here in the United States, a lot of things changed. No more going into restaurants, no more bars, no more interaction of even swiping your credit card or handing your credit card to someone. That behavior really started changing a lot. And so digital payments, people start getting exposed to this stuff when they go to a store or when they want to buy food and the restaurant says, hey, I can't take that cash, or I'm sorry, we're not going to take that cash, or, hey, do you have Apple Pay maybe, is another kind of pseudo form of digital payment. So I think that, and I'll use the opportunity, the word opportunity lightly here. It's opportunity in a crisis, but it is an opportunity for people to understand and get more exposure to digital payments. That it's still, you look at some of the statistics globally around credit card and e-commerce shopping and in-store payments, people to person is still an insane amount of the global payments. So people still are using cash, they're still using card. And so people start getting used to these digital payments when they can't use the others. So that's probably the big, the opportunity here is just getting the global population more exposed to digital payments and interacting with those.
Tyler, what about you? Which interesting changes and developments did you notice during the last months?
Yeah, I mean, Sean definitely covered it really well. This is going to be, I think it's going to accelerate now digital payments and the technology behind it to just a massive degree. I'd say it's really around two key pieces. The first one is just around cost. A lot of payments can be expensive if you're especially using various payment cards, various hardware terminals, software, all of that. And so, that had existed, but I think it's a greater focus now. When you have some of these retailers really, crunch on looking at their bottom lines and their operational efficiency where, times are tight. They're now even more focusing on payment expense, which in many industries, it can be the second highest operational expense that retailers have. So it's a very large one. And then beyond that, so that's just more of the pure economic reasons. Then also kind of, as Sean mentioned too, on the digital aspect is now you have this more demand for contactless payments and digital payments, whether it's cash or even throughout Europe, they have a much more secure payment card system, but you're still having to type your PIN into now all of these hardware interfaces. And so I can see something like that having a little more resistance or reluctance to using those products now as we think about this, kind of that post-pandemic era.
That's incredible, right? In the sense that we actually didn't expect that this event would come, and it actually helped us a bit to digitalize the community, everything that we were so much longing before, and it happened because of some crisis. And that does mean that actually nothing is only bad. There are always some opportunities that are given by any crisis. And my next question to John actually would be, do we really need to force out cash out of our lives? We already understood that it's it can be contagious during the pandemic. But do we really need to divide it so much between cash and digital payments? And if yes, maybe cash still has a potential to be a tool, a means of payment that is different from digital payments. Sell me digital payments, John.
Sorry. Hello.
Hi, John. We hear you. How are you doing? Where are you now?
I'm here in the Philippines
Oh, wonderful.
right now. Yeah.
So what about digital payments in Philippines? If you compare them to the cash payments during the recent months?
Yeah. From March, starting March this year, our community was under quarantine. So yeah, basically the growth of the digital payment around here in the Philippines really grew. Even the people without bank accounts, they started using simple apps that are used in small transactions when buying food and stuff.
Yeah, that's wonderful. That's so interesting that a problem that united us all actually create a global situation. Yes, a global opportunity for digital payments. Okay, guys, but still, we are united in this situation and lockdown and the COVID-19 crisis. But my question is, how do you approach different communities still? I imagine that you acknowledge that from region to region, there are different approaches to money, to payments. There are unbanked societies. So I don't know, Tyler, maybe you could elaborate a little bit on how your platform and you in particular develop your product in different countries.
Sure. Yeah, I mean, that's like one of my favorite questions almost, because it really gets at this core question of like why crypto matters, right? We're talking on this panel right now of like digital payments and crypto payments. Like a little bit is like, you know, who cares? You know, why is this going to be meaningful? We have cash, we have payment cards, we have all these other instruments, but the reality is like we do have these assets and various communities will have their assets. So it could be even as like more widespread. If let's say you're in Europe and you have a euro note, and maybe you go to Mexico and now you have this value, it's in your pocket, you can exchange this cash, but there isn't going to be any merchant or any business in Mexico that accepts that as native tender to them because they don't want euros, they want pesos. And so now you're stuck at this crossroads where it's like, how is this the problem where you have value, and there's literally no way to create any sort of exchange between those people and actually perform commerce. And so you need some sort of a digital medium for that. And so even if the assets are digital, if you have a digital euro, a digital peso, and you each have a mobile device, well, now there can be some medium of exchange between that, like Binance or something else. That's all that really needs to take place. And now you can actually transact between any community in the world with whatever asset that you have that you find valuable to anyone else or a business or a person that wants a different asset that they find valuable. So at Flexa, that's really what we built, is just a platform that allows us to connect to, you know, merchants big and small with whatever hardware and software they already had. And then any digital asset can go in. So we try to be extremely agnostic to that effect of any wallet, any app, any asset, you can now pay at all of these merchants, you know, real time, no fees, you know, instant confirmation, that sort of thing. And, you know, the merchant is going to get what they're looking for. So they're going to get paid cash of whatever that is and a bank transfer because that's what they want. That's how they pay their bills. But then consumers all around the world can pay with whatever token, whatever asset, whatever community, whatever app they want to use, right? Like the more you try to force people and try to own everything in these app ecosystems, it's not the way that people are. They find value in something, as we obviously can see in the crypto communities with thousands and thousands of tokens and everything else, like people ascribe value to that. And so now enabling that and unlocking it to be usable anywhere is extremely powerful. And then without foreign exchange fees, you know, that's really cool to now be able to take that, spend it in another country, spend it wherever, and not have all these ridiculous fees and timing, and not even that, just fraud. So it's really exciting what this is going to look like.
Yeah, very interesting. Sean, I would like to ask you, do you think that the crypto payments deployment potential is correlating with the tech proficiency of the country, or are these things different? You also, I think it was you who mentioned banks. Like, do you think that we have more potential to use crypto in the societies that are banked, or there is no this correlation?
They're all good questions. So specifically around crypto payments, because when you think of a payment, vast majority of all those are from a person to a business, right? And this kind of talks about to your last question also about how we go in different regions and look at that, and maybe it's tech proficiency, how do the banks play a role? In the end, like financial institutions and banks still are going to continue for a long time, play a large role in payments. Kind of as Tyler was mentioning, a lot of the businesses and merchants, they still want to receive fiat currency because that's just what they're used to. That's what they hold their unit of account in. They have a bank account. That's how they pay people in. So maybe a population might be a little bit more tech proficient or less tech proficient, but in the end, it's the businesses that have to feel comfortable interacting either with these assets on the front end as a user pays them, or on the back end involving a financial institution. So, when you look at the different banks, that's kind of one of our first things when we look at different regions and whatnot, is how are these banks see crypto and digital payments in general? Because it's not just cryptocurrency. Maybe it's, it's mobile minutes, in some of the African regions. How do banks interact with those? Because when banks can interact with those, it's an easier bridge for merchants to be able to go and interact with those, because they need to be able to build credit, access other financial services that right now traditional financial institutions and banks offer. So that's one of the biggest things that we look at regionally, is how are the financial institutions and banks looking at it. And if they're favorable, then we think that region is going to be a favorable place for crypto as just a bridge. There are ways to bypass that, of course, but network effect is a huge part of this entire ecosystem. And right now, banks still have that network effect where everyone is using them. But it will gradually change, and banks will eventually play a different role and will start interacting directly with these digital assets. It's just a matter of time and education, honestly.
I like your optimism, and I like this idea that we should always look into our products through the eyes of others in order to understand how better to be useful to them. John, my next question is to you. Do you think that Bitcoin has been sufficiently acknowledged as a means of payment? There is already a whole lot of discussion behind that, so I give the torch to you. And definitely, what about other cryptos?
Personally, here in our company, Swife, we have created and enabled tools for end users to use Bitcoin sufficiently as a means of payment. But it's more of a store of value. But I believe it is more important to bridge gaps instead. I mean, we need to bridge the existing system of payment and introduce crypto so that people can accept it more wholeheartedly, or they won't get shocked if we immediately introduce a new system of payment. So I think for now, it's a first step.
Okay, guys, what are the next steps, and what are other challenges that are laying now on the way of a broader adoption for crypto as means of payments? Tyler?
Oh man, I think that's a great question. Right after the one around spending Bitcoin, it's actually perfect. It's finding crypto assets that people want to spend. I think is going to be one of the most absolutely critical components of like having this realize the potential that it can have. So maybe Bitcoin becomes that. You know, originally a lot of people were using it as payments. I use it for payments personally, but there's a predominant narrative right now in the store value narrative, which can be a great narrative. And I understand all the components around all of that, and I understand the viewpoints on that. So, you know, assuming that is true, you also have an asset that's, you know, it will go up in price. So it's not really necessarily the best thing to be spendable when you think it's going to be worth a lot more in the future. So that then means, you know, we led into all these other, you know, early Bitcoin forks in 2011 and 2012, and then you start getting to other sorts of chains, and then you had ICO booms and all the other cycles around just crypto. A lot of them are, you know, kind of speculative assets, and people are buying them or using them with the intent of having more money or gaining more money. But now I think there can be, and we have seen a lot of other projects, stable coins being an easy example, that have utility purely in spending. And people are literally looking to now use these as a medium of exchange. And as that starts to happen, I think when people can look at a banking app and it just has a dollar balance or a euro balance or whatever it is, crypto can all be behind the scenes and people don't really even need to know. You know, I think a really, you know, clean example of that is something like Dharma, where it just has a balance, right? And I'd say a lot of people using that app don't have any idea what DAI is, how it's used, you know, they certainly don't understand CDPs and all these other pieces, right? But it's just an easy utility for them. And so I think that's just the tip of the iceberg. And I think it's going to start advancing very, very quickly. And it's, for me, it's also inevitable. It's not inevitable because it's necessarily people really want this. It's inevitable because of the cost efficiencies, the zero fraud, being able to transmit this all over the world, not having to deal with all the intense regulatory complexity, all the huge settlement requirements globally that all these card networks built. They don't have all those components. So it actually ends up being, it could be faster, cheaper, and more valuable to all the participants. So I think it's going to be completely inevitable that this starts to form the backbone of payments technology globally. And to start pushing it there a little bit more on the consumer demand is people just need to have stuff that they literally want to spend, is the short answer to me, in moving there. And without naming specific projects, there are an awful lot of them coming out right now that are branded as this is a currency. This is a you know, it's a stable coin. It's supposed to have this value, whatever it ends up being pegged to. And I see a lot more of those, to where even 2 years ago, there was maybe 1 or 2, and now there's like 20. So it's only getting bigger, and I think a lot of people are finding value in that.
Before we hear Sean's opinion on that, I would like to just add a small element, a rumor, journalistic one. So if PayPal starts accepting crypto, what will happen for you as providers of platforms for digital payments, as well as for the community, for crypto community? Sean, but still the previous question remains, of course.
Sure. Hey, rising tides lift all boats. You know, PayPal is huge, but it is dwarfed by the size of the global payments industry. You know, so if PayPal starts accepting it, like we see it as such a positive thing. Again, PayPal, you know, in different parts of the world is such a ubiquitous payment platform. So when users start seeing, oh, I can pay with this Bitcoin or with this Ether or with this US dollar coin, or, you know, or even a digital yen or yuan. I mean, when they get that exposure to it and they see what it is, they say, what is this? I should go look this up. Oh, these are the benefits that I can have, maybe from holding my own tokens and my own privacy key, or maybe going and using a different solution that provides me access to different financial tools that I can make. Suddenly I can make 3%, you know, when I'm just holding my tokens, and I can immediately spend it. That's one of the nice things about crypto is, and digital payments, is being able to access these different tools, you know, in a much easier way on a global scale. Now, Bitcoin, it still has the brand name. I mean, BitPay does about over $1 billion US dollars in payments per year. 90% of that is still Bitcoin. When you hear the media talk about it, it's Bitcoin. Maybe a little bit Facebook's token that they've talked about. But Bitcoin is still going to be the number one brand name, I think, for a long time, and I think holds a lot of those original crypto ideals, and is just a good way, maybe bridge from digital assets into crypto, or crypto back into digital assets. And again, and this I think plays into some other questions about trust and whatnot, is when brands like PayPal, you know, and other large brands that are like, hey, we're comfortable with this. We actually understand it, and we bring it to our user base in a large, very user-friendly way. They have great teams that do that. It's just great for the entire, honestly, like global ecosystem of digital payments and digital assets.
Very interesting. Thank you, Sean. Okay, we have some 2 last minutes, and I would like to invite you to respond very shortly on a question how we could develop more trust in the industry from the side of individuals as well as institutions. I think it was Don Tapscott that was talking about trust. That is very important. And the next panel will be about education. You mentioned already that education is important. Other components of trust in crypto. John, let's start with you.
I think we need to continuously create frameworks and platforms that are safe and compliant in order to bring higher level of trust for all users. For individuals, we need to consistently educate and inform them of the benefits of crypto while making it accessible at the same time. Also, the average person today sometimes associates crypto as a bad actor tool. And part of this is Media's fault, I think. Yeah. But we need to ensure and bring the education and knowledge to individuals to show them that that is not the case. Yeah. Like.
Great ideas. Thank you, John. Tyler, your thought on this?
For me, I love the idea and the prevalence, the emergence, the evolution, all of the above of token networks. So what that means is you've seen all these other ICOs, these other sort of ERC20 tokens, and all these other bolt-on kind of business models or tokens that are more supplemental to the core of the business itself. And that can be interesting. But now over the past couple of years, you're really seeing these entire ecosystem, an entire network where all of the value is accrued in the token itself and is critical to how the network actually operates. And when that starts to become more of the norm, and people are either using and or speculating or becoming a part of those networks, they literally are sharing in every single opportunity, the upside, governance, every little component of the value of that network. And when they're a part of that and realize every single person has the exact same selfish motivation, you know, you get all the game theory and all these other things, but now it's not really oh, I'm holding the bag of something, or I'm not participating equally in all of this. If I use this token, but yet there's equity in this entity and I'm completely missing out, you feel like it's like there isn't that trust there of like, why am I participating or investing in trying to make this thing better? And when you look at now token networks that have done that, I think by design, to where all the value is there. So all the participants are the ones earning, they're the ones providing the value, they're the ones taking all of the action. And then all of the people have the exact same overlap, exact same interests, I think. And that's something, you know, not talk too much about Flexa, but that's what we've done. And so all of our token has that value. So anything that I do as, you know, a participant in Flexa is exactly the same as every other participant. And like, so that's something that we can really share. And I think that will really expand trust in these networks. And it's, again, more and more examples of that. It just gets really exciting now as people become more familiar and understand how some of these network works and, you know, tokens themselves.
Cool. Thank you very much. Sean, in one word, what is the way that we can increase trust in crypto?
More businesses accept it. When businesses say it's cool, then all the consumers say it's cool.
Great. Thank you so much. Thank you very much, my co-panelists. Thank you very much, Binance. Thank you, our great public. And happy anniversary.
Fantastic.
Thank you so much. Thanks, Christina.
Fantastic discussion. Thank you, Christina, Sean, John, and Tyler. Hi, Omar.
Hey.
So are you ready?
I am. Yeah, that was great. It's interesting, actually. It seems that every month we're getting mentions of bigger and bigger brand names from the industry coming into crypto. So hopefully that will continue, and maybe something that next panel might discuss. So just a reminder to everyone, we have got two streams. So we've got the local stage and the global stage, and you can toggle in between either one depending on what you would like to watch. So the first panel we have coming up here on the local stage is called Shaping the Future of Crypto Regulation in Africa. And it will be moderated by our colleague, Emmanuel Babalola. Really interesting panel today. So he'll be joined by Michelle Chavinga from the Global Policy House and Global FinTech Advisory Board, Senator Ihenian from Infusion Lawyers, Dr. Timi Agama from SEC Nigeria, and Nerushka Bowen from the LITT Institute.
Awesome, thanks Omar. So next up on the global stage, I'm really delighted to be moderating this panel on blockchain education, keys to a new career. Thank you to our speakers, Appeline Blandin from the Cambridge Center of Alternative Finance, Tamim Ahmed from UCL Center for Blockchain Technologies, and Eric Pinos from Ontology. Thank you for joining us today. I'm excited to start this conversation. So Eric, Appeline, and Tamim, are you ready?
Yes.
Hi. Thank you for joining us. Hi, Appeline. So yeah, let's get straight into it. I really want to get to know you all a bit better. So can you all answer this question for me? How did you get into the blockchain industry? Appeline, I think you can go first.
Yeah, sure. Thanks. So I was first involved with the French Association for Tech Startups and Investors. And so there were a few crypto asset companies that were working there. So I was collaborating a lot with them. But I was more kind of interested in the research and academic side. So I decided to focus my research on this. And so I joined the Cambridge Center for Alternative Finance at the University of Cambridge about 2.5 years now. Ago. So yeah, and since then just focusing on kind of investigating the crypto asset industry.
Fantastic. And Eric?
So I really got involved when I was an MIT student. So I was an undergraduate there, and back in 2014, the MIT Bitcoin Club did the MIT Bitcoin Airdrop, which was a campus-wide program to airdrop $100 worth of Bitcoin to every MIT student.
Fascinating.
Which is a really interesting experiment, and to see like what students did. You know, they got all this Bitcoin all of a sudden. For many students, for most of them, it was their first Bitcoin. It was my first Bitcoin, and so I mean, Bitcoin was $100. Bitcoin was $200. So everyone got half a Bitcoin, and that kickstarted the MIT Bitcoin Club, kickstarted the meetings, kickstarted the excitement and the interest, and it just grew from there. I mean, for me, I got involved on campus doing a lot of research, and then after graduating, stayed involved, right? That's where I joined Ontology, and just still working with universities, still giving back to campuses.
Great. And Tamim?
I got involved back sort of within sort of my undergrad studies. For my sins, I studied physics, and one of my sort of modules I chose there was sort of quantum information theory. And in quantum information, you have a lot of something called Alices and Bobs. The sort of two characters around sort of cryptography. Found myself on some of the internet forums and quickly realized it was less about the technology, more about personalities. And as a result, I tried to sort of join the Bitcoin Foundation back in 2014. And my bank at the time didn't accept sort of the £5 membership fee that the Bitcoin Foundation were requesting. And as a result of that, yeah, I sort of realized there's a sort of there are challenges in sort of governance, and I put my sort of, I guess, eggs in one basket. I sort of believed we're going to need stronger governance systems, and as a result, we're going to need regulators and governments involved for this sort of space to grow. And found myself at the Center for Blockchain Technologies out of University College London. Yeah.
Awesome. So you all have quite interesting backgrounds, but it seems that for those looking for a career in blockchain technology, they might have to go a different route than tech talents and entrepreneurs before them. So with that in mind, what do you think is the best way to strategically establish a career in blockchain technology? Eric, I'd like if you could answer that.
Sure. So I've always found that the best way to position myself for success in the space, in especially when I was searching for new opportunities and new projects to work with. It's going to sound not possible right now, but I was going to say conferences and travel. I've met every person that I've worked with in the space, or my favorite people to work with in the space. The projects that I've joined have been through people that I've met at conferences. And I think that even though right now we're online, I think there's still a lot of good opportunities through these online conferences, right? And the networking components of online conferences, also on Twitter and the different people on Twitter, following projects that strike your interest, getting involved. I think blockchain as an ecosystem is a very open one. A lot of the projects have developer communities and have open protocols that you can plug into and mess around with. So, oftentimes it's not even as a job, you can get started right away, just contributing to a community protocol as a community member, and then that will get their attention when you do want to leverage that up into a full-time or part-time position.
Okay, great. And Tamim and Eric, you can answer this for me. Do you think blockchain education should start perhaps earlier than university? Should we be implementing it in high school for those in the UK A levels, the age group 16 to 18?
This is a sort of, I guess, a bit of a tricky question. I think young people should probably continue to have fun before university, and this. But essentially, I think blockchain technology is going to be a bit of a step change as an evolution in industry, and most people won't realize how the payment systems are upgraded. That said, it could be introduced into the curriculum sort of at GCSEs or at A levels within sort of computer science modules or even economics classes. I think the more interesting sort of take on this would be, I was looking at some of these like subgroups on Reddit. You had sort of teenagers buying Bitcoin very early on in the day, and there seems to be a sort of this gaming community that's growing. So there could be, I guess, an opportunity there within the gaming community. How that fits in, maybe some extracurricular clubs at schools, which could be rolled out. But yeah, not too heavy, so in terms of being it rolled out before
That's fair.
high school.
Apolline, I have a really great question for you. So, a lot of research and funding and courses on blockchain education tend to be in Europe and America, but what can be done to provide these same opportunities here in Africa? Are partnerships with local universities possible, for example? What do you think can be done to bring those opportunities here?
Yeah, actually, it's a great coincidence because so the CCAF created an online course for regulators, kind of looking at fintechs, and so we do have a module looking at crypto asset and blockchain more generally, and the effort is really to have a global audience. So we really try to reach out to regulators from all around the globe, and we actually have very active participation from regulators in sub-Saharan Africa. And the goal with this is also to kind of broaden the scope of this audience and not only focusing on regulators, but also trying to get other type of market participants attending the course and getting more and more familiar with the topic. So, I mean, we can really seize this opportunity of, everything going online to make sure that it is more globally spread.
Okay, great. And Apolline and Eric, this is a question for you both, and I'm really happy Apolline brought up, regulation. In what ways do you think blockchain and crypto regulation could affect the rates of blockchain education globally, and why? So Apolline, could you go first, and then Eric can answer after?
Yeah, I would actually like to kind of inverse the question a little bit. I think education can do more to regulation than regulation can do to education. And again, that's kind of the purpose of this course, because what we see is some regulators in certain jurisdictions are very sophisticated and have a lot of resources to get to grasp with new technology. Whereas like in other regulators where they are more constrained in terms of resources, it's really important to make sure that we can expand and share knowledge with these regulators and improve their familiarities and understanding of that topic. And then in turn, if regulators are better educated on the topic, then they can probably kind of set up regulation that really support the development of a crypto asset industry.
That's a very valid point, and you're actually right. It's better the other way around. Eric, what is your take on that?
Yeah, I think I agree that it's the other way around for the most part, but I do think that there are also the elements of regulation potentially curbing or stopping, education, which could be an issue especially within schools, because getting blockchain curriculum is difficult, getting approved by Common Core, right? Especially if you go into like high schools and such, there's a lot of restrictions on what you can and cannot teach. So that's always a barrier, right? And if regulations go towards the route of more restrictions, then that just becomes harder as an element to teach. I know that the Blockchain Education Network, which is a network of universities and blockchain clubs, for a long time worked with only students and student clubs, because working with the universities themselves, they saw blockchain as a very sketchy thing, right? And Bitcoin is a very sketchy thing. So it was very difficult in the early days to get accredited courses. Now, obviously, that's changing. So I think, if there were more regulations that were in support of blockchain and legitimizing crypto assets, it would definitely make it easier to establish more accredited courses about it.
That's good. That's a good point. This is a question for all of you, and I'd like Tamim to answer it first. You've kind of brought it up. There's this perception of blockchain and crypto in general, a lot of misinformation online. What are you all doing? UCL, Cambridge, Ontology, and the Blockchain Education Network. What are you doing to counteract the spread of misinformation around blockchain and crypto?
This is an interesting question. I remember back in 2017, 2018, I found one of my pictures on like an ICO project. The name on that was Jackie Chan. And I was sort of like, wow, I'm not sure if I should be chuffed or not, but I was like, definitely don't look like a Jackie Chan, or maybe I do, I don't know, but not as talented as him. So I think first of all, academic institutions and the sort of academics associated need to be very transparent about the projects that they're working on. So very clearly sort of stating their partners, if individual sort of academics are involved with projects themselves, they need to sort of mention them on their personal sort of profiles as well, just to make sure there's no bias. That's the first thing. And then sort of also being very clear with partners in terms of not taking any bias in their certain projects. And the main objective should be for those partnerships to add to the body of knowledge around blockchain technology and the underlying research within that. Otherwise, yeah, it's unfortunately, it's a bit of universities are quite resource stricken. It's a difficult one to regulate, but the policies should be transparent and fair across the board.
Okay, great. Apolline and Eric?
Yeah, I completely relate to that. I mean, I think the transparency is very important when you conduct research on the industry. You have to make sure that there is no conflict of interest. So that's one thing, and just generally also because although we've been like 10 years in the making, it's still a emerging industry. So making sure that we provide data and reliable research on it, so that it can become like a growing body of literature and research around the topic. That's very important, and I guess that's what we're doing at CCAF, trying to provide reliable information and data points on the evolution of this industry.
Okay, great. Eric?
Yeah, I agree. I think that Ontology, we work with a couple of universities now, and all of the agreements are non-binding, right? We support from a research and academic perspective. The students are working on different projects, and they get to explore their interests, produce research out of the outcome. That's the goal. But we're not trying to influence it in any which direction. It's exploratory, right? And so whatever they produce is for them and what they produce. We also run a couple of non-university related research centers that also produce research and reports for the industry. What the Blockchain Education Network does, and Ontology works very closely with the Blockchain Education Network, working with a lot of the universities that are part of the network. And the Blockchain Education Network has an open source Wikipedia style repo of blockchain educational content that's been submitted to by students, by professors. So it's just been collected to over the years for people that want to share their education and share their lessons that they've made for their individual universities and for their individual classes and clubs with each other. So that has like no agenda or isn't particular towards any particular project, right? Like as long as it's not a known scam, like there's the opportunity there for students to learn about it, and it covers all different sorts of topics. So there's like no kind of maximalism there. Like we've taught about every different kind of topic, every blockchain based topic that you can find, because all over the world there's so many different interests, especially where you're from and what industries are particular to where you are.
Mm-hmm. Okay, as this is the Africa section of the panel, I really want to drive this down to this region. You know, we often talk about Africa being the future. You know, we have a high youth population, but we also have, you know, increasingly high rates of unemployment. So for example, in Nigeria, I think it's about 20% unemployment, and South Africa is almost 30% in these countries. So with this high youth population, how can blockchain education reduce the levels of unemployment and make African youth competitive on a local and global stage?
If I may start on that. I think I'll talk from I'm not in a position to sort of comment from a local perspective, but I guess from a foreign investment sort of outlook, I can share some insights. We're seeing like a very big squeeze on profitability of the big tech companies or any sort of developed organizations. So there is a massive competitive push to get into emerging markets. And the thing about digital, so the nature of digital assets is it's a global remit. So if any of these organizations can have their regulatory sort of groups in your London, your New York, Singapore, Abu Dhabi now, even of the world, they can set up local offices in these developing countries. By educating sort of local employees on sort of blockchain technologies, we will begin to see a push for sort of securities to start to emerge in these markets. So if local governments engage from a regulatory perspective to make sure they engage this sort of global securities outlook, there can be an opportunity to introduce sort of innovations around sort of local securities, if that kind of makes sense. So having regulatory offices in London, let's just say, for example, the London Stock Exchange, you've got a lot of foreign investors that are looking to invest into ESG funds, sort of the green sustainable funds. You can have those investors sitting in London, but they could be investing into the innovation side of things locally in Nigeria or South Africa. So you have that regulation on chain, but the innovation happening locally. And that can only happen by sort of ensuring that there is a good level of education in blockchain applications at a local level.
Okay, great. I've got one more question before we have to round up. I think we have to go to the next panel soon. And I'd really like Eric and Apolline to answer this one. What other things outside of university, what can employers across industries do to educate their current staff about blockchain technology? Apolline, could you go first, and then Eric, and then we'll wrap up.
I think the blockchain space is still, kind of very broad, and a lot of things can fit into blockchain. So I think it's very important if companies and employers can provide, minimal basic knowledge on the industry and the technology, so that everyone kind of speaks the same language when they talk about their businesses and the different innovation happening in the space.
Okay, great. Eric?
Yeah, I think that a lot of the education happens online. So giving employees a good memo, or sending out a memo for like, oh, this is blockchain, this is the stuff online. I know when I was working at NASDAQ, they had sent out a company-wide memo like, okay, we got to address Bitcoin. Right? Like, here's Bitcoin, here's all the stuff about it, here's what we think, and then here's some good resources for you to learn more about it. So I really like that approach. And then I think also extending that into like lunch and learns and doing like physical, or I guess, like Zoom or physical, whatever events you can do to teach employees, especially because there's also a lot of conflicting information, right? Like there are a lot of scams in the space, and there's a lot of, weird things that are happening in the space. So people definitely need more guidance in terms of navigating especially the educational resources, to avoid content that's like more promotional, and to stick with content that's more purely like educational, presenting the facts around different initiatives.
Great. Well, thank you all, Apolline, Tamim, and Eric. Thank you for joining me today. It's been a pleasure having you, and you gave us such great insight into the blockchain education space. Have a great day, and we will be proceeding to the next panels.
Thank you very much.
Thank you. Take care. Bye.
Thank you.
Thank you.
Hi, Omar. Are you
Hi,
there?
Cami. Yeah, thank you for that. Really, really interesting panel. Again,
Yeah.
I hope our viewers are enjoying the content, and yeah, it's been really interesting to learn about how crypto is becoming mainstream through engaging with public sector, university type organizations, as well as big business. So hopefully, we'll have a bit more content on that later on as well.
Definitely two incredible panels on the global stage and on the local stage, and so much insight and knowledge shared. Thanks again to all our speakers and panelists. So our next panel on the global stage focuses on crypto adoption in Africa and includes a lineup of some incredible companies and communities doing really innovative work in the African crypto space.
Yep, and on the local stage, we have a special panel for Turkish speakers on the growing fintech and DeFi ecosystem in Turkey. And that's actually moderated by our colleague Orsan Karaciğer. And I'm pleased to introduce the panelists as Ismail Polat from Kadir Has University, Bora Eldemir from Blockchain Inst, and Alp Işık from the Crypto Economics Research Team Coordinator and Blockchain Center. Over to you.
Great.
Hi everyone, this is Sonia Kunal speaking. Is it our panel on now? Am I correct? Davy, I'm assuming that's correct. We can proceed.
Hope so.
Okay. Okay. Well, hi everyone. My name is Sonia Kunal. I'm the co-founder of Bitcoin Events and Blockchain Academy, and we're based in Cape Town in South Africa. I'm really honored to be part of this panel with my fellow Africans. I think I've spoken to some of you on email and I've never personally met you, so it's a real honor to see you in person. So very interestingly, we've got three panelists from Nigeria, one from Kenya and myself from South Africa. And I think this is a pretty fair representation of the countries with some of the most crypto activity in Africa. So to get started, I know we've only got 25 minutes for the panel, so I won't waste too much time. Our panel today is Crypto in Africa, Mobilizing the Unbanked. And obviously, this is a very important topic, and it's a topic that we often discuss, you know, being in the crypto community in Africa. So what we're going to be talking about is what is the real potential for financial inclusion in Africa and how can it be achieved? What are the use cases for crypto payments in Africa? And what are the current barriers to mass crypto adoption in Africa? So I'd like to do a quick introduction to everyone on the panel. Yele Badamose, he's the founder and CEO of Bundle. Munachi Ugeke, Chief Business Officer of Yellow Card. Eugene Mutai, he's the CTO and co-founder of Raise. And Chuta Chumezi is the founder and coordinator of the Blockchain Nigeria user group. I hope I pronounced your names correctly. I really practiced that before this panel. Okay, so just to set the scene a little bit before we get going and I start asking questions. I think we're all aware that the World Bank has announced that there's 1.7 billion people that's unbanked, adult population that is, across the world. That's about 38% of the adult population. And 60% of those live in Africa. So this is obviously a significant portion of the population in Africa. So to get started, Yele, I'd like to start with you on the next question. What is the real potential for financial inclusion in Africa and how can it be achieved?
Okay. I think, you know, I would touch on the stat you gave earlier, which is that in Africa, we have about 60% unbanked. And one of the reasons why that is the case is that it doesn't necessarily serve the financial institutions to serve the unbanked population. Either that's because the amount of money they can hold is too low, and to use the existing financial systems, the cost of doing these transactions are very high. And I think that's kind of like where blockchain technology sort of shines. That is, it makes doing digital transactions almost free or very, very cheap. However, something that I would like to sort of bring up or address very early in this conversation is that we know that for a lot of people that don't have bank accounts, they have cash. And so because blockchain and crypto is primarily a digital technology, you have to start thinking about how do you connect sort of like the cash economy to the crypto economy, right? And that to me would probably look like, agent banking. But I think it's really interesting to see people, the ease at which you can create, a blockchain wallet that supports a stable coin, compared to you trying to open up a bank account. But, creating that bridge between sort of like cash and crypto is going to be very huge and important in sort of banking the unbanked.
Right, thank you for that. And Chimezi, if you could add to that, please.
Okay, thank you, Sanyi. I want to, first of all, let us know that there are the formal financial inclusion and the informal. So in the light of the overall, you also consider the fact that currently crypto is serving a lot of the informal sector of the unbanked, okay? Because in this sector, you have the unregistered businesses, you have untaxed businesses, unregulated markets. So crypto is doing very well in terms of banking such people, because these unregistered people are not able to access financial services that ordinarily would have been available to regulated, taxed, and registered businesses. So you see crypto playing a very good role in grassroots banking, grassroots level of unbanked. Okay, so it's a critical role that it's playing there. Recently, I made a tweet and I was talking about people who have been involved in the crypto space, because currently their impact is much bigger than World Bank, much bigger than IMF and Africa Development Bank in terms of reaching the root of the really poor of the poor among Africans. Because crypto has the capacity to not just empower people and give them access to other financial services like we are seeing crypto doing in DeFi. Okay, now holding crypto gives you access to possibilities of accessing loan using your crypto as a collateral backing. Okay, now using crypto also enables you to have some kind of credits that will enable you to access even better loans and better conditions. And these are things that could have been almost impossible for unregulated, unregistered, and those group of people that are not typically taxed among the populace. So in that light, I believe strongly that crypto is playing a crucial role to lift the real poor of the poor out of poverty across Africa.
Yes, I definitely agree with that. So Eugene, I know you're based in Kenya, and I wanted to know your thoughts on, mobile money has really taken off in Kenya, and it's sort of leapfrogged across the traditional banking infrastructure, and it's been very successful. So how do you foresee cryptocurrencies, for example, taking off in Kenya? I know it is already taking off in terms of similarities with mobile payments.
I mean, the great thing is it's already happened here, kind of. I like to think about money, how I've thought about M-Pesa, because I've grown up with M-Pesa personally. So I like to think that Kenya decided to stay unbanked instead of becoming banked. So in that context, it means that we finally know that you don't have to be banked to actually have financial management accessible to you. So one of the things that fascinated me personally as a human being is that I was able to access crypto with just my mobile phone. Same thing I do with M-Pesa. And so if you can actually bridge crypto directly to the people rather than going through banks of like regulated financial systems, it even becomes much better. It means that you finally gain access to all these financial opportunities without like using a bank and so forth. And since Kenya has done it first of all before, why not repeat it? Like, why not do it again? But it just in this case using crypto, right? And from that perspective, I mean, like, if you're going to make crypto adapted, I think the rest of the world, especially Africa, needs to adapt M-Pesa, or basically the M-Pesa strategy or move for basically. Like, instead of me looking for financial opportunities and access, bring the financial access and opportunities to me in my mobile phone. And I think also like Yella is actually here. They're doing amazing things in Nigeria because Bundle basically brings access to crypto opportunities and even stable coins to your mobile phone directly instead of you actually having to go out there and seek for it. And that's, I think that's the most like powerful thing that's actually happening in Africa right now. Of course, regulation has to bend a bit over time eventually, so we can actually have a lot more things actually going on in the future. But that's a topic for the next question, probably last week or another day.
Sure, and maybe just to add to that, Eugene, you know, the mobile penetration in Africa is massive. And the population of Africa, it was mentioned on the previous panel, is very young. So, you know, they are tech savvy, they do have mobile phones. You know, I know in Africa, certainly in South Africa, electricity is a problem here. So, which means, you know, access to internet is also a problem sometimes.
It's not just about electricity, it's just that since the invention of M-Pesa, nobody anymore, like no one anymore fathoms the idea of actually going to a bank account to create a bank account when you can actually use M-Pesa to access your money or even save your money using M-Pesa just directly from your mobile phone. You go to your nearest agent, which is probably like 200 meters away from your home. You open an account from your mobile phone, and the next minute you can put as much money as $1,000 into your phone. And like most people in Africa do not have as much as $1,000 to put in your phone. It means that M-Pesa is accessible to everybody. If M-Pesa is an African-wide product, I guarantee you that everybody could have actually like adopted it. I mean, like regulation in different countries create a barrier for this actually, or also cultures create a different barrier for this. But in Africa, like in a place where majority of the population has under $1,000 a month to actually manage their money, and you bring like a financial platform to them rather than them going forth. Because for example, I do not fathom the idea that I need to deposit $200, no, like $2. I need to deposit $2, and I have to use $1 as transportation to go to an entire city to actually put my money into there. That does not make sense at all. Like, bring the financial platform to me, and I can walk 200 meters away and put my money in a safe place. That makes a lot more sense.
Right. Okay, so I see Monashi. Monashi, are you there? I don't see you. Let me know when he's back on, and then I'll ask him the next question, but we'll just move on. So I know you're all aware that cryptocurrencies is obviously becoming very popular in most of the African countries. You know, there was a recent report done by a company called Arcane Research that found Uganda, Nigeria, South Africa, Ghana, and Kenya are among the top 10 countries by Google search for the word Bitcoin. So we represent three of those countries. So it also mentions in the report that Africa is one of the most prominent regions for adoption of cryptocurrencies. This is obviously very exciting for us. Would you agree with this? And, you know, what would you say are the most important use cases for crypto? Monachi, I see you there. Okay. Monachi, did you hear the question? Monachi, maybe just unmute yourself.
Hi, can you hear me now?
Hi, nice to meet you, Monachi. Thank you for joining us.
Yeah, thank you. Thank you. How are you?
I'm good. How are you?
I'm doing very well.
Good. Did you hear the question?
I didn't get the question.
Okay.
I didn't get the question.
So I'm going to cut it short, and I'm just going to summarize that there are a lot of countries in Africa where the adoption of cryptocurrencies is very popular, namely Ghana, South Africa, Kenya, Nigeria, and Uganda. Would you agree that this is the case? And what would you say, if so, what are the most important use cases for crypto in Africa?
All right, thank you. That's a very good question. So I think one of the big things that we have seen crypto do for people in Africa is financial empowerment. most people think is remittances, most people think is ability to trade, but 60% of the African population is unemployed, and most of these are youths. So what we are seeing many people do with Bitcoin is see them buying Bitcoin, trading Bitcoin on exchanges to generate value for themselves and create an income. And for me, that's been the biggest driver of crypto in Africa, and especially in countries like Nigeria, where almost 23% of the population is unemployed, and most of them are, and about 60% of the population of Nigeria are youths. We see a lot of young people going into crypto, to generate value for themselves and for their family. Also, there's also use cases for remittances and trade. Lots of people that are importing goods into Nigeria now are very comfortable with paying their Chinese customers with Bitcoin, and this is Bitcoin and stable coins, and this is something that has been huge for the better part of this year because of the issues with COVID and other unfavorable things going on with the financial markets. So for me, I would say employment and willingness to trade with other countries and the ease of trade that Bitcoin and cryptocurrencies bring has been the huge driver, especially in these African countries.
Thank you, Manachi. So I know we've only got about 5 minutes left, so we're going to have to keep the questions and the answers short. Yele, back to you. I just want to know what you think is the current barriers to mass crypto adoption in Africa, and how could we potentially remove them? If you could do that in a minute.
I'll keep it short. I think if you asked me this question before founding Bundle, I'll have said it's about creating a very simple user experience. Any of the users who download Bundle, I think in the last sort of 2 months, we're getting about 2,000 to 3,000 people signing up every week on Bundle. And we get the same comment, this is great UI, it's very easy to use, refer to my bank. But then the next question is, what is BNB? What is Ethereum? What is BUSD? What is Bitcoin? How do I use Bitcoin? And so all of a sudden, I'm realizing that actually education is as important as usability and the user interface. So over the next couple of months, what I'm actually trying to do is to find content creators to help us create content. Also working with the Binance Academy, because they have a huge pool of resources and people like BNUG to create content to educate sort of like these 2,000 to 3,000, 4,000 people that are joining Bundle on a weekly basis. So that's sort of like what I think is the biggest barrier to adoption at the moment.
Thank you. Chimezi, I want to ask you, do you think the lack of crypto regulation in Africa is a barrier for the adoption?
Okay, primarily the barrier that cuts across both products and services that are managed in the industry has to do with the lack of a unified approach to regulation and policies, because these are fundamental. There's really not going to be much of adoption if we don't find a way to unify regulatory approaches around crypto across different countries. So a lot of work have been put in place and a lot of work are going on across different jurisdictions in order to streamline this. And I'm anticipating that but once this is straightened out, there's going to be a huge inflow of new users into the ecosystem. Secondly, we have to also look at the fact that at this early stage, crypto still needs traditional banks and traditional financial systems, because it's still not possible for crypto to function without banks. So we need to figure out a way to look at streamlining the relationship between crypto companies and traditional banking institutions. Because the moment that is done, then you'll see that it becomes a little bit more easy for people to exit and enter into the crypto space. Currently, a lot of people who are trading on different platforms have limits to the amount of money they can either take out or take in. And those are basically because of the challenges that they have around banking institutions. Then thirdly, I also wanted to talk about things that has to do with having official recognition of cryptocurrencies as legitimate tools and financial asset class among different African countries. The much that different regulatory agencies and policymakers have done is to issue warnings against Bitcoin and trading in Bitcoin. Now, if the day comes and we have a formal recognition and governments, policymakers recognize that, oh, look, cryptocurrencies have come to stay and they are actually a recognized form of digital asset, then it will create another opportunity for people who previously could think that maybe Bitcoin is a scam, or if you talk about crypto, they'll think it's a get-rich-quick scheme. Okay, so these are some of those simple things that we need to take a look at a closer level. Of course, you know, we have the rise of stable coins and the rise of the expectation that we're going to be having central bank issued digital currencies. This also needs to be clarified, and you know, we need to have the government agencies that are relevant take a stand that will be very, very clear that truly these are the types of technologies that have come to stay today. Okay, so let me just step back so I can give some other people opportunity to speak.
Sure, thank you, Chimezi. So Eugene, I wanted to ask you, and we have to talk really quickly, so if you could say this in 2 sentences. DeFi, decentralized finance. Do you think, you know, Chimezi alluded to the banks, we still need the banks to enable crypto adoption in Africa. Do you think with DeFi that could change that? And are you seeing any growth in Kenya in the DeFi space?
So I'll really put it short. I don't think we need banks. We need people like Hiele and like just basically somebody like me to create products that challenge regulation, and the regulation has to come to us, or we have to come together and bridge and find a way for people to actually benefit between that. Like Africans do not work with regulations first. Africa is a place you take the risks, build the product, and then now work with the government to make them work together.
Okay,
and then
Eugene, I've got to interrupt you. I've been told to cut it very short, and I have to still include Minashi, so I'm sorry to interrupt you. I wish this was longer. Just like to ask you for your final.
Fair enough.
Do you have some final thoughts on that? On DeFi?
Yeah, I feel like
we've actually run out of time. We're going to have to move on. I'm so sorry, but your thoughts were also important and so valuable. Trita, especially love your Binance shirts. Great to see you in the Binance shirts.
Solidarity, yeah.
Yes, and I think you all made very valuable points about all of us working together, whether it's traditional banks and crypto regulation and those of us in the crypto space, because for us to increase the adoption of crypto in Africa, there has to be a coming together. And I think, Trita made some really valuable points, and Eugene as well. Omar, are you ready?
I am indeed, and there's plenty more content coming up for our viewers. So thanks for staying with us. And I think there's been a lot of comments about our giveaways. So everyone will be pleased to hear we still have 2 more NFT giveaways coming up. So viewers will have a chance to win a bunch of prizes, including it's amazing actually, including 100 BNB and the thing that appears to be most precious of all, a limited edition Binance jersey.
Yes, but before that, next we're screening another special video our team put together, all about our mission to increase the freedom of money for all. And after that, we have a very exciting fireside chat planned. Omar, tell us what's up next.
Absolutely. I think we've got Akon coming up speaking after the short break with our CEO, CZ. So stay tuned, everyone, and enjoy this short video presentation.
What does it take to connect billions of people, to transcend borders and rewrite the system to be more fair, just, and free for all? It takes a willingness to challenge old principles and create a new foundation that forever changes the way we transact and interact. Because financial freedom belongs to everyone. Over the past 3 years, you've watched us grow from a cryptocurrency exchange to a comprehensive blockchain ecosystem to build today's crypto world and the crypto universe of tomorrow. We were never alone because from day one, we've been working and growing together in support of a shared vision to increase the freedom of money for all. The freedom to earn, the freedom to hold, the freedom to spend, share, and give. no matter who you are or where you come from. It takes a community to change the world. Though we still have a long way to go, let's take these next steps together. Because together, we'll unlock the freedom to do more.
So, Ekon, welcome to the Binance conference, and thank you so much for joining. And it's a true pleasure. I can't really express. I'm a little bit nervous because I can't really express how excited I am. You can probably get a feel of that already. So, just to give you an idea, I can probably count the number of concerts I went to with a single hand in my life, like real live concerts. I've been to yours about 10 years ago in Shanghai. So I think you were going to Beijing first, and then you came to Shanghai.
Right.
And it was a great concert. So and it's just a true honor to be talking to you right now. So I feel like a fanboy.
Thank you, man.
Yeah. So I think Ekon doesn't need a lot of introductions. And also with us on the panel is John Karas, who is the president and co-founder of Acoin. So so we'll just have a very casual chat, a few random questions here and there, and we'll see how it goes. So my first question is really, what got you into Acoin? So what got you into crypto? How did you get introduced? How did you get interested, etc.?
Well, actually, crypto was always something from a long time ago that was very interesting to me because at the time I had no idea what it was. A friend of mine named Ken Rakowski introduced me to Brock Pierce, and Brock kind of introduced me to the crypto world. And at the time, I was completely green to what was going on. He walked me through his office, introduced me to his team, and explained to me exactly what this was and saying this is going to be the future of finance. And at the time, I was like, well, there's a lot of things that's going to be the future, but I didn't understand just how much this would be until I actually went back home to Africa. And I was exchanging monies and rushing to get to my airport. I got on a plane with a pound full of CFA money and landed through France because I was going to connect through France to go back to the US and realized I forgot to exchange my money. And when I got to the change station over in France, I was like, listen, I want to change this over to euros and the US dollars because I was rushing and didn't get a chance to do it in Senegal. And they told me they couldn't change the money over. And I was like, wait, this doesn't make sense. How is it that the French made this money, but it's not worth anything here in France? And I was like baffled. And I was like, okay, something has to be done about this. And years down the line, the solution of blockchain in Africa with all the transparency that it provided and security, and it was this huge situation that came to my mind. It was like, man, this is going to be the solution for Africa's currency for sure. And I saw the success of Bitcoin around the world and also the havoc and the commotion it was causing because of the biggest disruption, but ultimately because of the fact that it was giving the power back to the people. And I felt at that moment that, crypto is going to be the future for what Africa needs to be. And that was at the moment when I decided I wanted to start my own cryptocurrency and reached out to John to help me put the team together to actually make it happen.
So how long between you first learned about Bitcoin or cryptocurrencies and then you started wanting to do Acoin? How long was that gap?
I think it was about a 2.5, 3 year gap.
Okay,
yeah.
so
sorry. So it was really more so learning more about it, understanding it, and kind of getting the gist of what it really was and the impact that it could really bring to people. And I had to understand exactly what I wanted. Get into, but at the time I didn't think I was going to be getting into it. And then the more I learned about it, I started to realize how closer I was going to need that specific tool to be able to do what I want to do in Africa.
Right. And what made you want to issue your own coin? Like, what was that trigger? At one point, like everybody has a trigger, says, okay, now I can do my own project and do my own coin. What was that trigger?
Right. I think the trigger, majority for it was just seeing how, Africa was just was never in a state of a conversation when it came to, what it contributed to the rest of the world. And I always felt like one of the biggest issues of Africa was the mismanagement of the resources there, and also the unstableness of the currency there. So when I realized that my goal and plan in life's goal was to really, build Africa and really help to develop the continent in such a big way, I knew finance would be one of the biggest, nucleuses that would need to be solved as one of the biggest challenges. And I just felt that crypto would be that cure, and not only that, but the solution for it. And I think it was around that time when I said, okay, this is going to definitely be something that I need to go fully in. And in order for Africa to become that, we have to create our own coin, which became the African coin. And that's how it became a coin. It just so happened that it sounded like Akon. And that's when I knew it was the actual, this was meant to be. It's not even a question.
That is very cool. Yeah. So,
right.
Yeah, I'll ask about Africa in a second, but you alluded to something that now you're very famous in the music industry already as a celebrity,
right.
But you are more you're now working on a coin and want to improve the world or part of Africa at least. So how would you want to be remembered later on? Do you want to be remembered as an awesome singer or a entrepreneur, or like say 50 years later? How would you want to be remembered?
I always thought about that. With the Akon legacy, it was the whole idea was not to be remembered for just singing and dancing. I always felt that music would be what opened the doors to create major impact and big change. So, to answer your question, my legacy would be, the one that struck the match to really take Africa's development and Africa's future seriously, and one, that motivated others to come on board and to create Africa to become what it's necessary, I think, was supposed to become. I always felt that, Africa was always the nucleus and the tool to develop every country in the world except its own. And I felt that it was time that Africa utilized its resources to develop itself.
So speak of that then, what do you think Acoin would do for Africa? Like what's the structure? I read the white paper a little bit and I understand the concept, but can you explain, or maybe John explain, like what does Acoin do for our viewers?
I'll give you two quick pieces. The token itself has an internal conversion mechanism that allows users to basically supercharge their prepaid cell minutes, which are a big store of value in Africa. People can go in and out from Acoin into prepaid cell minutes, fiat currencies, or some of the major cryptocurrencies. So that's one piece. The more important piece is our dApp store within the Acoin wallet, which is an access point for people to find their way to innovations they can use on a daily basis to learn, earn, spend, and save. And it's those two different parts of the ecosystem that create a vibrant way for people to find their way into blockchain innovation, make their lives better, find entrepreneurial tools and services.
Great.
Right. I'm sorry. Yeah, and as they get into the habit of utilizing the coin, it becomes something that originally manifests as something that's daily necessary, and ultimately become the coin of choice for Africa's trading.
Okay, sure. So Acoin, you
so
also
CZ, just remember, as you know, because you have an exchange in Uganda, Africa is 54 countries, 54 currencies, 54 governments, and we're looking to help provide a tool that unifies and helps the people and helps the government to have more financial inclusion.
Absolutely. So you also have this, so Acoin, you also have this Malawi Technology City, right? So can you describe a little bit about that?
Yeah, so it's actually a medical city, fueled by technology. And ultimately the idea of just smart cities around Africa is to also a part of the global initiative of, developing Africa and allowing it to continue to leapfrog into the future, utilizing new inventions and new technologies. And the Mwale Medical Center is exactly that, more from a medical standpoint, and taking lead on all the latest, medical, you could say, innovations throughout the continent, and utilizing those opportunities to be able to fulfill those basic needs for the locals there.
Sure. So, John, can you describe a little bit about what that partnership looks like, or how did you achieve it?
Sure.
What are some of the implications there?
Well, the great thing is that Mwale Medical and Technology City is built around a 5,000-bed state-of-the-art hospital and their peripherals. For example, this fall, they'll have an amazing brand new state-of-the-art medical ship on Lake Victoria, complete with chopper bays that'll be able to service the entire area around that and bring people to the medical center. but it is full state-of-the-art technology. Some things, I hate to say it this way, but they've actually aligned with and brought in some great innovations from Asia, China, and some of the countries, Korea, Japan, et cetera. So cutting edge technology, making it accessible to locals. They've also attracted an unbelievable core unit of some of the best doctors on the planet and made those accessible as a draw for people doing everything from just local people needing, healthcare to even the potential for medical tourism over time. It is an amazing facility that was built with a big future vision, and that's exactly what some of which will be applied to Akon City in Senegal and beyond.
Right, and they're currently the leading medical research center in Africa for COVID-19 as we speak today. You know, and the beauty of it is one of the biggest, ideas of it also being one of our partners. They'll be utilizing the Acoin to balance all their, medical bills or, receipts or medications or anything related to that within the community itself. So Acoin will be one of the biggest utilizational tools for them over there.
So we're the digital transaction tool for the city and its residents and the surrounding area. So all of the folks within the city can do everything from pay utility bills to all of the employees will be paid using Acoin. And again, that supercharges prepaid settlement. So it allows them to do lots more than just get a fiat payment or otherwise. So.
Right.
So that's a pretty hard deal to sign, right? Based on my experience. Yeah. So how did you guys go about achieving that?
I have a really amazing secret trick. If you look at the guy in the red, I just said, look, we're going to help create all kinds of visibility and draw a lot more people to what you're doing. We're really passionate about what you're doing. Let's align. And he smiles and they sign. It's amazing.
It's great to have a good looking face, huh? So Akon, could you share with us what your next plans are? What's the upcoming latest updates, etc.? Where are you in the world, etc.?
Oh man, my really it's all about legacy building for me. With the Akon Legacy Ventures, our goal is to bring in really impactful concepts, ideas, business ventures, and tools that will allow people to live really good in all throughout emerging markets. Starting with Africa, and Akon City is one of those pieces that I'm super excited about. And obviously with the Acoin being the utility token for the city itself, but it's something I feel is going to be the spark and the you can say proof of concept of futuristic cities built around the world. With Africa, we're finally now in a position where the architecture will reflect the culture, and I think we're in a great position. And I'm loving how everything is coming in full fruition. A lot of hard work obviously is now all coming together and actually paying off, and we're actually pulling in the partners that we need to actually make it all come through.
Excellent. Wow.
Can I just add a couple pieces to that, CZ?
Sure.
Some of the big things that we're excited about that are being pulled into the mix. We've aligned with something called GEVE Network that's digitizing healthcare. It's first being done in Rwanda. It's going to digitize the healthcare for the entire country. Pretty unbelievable, putting it on the blockchain. You can read about that in some of the articles around our announcements of that. But the gentleman behind that, Sanjeev Kela, is a real visionary, and we've aligned with him.
Big shouts to Sanjeev. That's my man.
Yeah, he's awesome. We're doing some really interesting things in the agriculture and ag tech space, particularly with the World Food Bank and Global Food Exchange. We're working on some really innovative things having to again do with ag tech, storage, finance around farming and agriculture. Many people on the continent of Africa make their living having something to do with agriculture or the products thereof. We are opening some Acoin Effect opportunity hubs where people will get learning and education opportunities along with gig economy opportunities in AI and blockchain. Some of those, the first of those hubs will be open in Wale Medical and Technology City, and there'll be a bunch of gig economy jobs in AI and blockchain driven things around med tech. And there are just all kinds of amazing new things. We're also super excited about community building through things like Sense Chat with our partners, the Pierces, particularly Crystal Rose Pierce, who's just an absolutely brilliant leader and part of our team. And then we're always looking at things that can be amazing public-private partnerships, super aligned with the UN Blockchain Commission. And again, you know from whence we come, as we have friends in common, including the aforementioned Brock Pierce.
Yeah.
You know, he was
Right.
part of your origin story, CZ. So, you know, he keeps us on our toes with some cool innovations, and we luckily bring some to him as well.
Cool.
Absolutely.
So it sounds like you guys are doing a lot in Africa already. John, how do you find working with governments in Africa? Like, based on my personal experience, I flew there, met a bunch of senior officials in governments, luckily met a couple of presidents. I found that there are different levels of understanding. That was about 2008. Some get it and really want to welcome it. Some are really just, what is this? Why am I bothering?
Right.
What's your experience? Do you see governments as a hindering? Yeah.
No, not at all. So look, I'm very fortunate. Aecon achieved a lot with Aecon Lighting Africa so far. That's put in over 400 different installations of solar street lamps all across 18 different countries. Every single one done as a request for proposal. Everyone involved with governments, mainly national governments, sometimes, you know, state or local governments. But through that, people got a real sense of his love for Africa and the African people and wanting to improve people's quality of life. And so as a result, he's gotten huge support from both the average person and government leaders. And they've recognized that he's really drawn towards truly having a massive impact and improving, again, people's condition of life. So as a result, people understand the support that the governments need to give him, and the governments really understand the connection that he has with their, frankly, their electorate. So we are very fortunate in that we're often welcomed in with wide open arms. Sometimes there's explanation. Everything's not the easiest thing, but a lot of goodwill has been generated. And, you know, there's a real desire to, again, improve and create innovation and bring technology, help on the pathway to prosperity. And everybody knows that's what drives Aecon and our entire team. So we're often met with wide open, welcoming arms.
So I guess we should.
Thanks, Aecon.
You got it.
I guess we should have followed Aecon around in Africa. When in 2018, when we were trying to introduce ourselves, some countries are like, a crypto exchange, what is it?
What is that, right?
So Aecon, I think it's great to have you to be the ambassador pushing this crypto adoption in Africa. I think it will make things a lot easier for us as well, indirectly.
No, absolutely. Yeah. Absolutely.
So Aecon, so what are some of the lessons you learned working in Africa? Like what works, what doesn't work? Any critical factors you can share, except like things like that?
Yeah, I think what doesn't work in Africa is speed. And I think a lot of companies come in and they're not really patient enough to understand the culture, the kind of terrain that they're working in. And adaptation is another big thing to look for, because ultimately what works in the US or what works in Europe may not necessarily work in Africa. And I think a lot of times we come with these systems that's already set up, turnkey, but only for the environment in which we come from. And we try to copy and paste it in a totally different environment that doesn't really adapt to that as easily. But ultimately, I think the best thing is to really take time, understand Africa, understand the area in which you're trying to, accomplish in whatever it is you're trying to accomplish. But more than anything, just pay more attention. Don't rush into anything and try to beat someone else to the punch. Just understand your market, understand what you're trying to adapt and achieve, and then utilize that information to really carefully go into the market. But I think we play a big role in a lot of that because we've kind of done it already. Me being African, me born and raised and understanding the people and the culture and the government itself kind of will walk a lot of people through in a more easier, safer way. And Africa's really built on trust, because for a long time they've been misled and been cheated. And so they really careful about how and who to do business with. So we bring a lot of trust factor to it because everything that we've always brought, I've always uplifted a region in such a big way and created a lot of benefit. So it kind of helps to have the right relations walking in.
So Aecon, you also have an Aecon Foundation, right? So what type of programs are you guys focused? Are you trying to bring out from there?
Oh, man,
I can jump into that one. I mean,
Okay.
there's so many of them. I'll just start with, education is a huge one.
Yep.
Financial inclusion, really important. Again, improving access to healthcare. We've got a whole initiative on land titles and making sure that people are protected on the land that they've been on for generations. So there are just numerous ones. Again, things that we were talking about in the ag tech space. There's a lot of ways to help improve the productivity and also the value of the crops. There are a lot of different things. There's some stuff, again, natural resource related in mining. So there's all kinds of things across the foundation, mainly about improvement of people's condition of life, again, whether through healthcare, land titles, maximizing the value of their efforts, whether in agriculture or mining or whatever their jobs are. But there are broad initiatives across many silos, and we have a growing team in the foundation, and that's a major focus for us.
Right.
So yeah, let's jump into the sort of current events a little bit. How has COVID-19 affected you guys or the project progress, and specifically in Africa? How has that impacted in any positive or negative way, etc.?
Well, it's been a blessing for me, I gotta say. COVID allowed, me to really sit and pay attention to a lot of things that was happening. It also allowed me to be able to catch up on a lot of great things that we were actually working on and kind of relieve some of the distractions with me moving all over the place trying to get it all together. It actually allowed me to focus and really hone in on our overall agenda to kind of fine tune everything else. It also allowed us to be able to close out very important partnerships that we felt that was necessary, and allowed us also to be able to express that partnership in a more detailed way and kind of close up all the, you could say understandings and communications, but it really collected all of our thoughts to really be able to focus and drive our agenda in a really, really good way. As far as opportunities, it's a lot easier to catch a target when it's sitting still. And I was one of those guys that was moving like a fast speed bullet. So, it allowed a lot of opportunities for me to really pay full attention to, and also, sit with my team and kind of get things in order. I know John hasn't been this successful as keeping me in a place in meetings and things of this nature in a long time. So
we've gotten so many things done in the last 90 days, CZ. It is unbelievable. Right. The one downside for me is that a bunch of the folks that we need to actually be sitting in person with, both in Africa and in the Gulf states, we just haven't been able to move. So we'll have a nice whistle-stop tour once we get through that. There are a bunch of our partners and some heads of state that we need to be sitting with, and some of our local and regional partners, again, in Africa and the Gulf states that we just need to spend some time with. So we'll get there eventually, but in the interim, the last 90 to 100 days, we've gotten so many things done and so efficiently, and our team has just really ramped up. Plus they've had extra, a lot more intersection as a group with ACON on some of our bigger initiatives. So everybody is incredibly pumped up, and nobody's sleeping as we race towards some of the next big utilization cases and all of that. So, and not to mention some of the things that we will eventually figure out how to do with Helen and your group at the Binance Foundation. We will align the foundation sooner than later.
Absolutely.
Yeah, I think some of the things you said earlier really resonates with us. We are working very hard on pushing adoption, education, and also healthcare, etc. So I think our scale, to be honest, is much smaller in sort of pushing this area. And so I think speaking with ACON, I mean, it's very obvious you guys are much more focused in terms of effort, and the initiatives are actually much more established. So we'll definitely be appreciative if we can tag along, figure out some way to work together to push those fronts. And
absolutely.
Yeah, and I mean, so speaking of the COVID-19 impact, right? So I saw last year at ACON you still have some concerts going on. This year, obviously, it's not possible to have.
Right.
Next year, after COVID is over, are you planning to do more concerts? What's the plan there?
Oh yeah, once COVID is over and they open up the countries, it's a huge tour that's on hold now. I have a huge 32 city tour with the NFL that we've been trying to get off the ground. It's more of a stop the bullying and putting emphasis on, cyberbullying, actual bullying, internet bullying, things of this nature. We want to kind of really focus on that, but it's a, real tour that actually launches the album itself. And then we have a world tour that will slowly go right behind that. And we're like, I'm so excited. Like, you have no idea. that's one of the things that bothers me, and that it's like I want to be able to go out and get back on that stage. So we're definitely looking forward to fulfilling all these tours after this is open, for sure.
Cool. Let me ambush you with a question. Is there any plans in the future to be able to accept Acoin or other crypto for concert tickets, etc.?
Oh, absolutely. You know, the concert is one of the biggest utilizational tools that we have. You know, not only just for myself, but all the artists on my label, and hopefully artists that we promote and market around the world. You know, so the whole idea is to be able to eventually utilize crypto for everything that we're doing.
Excellent, cool. Yeah, I gotta be careful with the time here, but let me ask you a few quick questions then. So you've been to all the cities in the world, right? What's your favorite city?
My favorite city is actually Malta. You know,
okay.
I love Malta, man. I don't know what it is about that place, but I just love it. The combination between the desert and the water is like the perfect combination.
Oh, cool. So we're one place in common. That's great. So going around the world again, like, what's your favorite food? Like, what kind of food do you like?
Pizza. Actually, pizza is one of my favorites, man. I can eat pizza anywhere.
Okay, and that's also a crypto food, right? And my last question for you. So what's your favorite book?
My favorite book will probably be, I would probably say, it would probably be The Four Agreements.
The Four Agreements. Wow. Okay.
Yeah, that's been one of my, like, that's like the rule of life for me. The Four Agreements. If you haven't read it, you have to read it. It's going to change your whole perspective of life. Period.
I have read it. It's I think the first chapter starts with some boy traveling through the desert or something. Not sure.
Right. The storyline.
Yeah.
Yeah. The Four Agreements is. I mean, it's amazing. It's an amazing book.
Cool. Excellent. And anything else you want to share with the audience? Any other topics?
Oh man, listen, just look forward to everything that we got coming. Log on to acon.com for all the futuristic stuff we got going on, musically and beyond. Of course, acoin.io, which is the website for all things relating to Acoin. And then you got aconcity.com for all the things on that level as well. So within those three sites, I mean, you can link on to anything that we're doing and get all the information on it if you want to be a part of it.
Great. So I think just on behalf of the sort of crypto space, we're very fortunate to have a big name like yourself entering this area, and I think you will be able to push adoption in a lot of areas that no one in our industry currently have not been able to. And I think the music industry and Africa are both really strong areas to be able to push adoption. So we're definitely looking for more chances to talk to you more privately, I guess, and then look forward to building things together. And thank you so much for joining
absolutely.
Thank you so much for
you
joining
guys, you know.
Yeah,
thank you
Appreciate
guys
it.
more. You know,
and happy third birthday, Binance.
Yeah, thank you so much. Now we're 3.
Yes. Congrats,
All right.
CZ. Great.
All right,
great
thank
work.
you so much, guys. Yeah, thank you.
Thank you, brother. Thank you.
Yeah.
Yeah. So our African community has grown tremendously over the last 3 years. To industry grow together. I think we've lost Dami.
Hi guys, I'm here. Sorry about that.
Oh, hey Dami, no problem. You were
Hey.
just telling us about the 2 awards that we have coming up.
Yes, so first of all, we've got the Binance Influencer Award for the Africa region. For this award, we wanted to turn the spotlight on the influencers who are raising the profile of blockchain and crypto. So please keep in mind that nominees and final winners were selected by our community, and we collected votes from verified Binance users across social media and Google Form surveys. So thank you to everyone who participated.
Yeah, and it's great, and it's our way really to show recognition really for the influencers who have helped grow the industry together over the last few years.
Awesome. Congratulations, Ms. Annie.
Hello everyone, my name is Chris Annie and I'm the CEO of Digital Abundance. I want to use this platform to thank Binance for nominating me for the Crypto Influencer Awards African category. This is such a big honor to me, and to everyone who took time to vote for me considering the works we've been doing in the cryptocurrency space since 2016. I want to say a big thank you. This is me also saying cheers to Binance at 3. Thank you very much.
Awesome. Congratulations again to Chris Annie.
Great. So next up, we have the award for Best Binance Chain Wallet of 2020. So at Binance, we truly believe that decentralized finance will play a huge role in the future in order to unlock mainstream adoption. So a good wallet is one of the most important gateways for our users, as we've seen. So the nominees include all wallets that support Binance Chain's mainnet or testnet, whether they're digital apps or hardware-based wallets.
And yes, our panel of judges is composed of members from the Binance Chain team, Binance validators, Trust Wallet, and experts in the DeFi industry. The winner is evaluated based on a combination of factors: popularity, technicality, originality, impact on the Binance Chain ecosystem, and the wallet's total daily usage on the Binance Chain. So without further ado, let's see who the winner is. Congratulations to the team behind Math Wallet.
Thanks Binance for this award. Math Wallet will continue to provide the best wallet experience to both Binance Chain and Binance Smart Chain.
Great. Congratulations to the team behind Math Wallet. So this brings us to the end of the Africa and Middle East section. It's been a pleasure hosting with you, Omar.
Yeah, likewise, Dami. So in the next segment, it's going to focus on what's happening in Russia and the CIS. So we'll hand over the mic now to our MCs, Anna from CoinDesk and our colleague, Gleb.
Yes, but before we end the session, we're excited to share the second of 3 NFT giveaways coming up next. So use your phone to scan the QR code on screen for a chance to win one of 333 possible rewards. You can win a limited edition Binance jersey, VIP level ups, and even up to 100 BNB.
Yeah, and bear in mind, the NFT will only be on screen for 2 minutes. So take a break, try your luck, and make sure that you've downloaded the Engine wallet to receive the NFT and the prize. When we come back, Gleb and Anna will kick off the rest of the program.
Great. Thank you all for watching. It's been a pleasure hosting you.
Hi, everyone. I'm Anna Baidakova of CoinDesk. And I'm here to MC the Russia and CIS section for you. Russia and Ukraine and this part of the world in general is the homeland for many founders and well-known developers in crypto, starting with Bitcoin Core and all the way to the craziness of the DeFi world. But is it as good, as big a market as it could be? And will it catch up to become more notable on the global crypto map? We're going to discuss that with some really interesting speakers. We're going to talk on what's next for this region with the representatives of companies like Sberbank and Microsoft in Russia, as well as the Ministry of the Digital Transformation of Ukraine at the local stage. So if you want some more of the global content, stay with us on the main stage where we're going to talk DeFi, trading strategies, and more with the top crypto investors of the world. So that's going to be hot. And then we'll have Binance Awards, and we'll be giving away the Binance Angel of the Year Award and the Binance Influencer Award for Russia and the CIS region. With such strong nominees as we have, the competition was fierce. So we want to thank all the nominees for their contribution to Binance and for advancing the crypto industry forward. So we're starting in just a minute. And the main stage stream gonna be the global discussion with the investment funds. And on the local stage, you're gonna hear more about crypto in Ukraine and Russia. So navigate between those streams. Now I guess it's time to introduce our speakers. On the local stage, we'd like to introduce and welcome Alexander Bornyakov, the Deputy Minister of Digital Transformation in Ukraine. Alexander will speak about the Ukrainian approach towards cryptocurrency legalization and what advantages it will give Ukraine in the global arena. Also, I just want to remind viewers watching on Binance.com or Huwilo that you can easily toggle between the local and global stages to switch between panels. And the global stage, we will be talking about how to invest smart in crypto in 2020. Join us with Melton Demiros from CoinShares, Paul Verraditaket from Pantera Capital, Michael Arrington from Arrington XRP Capital, and Patrick Hurser from Crypto Finance. Josh Goodbody from Binance will moderate this panel. So don't miss that.
Super stuff. Thank you, Anna. Much appreciated. So if I can ask my panelists to reveal themselves and take their videos on. There we go. Great stuff. I think I can see you all. A very warm welcome to you. Melton, Paul, Simon, Michael, many thanks for being here. It's a real pleasure to have you here on Binance's special day. On today's panel, we're going to be talking about intelligent investing and whether crypto is right for you. So before we kick off, I think it was earlier this year, it was February this year, that Warren Buffett said cryptocurrencies are like a mirage. And I think we probably, to a certain extent, maybe a healthy extent, disagree with the Sage of Omaha on these sentiments. But Melton, maybe if I can start with you. You've been investing in this space since your DCG days through to what you're up to now at CoinShares. How have you seen the investment space evolve over these years? It's a really broad question, but feel free to take it whichever way you'd like.
Sure. Maybe I'll just start by sort of laying out the investment landscape. So when I started investing in 2015, there were about 4 firms who were dedicated to investing in the space. So I met Paul at Pantera. Obviously, he and the Pantera team were there. Hey, Paul. That's a good looking mustache, by the way.
I know.
That's a proper lockdown mustache. Kudos.
That's good.
Thank you.
Sorry, I have to have a little bit of humor. I like to have fun. But there was Pantera, there was Digital Currency Group, Blockchain Capital, and then there were some Silicon Valley larger venture firms who'd invested, and some angels, but it was still a fairly small space. And really the way that people were allocating capital was through a venture strategy. And then some people were buying Bitcoin individually. And there was really only a handful of investment products, the CoinShares XBT provider product in the European market, and then the Grayscale product in the US. So that was really it in terms of getting exposure to crypto. Now, 5 years later, what's been so fun, being part of this industry and really helping it grow and evolve, there's a lot of different ways that people can invest in the industry, from structured passive beta products all the way through to actively managed funds. There's now debt-focused instruments, particularly in the asset-backed lending space, being pioneered by companies like BlockFi and Celsius and Nexo. But effectively, what we have is, 3 ways of investing. You can invest in equity, whether that's early stage all the way through late stage and public companies. There are now a number of listed companies that are crypto and blockchain focused companies.
I wish.
You can invest in debt. And debt is a category that's expanding and starting to get more formalized through both offerings where investors can lend directly, structured credit funds, and other sort of debt instruments. And I think the warrant space is also starting to heat up, which is exciting. And then the last category, and one that we're still, I think, working to kind of define, is the category of investing in digital assets directly and also investing in tokens. We're actually working on a research report right now about where token investing fits in sort of the balance sheet structure and in terms of allocation strategies. But I think all 3 of those areas have seen specialist firms sort of enter the space. And I know Michael and Paul both invest in tokens as well as equity. So maybe that's a good point to sort of pass it to them to talk a bit more about that evolution.
Yeah, absolutely. No, that's fascinating. And so, Paul, I mean, Pantera have been doing this since 2013. You've been investing at all levels of the industry since 2013, 2014. And of course, you've raised a number of venture funds successfully since then. Have you seen a bit of shift in appetite from the institutional space throughout these years? And if so, kind of where is the current temperature in that respect at the moment?
Thank you very much. I'm really excited to be here and really excited to see a lot of familiar faces. You're right, Pantera has been investing in cryptocurrencies and blockchain since 2013. The firm was started by Dan Moorhead, who has a very institutional background coming from Tiger Management as CFO and head of global macro trading. And so he's managed billions of dollars for over 2 decades. And, we've evolved just exactly how the space has sort of evolved too. We're like a startup company. I mean, we're trying to throw investment products out there to sort of match what, investors are demanding. And so in 2013, people were interested in buying Bitcoin. Pantera launched a Pantera Bitcoin fund, and that fund is performed pretty well, 16,000% returns. And then in 2014, that's when I joined Pantera to help with early stage investing. And we launched a VC fund in 2013, but then also our VC fund for sort of non-internal capital in 2014. And that was mostly raising from family offices, high net worth individuals, and some strategic investors. Moving over to 2017, we were the first ones to launch an ICO only fund. So think of it as investing into early stage projects, but getting a future distribution of tokens later on. A SAF was the first iteration of it. Now there's token purchase agreements, et cetera. And, that fund, was sort of the first of its kind and continues to go right now. And then later in 2017, we launched the Digital Asset Fund, which is sort of a later stage token fund. So imagine active buying and selling, long short of cryptocurrencies that are already on the secondary markets. And those 2 funds were still primarily family offices and strategic investors, other VC funds, corporations. But, we are starting to see, especially, I'd say early this year, a lot of institutional investors are getting more and more interested in. Of course, the pandemic sort of, spurred a little bit more incentive to really think about how to allocate into different types of asset classes. And what we're seeing is not only are they interested in venture, which makes a lot of sense because a lot of them have an allocation toward venture capital, but a lot of them are actually interested in tokens too. They're really starting to get educated. And I think because of, other funds like, coin shares and, Mike's fund, you're hearing it from a lot of different sides, and they're really understanding that tokens and equity are just investing into companies, and it's just a different way of accruing value. And so they actually want both equity and tokens now. I'm seeing actually people wanting both sides of it, and they're actually thinking, well, we want to allocate to investors that can just decide for us whether we should be investing into a company using equity or using tokens. So we're seeing quite a bit of interest from endowments right now. We have a fairly large endowment already in Pantera, and I think a lot of them are really saying within the next 6 to 9 months, we really do want a percentage of our wealth into cryptocurrencies, and we're looking for fund managers that can provide us that exposure. For them, it's not really, hey, we want to find the fund manager that's going to produce the largest returns. It's really who's going to be a good steward of our capital, who is going to check the boxes in terms of having the right, vendors, having the right security practices, evaluating companies the right way, being able to sort of navigate the environment and, making sure that, we are investing into a manager that has a good reputation, things like that.
Awesome. Yeah, it really sounds like, we're really on a pathway towards maturation. And in many cases, you guys are spearheading the lead on that. Michael, from your perspective, are you seeing similar things in the investment space? Do you feel like we are slowly maturing and the appetite is maturing? And also, are there any interesting signals that you've seen during this strange economic times we're in caused by COVID, where people are actually starting to think about new asset classes and maybe crypto's a new area for them?
Well, I'm not going to give a 5-minute explanation about the history of my fund. I haven't been in this game as long as everyone else on the panel. I've only been in it since 2018, really. But I was a venture capitalist before that. And so I bring a little bit different approach to the table. I'm thinking as a venture capitalist when I look at these companies. So we like tokens first, but we invest with a venture capitalist mindset, which means we're not always looking to get the best valuation. We want to make sure we get the right co-investors. We want to see if we can do everything we can to help the company. These are lessons that have been learned in Silicon Valley over decades that I just carry with me. And we tend to co-invest with people who have similar values. So what do I think about what's going on in crypto right now? I have no freaking idea. Like, I started my fund the first week of 2018, the $100 million venture hedge fund. It was the absolute top of the market. I mean, it was like literally we were like buying in XRP at 1,400 and Bitcoin was not 20,000, but it's above 15, I think, when we bought in. So the first year of running a hedge fund, I'm not going to pretend like I was the greatest, investment manager ever to do this. We face planted. We beat the market by 50%, and we still lost 40% of our fund. So we survived, and we did well enough that our LPs, we have a very small number of LPs. Unlike other funds, we don't go out and talk to a lot of family offices. I've learned in my career, I like smaller number of business partners. But our LPs love us, so they continue to put more money into the fund. And so we've done well because of that, because we have the right LPs. But, whatever I predict right now is from a guy who started a crypto hedge fund on the absolute top of the market. So instead of predicting where things are going, I just try to find companies that are being led by really, really high quality entrepreneurs and back them and then let them do their thing. And that's about as much of a predictive ability that I have.
Very wise. Thanks, Michael. So Simon, taking a slight change of tact, you and your team very much come from the world of traditional finance. How does crypto tend to perform as an asset class? And you are very much in the trading space as opposed to kind of venture. Are there any comparisons that you draw to any traditional assets? How have you seen the market performing over the last few months?
I mean, in general, with regard to performance, there is no comparison. I mean, what we have seen in the crypto space, starting with Bitcoin, but also with other cryptos popping up in the ICO boom, that was just insane in terms of performance, but not only in absolute terms, but also in relation to its volatility. I mean, even if we have seen high volatility, the performance was outstanding enough to also in risk-adjusted returns, it was just something completely new, and it blew away a lot of minds in the past, I would say. If you look at other measures, for sure there are similarities to other asset classes. For example, what we have seen over the last couple of years, even if they have been pretty volatile, the volatility of Bitcoin and other majors have been constantly coming down. And that's a sign for a mature asset class that your volatility comes down over time. And also compared to, similar to other asset classes, crypto, starting with Bitcoin, started as a very simple product, just a spot product, spot trading. And over the last couple of years, we have developed more complex products on top of that base layer, starting with futures, but also in the meantime, more complex products. So in that case, it's pretty similar and comparable to the incumbent asset classes.
Okay, very helpful. So if we were speaking to a potential investor at the moment, then how would you try and begin to sum up the investment opportunities we see in the space? And maybe that's one for you, Paul. How would you try and contextualize what the opportunity is at this stage right now?
Yeah, so, you know, in terms of the opportunities, I mean, I think the beauty of this space is that, it goes with the ethos of decentralization and the spread of economic wealth. And, you don't need to be a large fund to be investing into this space. You probably notice the rise of DeFi, and the great thing about that is you can participate with just, as little as $10 or $20 and try out some of these DeFi products and be able to start lending, start borrowing, start generating some yield, play around with, different smart contract products. And so, I would suggest people just play around and right now it's a little clunky using MetaMask and things like that, but you can actually participate in all the different things that a lot of the investors are doing, and do your due diligence, have fun, spend whatever money you can lose. But I think that's a great part of this ecosystem. Now, I think for LPs looking to invest into funds, I mean, a lot of people just don't want to deal with the risk of security and managing keys and just want someone to kind of do this for them. Then, the way that I would pitch it to those guys would be, the space is disrupting a whole bunch of different markets. We've seen that even Bitcoin itself has produced a fairly large return. And this is pretty asymmetrical to what we're seeing in traditional markets, that it does make sense to put, a single digit percentage of your net worth into this space. And if you find a manager that you can really trust, find the strategy that makes sense for you. You may be doing one strategy yourself. You may be investing into startups, and maybe you want someone to manage the liquid side of things, or vice versa. Or maybe you want someone to manage both things. But, for those types of investors, I mean, it's really just kind of finding someone that you trust and finding the strategy that you like. But, a single digit percentage of your net worth is a great way to start.
Yeah, brilliant. I think a lot of people at the moment are looking for instruments that they understand and that they've perhaps invested in previously. So on that note, Melton, CoinShares have been pretty active in the exchange traded note space, so kind of pioneering the build of these regulated instruments that are investable for both retail and professional investors alike. What have you tend to see as the typical investor profile in those kind of instruments? Oh, I think you're on mute there.
Oh, sorry.
You're back.
All right. Look, I think the reason I was drawn to building DCG and now CoinShares is, building a firm that provides a variety of different avenues for different types of investors to get into the asset class is really exciting to me. What we've seen with the exchange traded notes, when it started in 2015, the ETN's core audience was primarily retail investors, some high net worth, sophisticated investors who wanted exposure to Bitcoin. So the idea was point click, buy Bitcoin on your regular broker dealer platform. As a result, we ended up building a bunch of trading infrastructure on the back end that connected legacy market makers and brokerage accounts with what we were doing on the crypto side. And now what we've gotten to is sort of a full slate of products, and our investors, you know, we have large institutions who are holding our ETPs or investing in our active strategies, whether that's a venture strategy, a liquid strategy, or an offering through a broker dealer. There's sort of a wide range of investors. And really what we're trying to do is look at what the requirements of different types of investors are and build wrappers around investment themes that make those themes accessible to the people who want to be able to allocate to them. And then we publish a bunch of great research and put out content to try to make it tangible, and to really make this asset class in this industry smell, look, taste, feel like things that people are already comfortable with and know. I will say the volatility in equities and across asset classes over the last 6 months have made the primary objection of Bitcoin's too volatile go out the window, because Bitcoin's volatility is right now, you know, way lower than the volatility we're seeing in other asset classes. So I will say over the last few months, a lot of folks who've historically reacted negatively to the volatility of crypto are coming back and saying, maybe this isn't a terrible idea. They're just repricing risk and rethinking volatility across their portfolio.
Yeah, it's really reframed a lot of people's kind of risk appetite, seeing what's happening in the equities markets, mimicking certain periods of the crypto space's volatility. We'll see where that goes in the next few months.
You have ZERP as well, right? So to Paul's point, you know, ZERP, zero interest rate or even negative interest rate environments, I think are making people look further afield for yield opportunities. And so I used to trade overnight rates, right? Looking at what's happened with LIBOR, SOFR, Maribor, there's going to be a lot of change coming. And I'm really excited, not just for crypto, but crypto adjacent businesses that are creating opportunities for investors, again, across equities, debt, sort of yield products, and then other types of investment strategies that are more esoteric.
Great stuff. Thank you. So Michael, maybe zooming out for a second, talking about your personal thinking on this side, what are the things in the crypto space that are getting you really excited from an investment perspective?
Well, I think Bitcoin is the alpha and the omega here. So it particularly before March, you know, everybody, at least we, looked to Bitcoin as the alpha and the prime mover of every coin and every product in this space. Everything was very correlated to Bitcoin. XRP somewhat less so, but even that very highly correlated. Then we saw how correlated everything got to the markets for obvious reasons in March, and that was a bit of a shock. Although with hindsight, it's not shocking at all. So the way we're investing right now is more than ever, we're looking at the macro situation and trying to figure out like what could happen to completely screw up our core modeling around the price of Bitcoin. And our core modeling is held firm, but with wider parameters than we usually like to use. So that means that it's a very loose model right now. We had a very tight model previously. This is on the trading side of our team. Like I said, I'm more of a venture capitalist. So really all that matters is Bitcoin. Now, if Bitcoin moves up, but dominance falls, that means you're going to see some really nice moves in some of the more high quality altcoins. And so, you know, from our perspective, those are very attractive right now. And then when it comes to making new investments, we do equity and we do tokens, and we've done, you know, we do 1 or 2 a month at least, even in lean times like this when we're not sure what's going to happen to the market. And again, it's pretty easy formula. You find the right team with the right personality traits in the right location, and you have a very, very good chance that that team's going to do well. So we do that.
Perfect.
I will say one thing. When Paul was talking earlier about his ICO fund in 2017, you know, I was doing ICOs privately because our fund hadn't launched yet, and I did some ICOs also through my old venture fund, Crunch Fund, including Orchard, and we couldn't do too many because we had some limit to the venture fund. But anyway, the funny thing is, I know a lot of venture capitalists that bought into a lot of those ICOs. Some of them, as you can imagine, have done terribly over time. Some of them have spiked and then gone down and up, down. But regardless, the funny thing is that these VCs have no idea how to sell these tokens. They sort of FOMO'd into these deals, and they're like, okay, we have the tokens, whatever the hell that means. And then literally years later, they're pinging me because I'm the guy they know in crypto, and they're like, hey, listen, we really need to sell, these tokens that we bought, and we don't know how to do that, particularly in a safe way. So when it really comes down to like what Paul's saying is actually makes sense, and we don't take smaller LPs, but I believe that that Pantera still does take even small LPs, hoping they'll become much larger. It is good to have somebody, if you're doing something beyond Bitcoin and Coinbase, like it's good to have somebody kind of helping you out, because it's hard to sell tokens when you don't even know what a token is.
Yeah, absolutely. And we're running out of time, guys. You've got about a minute and a few seconds left. But on that, is there anything that you'd like to add, Paul, and then maybe Simon, on where your heads are currently at in terms of what you're focusing on?
Yeah, I'll be quick. I mean, just on a high level, areas that we're looking at right now, we're looking at a lot of decentralized finance. So anything that is providing market infrastructure to get in and out of different different currencies, or maybe even certain types of decentralized stable coins, things like that. We're obviously interested in payments. We're in the digital world, and in this market, I think payments is continuing to be very, very popular, especially using cryptocurrencies. And then I think we're continuing to look at consumer applications that provide a portal into different protocols. So think of it as sort of like maybe like a Robinhood for your DeFi protocols or things like that. So those are examples of things we're looking at.
Awesome. Thank you. Simon, anything really quickly you want to point to, something you're interested in?
I think now with more and more institutional investors coming into the space, they're asking for the products they know from the traditional asset classes. So we guess that structured products on crypto underlyings would be an absolute burner in the next couple of years.
Awesome. Great stuff. Meltem, Paul, Simon, Michael, thank you so much for joining us today. We really appreciate it. We hope you'll stick with us and watch the rest of the program. I'm going to hand over now to our wonderful hosts, Anna and Gleb, for the rest of the program. Thank you so much, guys.
Thank you.
Hey guys, yeah, my name is Gleb Koster and I will host this section with Anna. So we just had an amazing discussion with Alexander Bornakov, the Deputy Minister of Digital Transformation of Ukraine at the local stage. So he spoke about the Ukrainian approach towards cryptocurrencies and what advantages legalization will give to Ukraine. So thanks a lot to him. And I would like also to thank our global speakers for interesting panel discussion on the pros and cons of investing in crypto. So now it's time to move on to our next panel.
Yes, and we have a bunch of interesting content here too. So the discussion on the global stage would be especially interesting for active traders. We will talk about trading strategies with Roy Lever from Efficient Frontier, Michael Fang from Hummingbot, Darius Sid from QCP Capital, and Justin Cho from Cumberland. And Charlie Schramm from UntoldStories.com will be moderating this, so that's not to be missed. And at the same time, on the local stage, you can hear about the role of blockchain for Russia and some really knowledgeable people over there, including Denis Yefremov from Da Vinci Capital, Konstantin Goldstein from Microsoft, Sergei Shayachmetov from Sberbank. And the moderator will be Anton Mozgovoy, head of product at Gterium. This discussion will be in Russian.
Yeah, and the third panel discussion will focus on decentralized finance. DeFi is now one of the hottest topics in the blockchain industry, and we will be able to learn more about this trend, firsthand from leaders in this field, such as Sergey Kuntz from 1inch, Calvin Liu from Compound, and Felix Xu from ARPA. So the moderator will be Alex Sanders from Nuggets News.
Oh, awesome. Hey, everyone, I'm Charlie Schramm, and you are... Congratulations to Binance for their 3rd year anniversary. It's super exciting to be here live. I'm here with some friends and some new people that I've never met. I'm excited to be here with you guys. Roe, Michael, Darius, and Justin. Awesome. Like, how you guys doing today?
Pretty good.
Pretty good.
Doing well. Thank you.
You guys, in the research leading up to this panel, I was blown away looking at how you guys built your respective businesses and taking the common denominator on that. It looks like that you guys had all started your businesses based on inefficiencies that you saw in the Bitcoin industry and that would led into the larger crypto industry. You know, in the early days, people were doing OTC on their cell phones under their covers, you know, texting their friends, like buying and selling Bitcoin and crypto. How has that changed? How are people trading now? I'd love to hear everyone answer.
Yeah, I'll go first. Hey, everyone. This is Michael. I'm the CEO of Hummingbot. We're an open source project that allows anyone to basically build and run market making and arbitrage bots on our platform. It's basically like it's like a open source like bot like CG Miner, kind of like for Bitcoin. But overall, we've been in the space for 3 years. So we started as a fund, and so then we were really bad at running a fund, and that's why we switched to creating open source software instead. So I think the biggest thing that's changed in my perspective is really just the maturation of the industry since I started, at least 3 years ago, which is actually fairly recently. But if you think about like how many gyrations we've had in the market since 2017, it's pretty incredible. And we had like the ICO boom, and then we had like IEOs, and we had like, I would say, I think the biggest thing that's changed is really the maturation in terms of having derivative products in the space, both on centralized exchanges, and now we're also seeing that on decentralized exchanges as well. And the introduction of these derivative products as well as lending products has really kind of like turned kind of like crypto into almost like a mini microcosm of what the traditional finance industry looks like. And I think over the next few years, we'll see more and more of that. And that I think we'll see eventually kind of this shift where like the crypto industry, which is like a shadow of the traditional finance industry, kind of eventually kind of eats that traditional industry.
Justin, are people trading Bitcoin and crypto different than they're trading traditional equities and commodities and things like that?
Yeah, that's a good question. I mean, so for example, when you mentioned the OTC and folks trading back in the day when
I
their
still
phones,
do that with Darius.
Yeah. Today, I mean, there's still a lot of OTC trading that goes on over chats as well, and that's akin to traditional finance. So very quickly, my background is actually in FX trading space, and I'm an internal transfer from our parent DRW into Cumberland. And you know, our job is to build a business, as Michael mentioned, that sort of mimics how in the operational elements, the professionalism that exists in traditional markets. And so if you were to trade FX or some derivative products over the counter in traditional finance, you would do it over a chat room like Bloomberg, for example. And you know, even today in crypto, years onwards, you know, we still trade in chats, for example. Now things have evolved slightly more. You can also trade, for example, on APIs or electronic trading. Not just, you know, most people think of APIs connecting to an exchange, but for example, you know, for someone like us, for example, at Cumberland, we offer APIs for folks to connect to us to, as well as a GUI, a single dealer platform. And so this is just an evolution of crypto that follows in line with traditional finance, the different execution methods, if you want to call it, for people to be able to trade today.
It's so interesting that I didn't know that people were trading on chat rooms, and that's how it was done in traditional finance. And to take it further, I didn't, you know, I was looking at the Bloomberg terminal that costs $2,000 a month. And even in today's age, you still need the physical Bloomberg terminal. And I was looking at the value propositions. I was talking to someone. I said, what's the value? Why would you buy this? He said, well, actually, I don't even use it for the data. There's just an internal chat room of people buying and selling cars and homes and things like that. It's like a whole trader community. Yeah. Do we have that in crypto?
I mean, I think there are definitely chat rooms in crypto where people discuss specific topics. It could be something like regulation, et cetera. In terms of trading, because of confidentiality, chat rooms, when I say chat rooms, I mean, for example, a trading firm's team and another trading firm's team. So it would just be the two parties involved and not necessarily a very large grouping. Although there are some groups like that, but I'm not so familiar with them.
Thank you, Roy. What type of, now the topic of this panel is trading strategies, finding your trading edge. You all, and I'm curious to hear how you guys all do this and your clients. Roy, at Efficient Frontier, what type of edge are people looking for? You talk about high frequency trading. Are people, Michael talked about high frequency trading a second ago. Are people really looking for in crypto like that 3-4 second difference on trading?
Yeah, so we're at Efficient Frontier. We're doing algo trading strategies, developing HFT kind of infrastructures. It's actually not 3 seconds. It's much less than that. This is like endless time for us. 2 to 3 seconds. It's like way to the future. We're talking about
3 milliseconds.
Something along these lines. Something like probably 20 to 100 milliseconds overall turnaround. It really depends. I mean, this evolved very significantly over the last few months. We are seeing, when we started, this was like, very far from that. Even the largest exchanges were facing a lot of challenges around these topics, where you have millions of connection concurrently, and you have the exchanges operating not just an exchange as a matching engine, also the bank, the clearinghouse, the broker itself. So the challenge is immense. This is not something that we are familiar with from traditional markets where we come from. So we have seen a lot of issues around stability and explicitly around volatility. When the market is very volatile, we see exchanges struggling to answer the demand, which is tough for an HFT firm like ours. So we had to develop a lot of systems and a lot of risk management processes to kind of understand better what the market condition is, what the exchanges looks like at any time, when to be in the market, when to be out of the market. So there's a lot of things that we needed to develop specifically for crypto. And I think in general, like Binance specifically is probably leading this right now, alongside with a couple of other major exchanges. But we are seeing a very interesting progress. This is becoming similar to what we are used to in traditional markets, and we are, investing a lot in making this better. So yeah, today we are down to the milliseconds. That's been progressing very nicely.
And it's funny that you say that we compare traditional markets to crypto markets, because they're completely different and inefficient and efficient and mature and immature in all of its different ways. And so Darius, one of the questions I have for you, because you deal with large clients and retail clients as well, what are some of these type of things that in trading crypto, in trading Bitcoin, trading altcoins, we're talking about finding our edge. Are there products, and this may be a question for everyone else, are there products and services in our industry that we still don't have today that are preventing larger family offices and bigger funds, et cetera, from coming into our space because they're waiting for this and they need something? And you guys can all jump in and take that answer too.
No, I think that's a very interesting question, right? Because we are right. I think we are right at the cusp of of that changing from being a non-institutional asset to starting to become an institutional asset. In especially in the derivative space, right? In like futures and options, you have that trading on the CME, and that has allowed a lot of institutional interest to start deploying in the space. And it's just this year that we started seeing options volumes grow, futures volumes grow as well a lot on the CME, and we start seeing very top names in the traditional finance space start to come in. We have Renaissance guys talking about investing in the space. You have Paul Tudor Jones saying that he's taken a step in the space as well. So to answer your question, I think it's while we didn't have a lot of this infrastructure, I think a lot of that's being built now. And I think especially in Asia, I think adoption is a lot bigger than a lot deeper than people think. In terms of usage of stable coins for doing traditional business, that's very big in Asia as well. So yeah, I mean, to answer your question, I think, you know, we are getting there.
I remember talking to someone in 2012 or 2013, and he said, or she said actually, in order for Bitcoin trading, and it was just Bitcoin, to be successful, in order for Bitcoin to become successful, you need the ability to short it. And I didn't come from a finance background, so I didn't really understand why would you say that. My understanding was we need to make people have the ability to buy and sell it. Why short it? And that led into the conversation that any mature market really needs options and derivatives. Now, I have to be honest with you guys, I didn't foresee derivatives to be so hot, especially now. It's just constant. I mean, you look at Binance FTX, you look at all you guys are people mostly trading spot? Are they trading derivatives? Most people don't understand that when you're trading a derivative, you're not actually buying the asset. You're buying like almost like an IOU of that. Could we potentially have like epic short squeezes or epic like liquidity squeezes down the road because so many people are trading derivatives now?
No, I think this year in March, right? There was this year in March, the big move, the 50% drop in a single day. That was a function of derivatives, function of a ton of
Derivatives are supposed to
leverage in the
prevent
space.
that from happening.
No, the leverage. I mean, it works both ways, right? I mean, in this case, you know, Bitcoin is highly speculative because the derivatives in the space allow for a lot of for very, very high leverage. So you know, you have that kind of moves happening. But at the same time, as the derivatives markets get more mature and as infrastructure improves, you would see volatility drop as well. You know, like we've seen recently. So I think, you know, it works both ways. I think, you know, it's a function of leverage and a function of infrastructure.
Michael, what trading strategies are people looking at right now? What's your top algorithm bot? You're looking at scalping, day trading. What are people using right now?
Yeah, so one thing Hummingbot is we focus on market making and arbitrage strategies. You can use it to build any type of like, you know, trading bot or, you know, some type of like process that runs 24/7. But the reason we find that people tend to focus on market making and arbitrage is because our users tend to be kind of like more like serious algo traders. So they're not looking to like just like place bets. They're looking for a way to like generate passive income, you know, 24/7 by running some type of automatic process. And so what we found is, you know, a lot of the guys in this panel, you know, they're playing like the big markets, like the Bitcoin tether market and Binance, or, you know, in perpetuals or futures and margins products. But there's tons of like small markets where there's like very few attention from professional market makers.
Small caps.
Yeah, exactly. Small caps. And for the small caps,
chat rooms, I have chat rooms for small caps.
Oh yeah, and these are the guys that before, you know, these guys are like trying to give their tokens away to the folks on this panel for them to market make for them and pay them money. And, you know, even with that, it's still hard for the folks, and for professionals to like devote the time. It's really the time actually to like research a market, understand it, and trade it. And so what we found is, you know, for our users, you know, they're small fish, so they should actually play in small ponds. And so when they play in these smaller markets and they run either arbitrage or market making strategies, especially when they're rewarded. So we started this like decentralized, we'll call it liquidity mining platform recently, where token projects can reward users for market making on their trading pairs. So when you factor in those like additional rewards on top of the fact that, you know, you're paying lower fees as a market maker, and plus the fact that you're playing these like, you know, like smaller markets, I think that's where individuals can frankly, you know, can actually profit, because when you play in larger markets, you're competing against lots of folks who are paying very little fees, and you're at an inherent disadvantage. So I would actually encourage, you know, frankly, individuals who are attending to really look at these smaller trading pairs.
A lot of people got kind of caught holding the bags. You know, a few years ago, I was watching the previous panel here, and Michael was talking about how basically he has VCs coming to him with all these coins. You know, and Darius will jokingly tell me like liquidity isn't that great. You know, so what do you do in that situation? I mean, you have people who have these tokens, these small caps. What's the strategy for trading in and out of these things? You have someone who's coming in and they just want to get involved. Is there like a basic strategy that you can kind of advice that you can give to someone?
Yeah. So the one thing to remember about like, I guess, high frequency trading is that most of the strategies are designed to try to make money regardless of what direction the market goes. They're actually the same strategies that, you know, hedge funds use. And the way it works is if you're market making is you're like a merchant. So you're placing a buy offers and sell offers into the market. So you're basically profiting from people coming to you and buying, selling. So you're trying to make money off the spread. Now you do take risk, because your risk is when the market moves, your inventory position changes. And so you're always either on the wrong side of the market, so to speak. So you essentially have this kind of like market volatility combined with inventory risk. That's your primary risk. And in DeFi, this is called impermanent loss. In centralized exchanges, this is called basic market making or volatility risk. But I think it's a different type of risk than the risk you have when you're holding the bag, because in that scenario, you're dependent on the coin going up to make money. When you're market making or arbitrage, it's really about how you define your trading bot and what kind of parameters you put in that bot that defines how it behaves as the market kind of moves around.
Yeah, that's so interesting because Sorry, did someone try to speak?
Yeah, I just wanted to add to that a couple of things. It's actually demonstrate pretty well why you actually need derivatives. You know, you need to be able to hedge your risk. You don't expect like large hedge funds and pension funds to get into the market putting like $1 billion on an asset that can go down like 20% the next day. This is like impossible to do. It's like even illegal. So this is kind of good demonstration of why you need derivatives and more specifically options. So you need to be able to have the opportunity to hedge any type of risk that you're taking, entering the market. And you're right, Charlie. Before you said about the risk of trading derivatives and what can happen with like large leverages and stuff like that. We have seen this in March 12, where a lot of liquidation happened and the market just drove down, completely crashing. And
what happened very briefly in that situation? Can you explain?
Yeah, so basically a lot of stop losses were triggered because the market was going down. And while the market was going down, the collateral, for example, like BitMEX specifically, are using Bitcoin as collateral. So not just that the market is going down tremendously and triggering all the spot loss, the collateral itself shrinks down. So you are getting out of your position, not just because the price is going down, because now you don't have even enough collateral to in your account. So this is double trigger the trend. And at some point, BitMEX we're intervened in that and kind of stopped that. But it is, it was a major crash. It's like a perfect storm in a kind of situation.
It was a perfect example of how it all went down.
And this is what I said before. If the markets were stable enough in terms of connectivity and the ability for market makers like Hummingbot and ourselves and others to be in the market in that situation, this would actually help the market. But what happened in this situation in crypto specifically is that a lot of exchanges are not handling that. So even people that want to buy in and kind of stop that cannot do that. So we have seen other players trying to reach the exchanges over and over again, just kind of washing it with requests, which actually creates a much more problematic situation all over the place. So yeah, that's gotta
Actually, my next question, and more than welcome to answer it, anyone can answer it, was that I think a lot of people don't actually know the difference between market making and something like wash trading, where one is extremely important, the other one is terrible, and it's almost like almost like the difference in anonymity and privacy. People don't really understand the difference between the two. How could you explain the difference between what is market making and why is it important for like a stable, liquid, healthy, mature market and industry?
It's actually pretty easy to explain, honestly. Market making is basically like placing orders on the book to make sure that you have enough liquidity to buy and sell, assets with the normal prices. This is really what it is. Wash trading is basically trading with yourself to inflate the volume. A whole different story. So somehow, and we were struck by that when we got into the market. We were struck by how popular the this practice is around the industry, where market makers suddenly becomes not market makers, but market takers, and they're actually taking from themselves because there's nobody to take from. And this was like, we can.
Well, you have Cumberland, QCP, Hummingbot, Efficient Frontier, and others are like the blue chips, the shining cities on the hill, and then you have a lot of these other ones that come and they, we all get the telegrams offering shady services or whatever. Has the industry been cleaned up a lot lately in the past 6 months?
I can jump in here. I mean, I definitely think there's been a great deal of consolidation in the last year or so, or even 2 years, Charlie. Well, there's always new names starting up, and there's always a lot of venture capital money coming in to back great ideas. I think people find that it is difficult to run businesses in this space, and in particular, going back to what Roy was saying just a second ago, I think part of the reason why people struggle and why the market can be difficult is because of participants' inability to focus on their risk management. So we talk about derivatives, we talk about leverage, et cetera, but you're talking about trading a product that can move 10, 20, 30% per day, 90 or 100 plus vols. In many ways, these are not really instruments that people should be deploying a lot of leverage with, that you should be being very careful and being diligent about how you place your orders and how you position and how you scale and size your position. So I always like to talk about this topic on panels because folks get very excited when markets move and when markets get volatile, people jump in very large size to make quick money, and I think that's where they can get caught up. And Roy mentioned earlier, one of the things that's difficult about crypto in particular is the fact that there are technical infrastructure issues that cause the market to gap quite a bit. And so even if you were to leave an order to exit a position, if it were to go against you, you might actually not get filled. And so, if you just run scenarios over and over in your mind, you actually have to take that into consideration that, maybe one out of every X amount of trades you put on might not get filled in a black swan gap event. And then, what is your loss in that situation? So you have to, the example I like to use is always having enough chips to sit at the table. If you lose your chips, you can't sit at the table.
But you also have to know that if you leverage too many of your chips, or if you bet too many of your chips and you have very little left, you won't have enough skin in the game to continue playing at that table. Is that kind of what you're going at, right?
That's exactly what I'm talking about. And I think the most painful thing to hear is folks or friends' stories where they've been in the game for a long time, early OGs, and they got caught on the wrong side of a move and lost a big chunk of their hodl bag, right? That's, if people are playing for Bitcoin to be at 100,000, for example, or more, you don't really want to be going crazy, when it's not moving around, in a daily range of $100, right? You want to be smart about it, make sure you're managing your capital accordingly and sizing accordingly, right?
Where do you guys? We have 2 minutes left. I want to hear your answer. Each person, very important. Where do you think the price of Dogecoin will be tomorrow?
No one here is going to answer that question.
No. It's going to be now studied, the whole TikTok situation with that, and it's going to be studied in the future. And you guys, all your research papers and your LPs and your VCs are calling you guys what's going on. But thank you all for being here today. Binance turns 3, amazing day. Roy Leva from Efficient Frontier, Michael Fang from Hummingbot, Darius Sitt, QCP Capital, Justin from Cumberland. Thank you guys so much for coming today. This was awesome.
Thanks, Charlie.
Thanks a lot, guys.
Thanks, Charlie.
Hi guys, and welcome to Binance's Off the Charts virtual conference. Today we'll be discussing the world of DeFi. I've got 3 amazing guests from some very special projects you're probably going to be familiar with. So first of all, we welcome Sergey from 1inch. How are you today?
Hi everyone.
Next up, we've got Felix. He is from ARPA. How are you, Felix?
I'm good. How are you guys?
Very good, thanks. And last but not least, we've got Calvin from Compound. So how are you, Calvin?
I'm great. Thanks for having me.
So I thought just quickly, maybe give us the elevator pitch, what your project does for those that aren't familiar with it. So do you want to kick us off again, Sergey?
Yeah, 1inch is right now what we are doing is aggregation. So we solved last year a huge problem in a DeFi space. We combined all the small liquidity pools into a single one by using dynamic algorithms, and offer now really the best price in the DEX market. So almost also we reach sometimes the prices of the centralized exchanges. And we are going to go direction to be a single point of entry for DeFi and release more and more futures. We have an earn space where everyone can find a liquidity pool and provide liquidity, or can stake, for example, on Curve pool and synthetic staking pool to earn like 10-15% of APR. Yeah, that's what we do. And
thank you. It's a great product. I'm sure plenty of you guys out there have used it, and I'm sure Binance will link it all down below to all the projects, and we'll talk about it more in just a sec. But next up, Felix, do you want to give us the rundown on ARPA?
Sure. Yeah. So ARPA was founded 2.5 years ago. We are a team based in mostly China. I'm in Beijing. We are a privacy preserving computation network that mostly cater to enterprises, right? So several clients that we work with are JD.com, the second largest e-commerce company in China, and also Didi Chuxing is the Uber of China with higher market capital, right? So yeah, so we do secure computation, unencrypted data, and so we protect data privacy at the same time we extract data value. But then, like we do have some plans in DeFi, and we recently did a survey with 700 different respondees from both Chinese DeFi community and also the Western DeFi communities, right? Happy to share that in the future session.
Absolutely. I'm looking forward to getting into that. And Kelvin, I'm sure plenty of people have seen Compound in the headlines lately, but for those that don't know, give us the rundown.
Yeah, Compound, our team's based in San Francisco, Compound Labs. We built and launched the Compound protocol. The Compound protocol is on Ethereum. It's an interest rate protocol for users to earn interest or borrow crypto assets. It's been live for about 2 years. Just about 1 month ago, though, we launched the governance token Comp, which can be used to basically upgrade the protocol over time. And Comp is distributed to users of Compound. So this is sort of a month ago, just marked this transition from Compound being maintained by our team to being maintained by a decentralized community of Comp token holders who can sort of take this interest rate protocol infrastructure, whatever direction they want in the future.
It's probably one of the most talked about things at the moment is that transition away and how we can bootstrap these networks. And we'll certainly get into that in just a second. But first off, I did want to go back to you, Sergey, and talk about 1inch. So as you mentioned before, you guys pull the liquidity and aggregate that all together. And one of the problems with the DEXs last year and the year before, it just wasn't the liquidity and it was really clicky to use. So you guys have solved a lot of those problems. It's very exciting. But more so what I get excited about is the fact that these DeFi Legos, as people are calling them, are all sort of clicking together and making that user experience a lot better. So do you want to maybe talk about the DeFi Legos, what you guys have had to do, and maybe some of the problems that we're seeing because of the gas fees at the moment?
Yeah. We see that in DeFi space, it's very important to be composable. Yeah, all the money in Legos, like also Compound protocol is for us also as a money Lego. We have really deep integration of Compound, and you can only achieve a really great user experience if you put all the money Legos together into one, like all the puzzles into one big picture, to have really more people on board in the DeFi space. Last year we had less projects, and now almost every week new protocols popping up. So and we like to work with all the projects, and you need to be composable because otherwise you will just not reach the goal. From our point of view, I can give you a best example. Layer 2 solutions are, from our point of view, without any future. So they will die with a small liquidity, and of course they have some benefits. For example, DYDX paid long time for the transactions, but it's not the right solution, you know, to just attract people to swap a specific period of time, but they would like run off the money, and would also keep not the highest liquidity in our project. So right now, what we created and where we continue to work is to provide people the best prices on the market by just discovering all the liquidity pools, projects, and for example, the liquidity is getting more and more distributed. For example, Balancer released, Uniswap V2 released. Everyone create own pool on Balancer. You have kind of already like 300 pools on Balancer, maybe more, and there are more coming. Yeah, and no one can discover that all without setting a framework, a protocol on top of that. No, that's what we are doing. About the gas costs, this is pain right now on Ethereum, and you have maybe heard about our gas token, Chi token. Like our name 1inch comes from 1inch punch from Bruce Lee, and we thought like we need to create our own gas token which is more efficient than the original one, GST2, and we named that Chi token because to do these efficient things on the blockchain, what we do, this 1inch punch things, you need the power, yeah, and yeah. For that, we have the Chi token. You can reduce the transaction cost by 32-33% of the gas costs. Of course, this is a hack of the Ethereum virtual machine. And with Ethereum 2.0, it would be completely different, yeah. But for now, it helps a little bit. So if the gas price is very low, you can mint it with your Ethereum, and when it's high, you can burn it, you can sell it, you can speculate on that. It's not financial advice. So and yeah, and you can use it for swapping. Like right now, it's 50 Gwei. Yesterday was 20 Gwei, yeah, or 15, and you could just mint it and burn right now for your swaps. So, but yeah, how I said, this is like a hack. Yeah, it's not more, not less, and we need better solutions to solve that. And from our point of view, this is next generation of the blockchains. It's sharded blockchains. It's Ethereum 2.0, or right now you can already work on Near protocol, and it's faster, cheaper, and it's sharded. Yeah, but sharded architecture needs also rethink everything. Yeah, all the standards we have in Ethereum, we have to rewrite it because sharded architecture is different from what we have right now.
That's correct. We might get back to that later, but I do want to get through all these in 20 minutes. So we'll go on to you, Calvin, and we'll talk about the bootstrapping. So this is something that a lot of the different protocols are experimenting with at the moment. Can we get the users? Can we get the liquidity? Rewarding them with these governance tokens. So do you want to maybe talk about the pros and cons? Because people are saying that this is great in the short term, but is it going to, lead to genuine users staying on and making the right decisions once they have the governance token?
Yeah, that's a great and interesting question. Because what happened with Compound and the Comp token when we launched roughly about a month ago, we as a team didn't predict that, didn't expect that type of hype. Obviously, it's fantastic, and hopefully, people have said like maybe we've kicked off a little bit of a DeFi bull run, which is super exciting for us. But the true motivation for the launch of the Comp token was and is still primarily decentralization. It is that we want users of the protocol to sort of be rewarded with this governance-only token that allows them to express their opinions about how the protocol could be upgraded to be made most useful for them over time. Though the token is traded, has a price, is speculated on, that is the primary goal of the token. And it's not, it wasn't really about liquidity mining. It wasn't, that term didn't even exist, I think, before a month ago, really. It wasn't really about user acquisition. I think just watching what's happened in the past month, though, has really cemented for me the idea that a token for these DeFi and other protocols really does help solve user acquisition and even value capture. And so in that way, I think generally for projects, it's really, really important, and it's really different than any other type of business model that existed before. You can build in this new type of asset that is a customer acquisition channel and a value capture sort of business model. But for us, primarily, it really was about and is about decentralization, which is also working. The governance system is sort of really vibrant. There's a lot of proposals going through. And hopefully over time, all those three things are aligned: decentralized governance, user acquisition, value capture. But certainly our goal was decentralization.
Fantastic. And I completely agree. I think there was so much going on behind the scenes with Ethereum. And sometimes you need a narrative or just the name yield farming, and then all the memes come out. And sometimes that's enough for the average users to kind of put two and two together and understand what's going on. So speaking of average users, Felix, sometimes we've got a bit of a veil of secrecy and people don't really understand what's happening in China and other parts of Asia versus in Western crypto culture. So I'm dying to hear what you found with this big study you did.
Sure. Yeah, so actually we became, even though like our main business as for now is still privacy preserving computation, ARPA is at the forefront of the research and also standardization globally, right? So we participate in IEEE ISO standardization for multi-party computation. But then like I grew like a keen interest since early this year, at the beginning of this year. So we did 3 surveys in total, 1 in March, 1 in the past month, and 2 in the past month. Right, so the one that we did in the past month, we received about 350 response from Chinese community and the other half from English communities, right? So it's all from ARPA communities, but we do have multiple languages. So I have some very interesting findings and also discrepancies between these 2 communities, right? So just to start off, we asked people like, have you heard of DeFi? And 85% of the people in China have heard of DeFi versus like 96% in the West, right? And then like the second question was like, have you ever invested in a DeFi token? 40% in Chinese, they said yes. And that number was actually 80% from our English respondees. So that's a big discrepancy there. And also we asked about, have you ever did like liquidity mining or just like join the pools? And about 30% and about like 25% in Chinese in the Chinese respondees they did, and that number was 35% in the West. So so I would say there's still like a lack of penetration in the Chinese crypto market, even though like the Chinese crypto market has huge volumes, but most of the users are still in centralized exchanges, and I would say like I'd expect that trend to become more decentralized. But then like I also look at the user count for the current DeFi protocols, for example Compound, right? So even though there are about 5 million people, they trade cryptocurrency actively, but for the users in DeFi protocols it's about 1% or even less, right? So we have still like a huge potential untapped market. We have to use some shorter, like easier user onboarding mechanisms, or some liquidity mining and bonus token for people to participate, right? So we ask the reasons why people are willing to participate and what are the concerns for all those DeFi protocols that currently have. And about 75% of people say in both Chinese and English response, they say they require a 15% or more return on investment on an annual basis. So that is combined for the liquidity mining plus the normal interest. And then 70% of people say the gas fee has to be less than $2 for one transaction, which is now even more than that number, right? So those are the 2 main things that people would want to use DeFi or the requirements for DeFi. And the reasons and some other reasons are interest rate mining, permissionless, convenient and safe. And for now using was no access. About 25% of people in both Chinese and English communities, they don't know how to access a DApp, or some even don't have a real crypto wallet, right? Some of them only use exchanges, and a lot of people concerned about the securities. About 30% of people concerned about securities, and also the slow and poor user experience that the current products are offering. And the other thing is, the other very interesting finding is currently most of the users are still using PC, to access protocols. But then, like, if we look at mobile internet trend globally, I think that is slowly converting into mobile, right? So we have some Wallet Connect, we have Magic, and we have some better, Argent, those crypto wallets, and I expect that trend, to become more mobile based versus PC.
Yeah.
For the user image of our survey of our respondees, there are 60% of the people from the English community that are under 25 years old, but most of them have more than 3 years of experience in crypto investing. I think this might be a little exaggerations, but a lot of people are involved in this field, like speculating or investing for a long time. And for the Chinese respondees, there are about 60% of people are between 25 years old to 35 years old, and 40% of them have 3 years of experience in crypto investing, right? So analyzing that data, actually, I think we are about to reach the cycle bottom, because there are just a lot of people that have been around for a long time, and there's not much like new users for even crypto trading. So I think the next year is going to be very great for both crypto in general and also for DeFi as well.
Yeah, I completely agree that the biggest, I guess, attraction for crypto and DeFi in general in the next few years is when we start to have negative interest rates, and yet someone can look at this easy to download phone app and start to see that they can get a better yield and then a better product to swap tokens, start to use these different D apps in everyday life, and it just gives a better user experience. So I'm just conscious of time. We might rip around quickly and give us something exciting that's on your roadmap, either short term or long term. So do you want to start us off there, Sergey?
Yeah, big announcement from our side would be we are going to launch our own token. Yeah, it wouldn't be a governance token. We think a little bit different to current Hives. We think to stay permissionless is the right thing. So what Uniswap showed us, they just destroyed Banker with a permissionless platform. So in this direction we are going to move. And yeah, very soon, a new algorithm which discovers much better all the liquidity out there and provide much better prices for everyone, yeah, on one edge.
Felix, what's on the roadmap or exciting you?
Sure. Yeah. So because we did a survey, like we know that there are something that's still missing in the DeFi world that people have to cover, right? So first of all, like the Asian market is like lack of penetration right now, and also the mobile trend is inevitable, right? So and the other thing is, like, if we want to tap into more users, there are two different potential tracks. The one is we acquire users from centralized exchanges, and the other thing is we bring people in from even outside of crypto. Say like the enterprises or just like normal users. So I have a very similar thoughts with Kelvin that someday the collateral is not going to be like the assets, not going to be cryptocurrency, is going to be some assets outside of the the current crypto system. And also, like, if we look at very long term, the CBDCs, right? So central bank issued digital currency, that is going to be the currency similar to USDT, USDC, and is ultimately going to fund. It's going to expand multiple times of the current DeFi landscape. So we are moving to that direction as well. So and also we're going to release a product mostly catered to crypto audience. But later, so this product is going to be in the market in late 3Q to 4Q. And the next year or 1 to 2 years, we're gonna bring outside assets into the blockchain. That is going to be a longer term plan for us.
Fantastic. And as I touched on, yeah, that's something I'm also very excited about. So I guess thank you all for joining us today. I'm Alex Saunders from Nuggets News. A big thank you to Sergey from 1inch, Felix from ARPA, and Calvin from Compound. I'm sure the guys at Binance will put all the links down below. And it's been great to be part of the virtual conference. So thank you all.
Thank you.
Thanks, Alex. Right.
Thanks, guys.
Thanks to all the speakers, we got tons of great insights. Our next panel discussion will be devoted to one of the most important issues in the crypto industry, safeguarding user privacy and data. And I'm pleased to welcome Brandon Ike from Brave, Peter DeMeo from IBM, and Harry Halpin from NIM. Rachel from CoinDesk will help to lead this panel. And right after that, Lian Hongfei from Amazon Web Services. So many blockchain startups right now use Amazon infrastructure to scale their solutions. And he will share some insights about using the cloud tools. So stay with us.
Hi, everyone. Welcome to Binance Off the Chart conference. I'm Rachel Rosa-Leary. I'm a privacy researcher and contributor for CoinDesk and The Defiant. So I'm really happy to welcome you to this panel, which is called Maintaining User Privacy and Shielding User Data. I'm here with a really interesting selection of guests, which I think all represent different niches within the crypto ecosystem. So we have Brendan Ike, the CEO and co-founder of Brave and the creator of JavaScript, Peter DeMeo, head of market development of IBM Systems Digital Assets, and Harry Halpin, the CEO of MixNet platform New Technologies. So we have a really interesting mix of companies here, and I think they're going to give us a unique insight into some of the most cutting-edge solutions in blockchain today. So let's get started. First, I'd like to hear from all of you. So as I'm sure most of the audience know, the blockchain industry has a privacy problem. So I'd like to know how each of your individual projects aim to address this. So Brendan, if we'd like to start off with you, and then we can go to Peter and then Harry after that, if that works.
Sure. So with Brave and the basic attention token, we're taking a look at privacy from not only the blockchain point of view, but also the browser perspective, because there's still a lot of user privacy concerns around browsing. Notoriously, Chrome, when you're logged into any Google account, will track you in all your browsing for the benefit of Google. And many people still don't know this, though it was covered first by ProPublica, I believe, in 2016. So in Brave, that's not the case. We can use the browser as endpoint software to protect your data where it originates on your device. That's where all your valuable navigations and search queries and so on happen. Then the challenge becomes using cryptographic protocols, including blockchain, to realize user value at the user's discretion with their consent without giving away anything identifiable, anything linkable to make a fingerprint or identifier for the user. And that's where we focused our efforts in Brave with the basic attention token, not only on Ethereum, as you say, public blockchains are not good for privacy per se, but also off-chain. We've been doing research with multi-party computing and distributed key generation, things like that. So we're working on a system that goes from end to end, from where your browser runs on your own trusted hardware, let's hope, all the way to the blockchain.
Great, I'll take it from there. Thanks, Brendan. I just want to let you know that I'm a proud Brave and Bat aficionado. So it's a great project. IBM, on our side, we are one layer down in terms of the hardware. And when you just mentioned sort of hardware-based mechanisms to help encryption, we're all about that. In particular, our projects are around trusted execution environments. You mentioned secure multi-party computation, also differential privacy, and in fact, homomorphic encryption. All of these can be, used for different use cases and in fact combined in certain ways, right? Trusted execution environments, for example, they perform isolation for your code and your data, and they can, safeguard secrets. There's different chip architectures for that. There's Intel with their software guard extensions, which we've heard a lot about. ARM has its trust zone, and maybe few people have any knowledge about what IBM's doing, but we have secure execution. It's manifested in a product named the HyperProtect family or services, which is including crypto, virtual servers, databases as a service, et cetera, as well as a Kubernetes service forthcoming. And, there are different trade-offs with each of these things, but I think, when it comes to, at least at the enterprise level, being able to, protect everything and not necessarily worry about picking and choosing what to protect. Because, when you get it set once and then you start to combine different things together, it sort of changes that parameters, and all of a sudden you might have some data exfiltration or leaking going on, and, that doesn't really help, does it? On the secure multi-party front, as you know, the whole idea there is privacy, preserving computation with two or more parties, right? Where in the case of blockchain, with a lot of companies like Unbound Tech and ShardX and Fireblocks and so forth, they are using this technology to have distributed key material for signing and being able to sign transactions without ever reconstituting the key physically, right? And so we find that's really good, and it actually works a lot better when you run it inside of a trusted execution environment, because all software crypto can only go so far, right? I mean, that's what the FIPS certifications are. And then finally, we have differential privacy homomorphic encryption. I'll talk a little bit maybe about if I have an opportunity later, but just as an example, for differential privacy, it just basically uses mathematical noise to preserve individuals' privacy and confidentiality, while allowing, in the case of, let's say, the US Census in 2020, for population statistics to be observed, okay? So for example, if you're, my age is, I just turned 52, happy birthday to myself. But if I want to obfuscate that information, I can pick like a random number, let's say plus or minus 7, and then combine that. And so if you were able to determine my age, you don't have to have a range between like 25, well, whatever, 7 plus or 7 minus. So there's a little bit of noise to protect it. And this year, for the, as I mentioned, the 2020 census, we're basically keeping, or I should say, keeping the responses of all the US citizens confidential when we're making that data sets available to be used by industry and actually government as well. So there's a few projects we have. I'll cover a homomorphic later, sensitive to the time.
Yeah, so I'm Harry Halpin. I'm the CEO and co-founder of NIM Technologies, and we're what's called a network level privacy project. So Brendan has a browser, and that browser defends your application level privacy when you're browsing the internet, and you can run this browser on trusted hardware or do computations on hardware of your choice. But the fact of the matter is, every time you send a TCP/IP or UDP packet, anytime you send a packet over the internet, the IP address on that packet is revealed. So you can use software like Tor or VPN to help stop adversaries like Chainalysis or the NSA or cyber criminals from discovering your IP address and then locating out who you are when you're doing, for example, a Bitcoin or whatever transaction. However, a very powerful adversary can just watch the network's data flowing in and out, and they can figure out the timing, the sort of volume, and the patterns of internet traffic that you are sending. So what a mix that does is we basically take those individual packets, we encrypt them, and we shuffle them. That's mixing. And then we send them out. And that really provides resistance against even what we call global passive adversaries that can watch the entire network. So we're one level below chain. So even if you use technology such as Zcash, shielded transactions, or Monero ring signatures to hide some on-chain data, the network level is still going to leak your identity and the kind of transaction data. So we really do recommend people look into using our technology and mixed networks in general to basically defend their privacy on the network level. And if you use our technology in combination with, say, Brave, you get something which we call full stack privacy or holistic privacy, where you can really defend all levels of your data from outside surveillance. We're a very proud graduate of the first Binance incubator back in 2018.
Great. Thank you all so much. That was really interesting to hear about. And I like how each of your projects is approaching a different layer of the privacy problem. And together with the network layer, application, and the hardware layer, we're approaching a full stack, or as Harry called it, a holistic privacy model. So I want to talk about the title of this panel, which is that privacy is mission critical. I want to ask all of you, why is privacy mission critical? Why is not having privacy a bad thing? And what can having privacy also bring to the crypto industry? So we'll go around again, starting with Brendan. Thanks.
Well, as I mentioned, people realized starting around 2016 that browsers, and notably Chrome is the biggest, were captured by advertising technology companies, or search ad companies, let's call them. And it wasn't just a concern about economics, so that's part of it. It was, could advertisers be doing things to actually maliciously target you? Could some stalker do something, or some troll do something bad to you? Could malvertisers put ransomware into ads and buy very inexpensive ad slots and make a profit in spite of paying for those ad slots by getting the payload for the ransomware exploit kit loader onto your PC? And this actually happened when we first launched in beta in 2016 in March. There was ransomware on the front of the New York Times. Now, I guarantee you the New York Times does not do direct ad sales to a ransomware vendor. It was all done through ad exchanges, notably Google's. So there's incredible indirection. This also manifests as fraud, which hurts publishers. So we see an ecosystem problem here that needs solving. And privacy is how this manifests to users, or loss of privacy. But there's a deeper, I think, social problem and an ecological problem here. And so by defending yourself as a user and defending your privacy, you can protect yourself from threats like malware. The next step, though, is if you're protecting yourself, how do publishers who are relying on ad tech to some extent for whatever revenue is left in the pie tin after all the intermediaries have taken their cuts, how do publishers make themselves whole? And that's why, from the beginning, Brave took on the mission of not only protecting users through blocking tracking, principally blocking bad JavaScripts, my bad millennial, from 1995, but also letting users choose to participate in a cryptocurrency-based system of rewarding themselves if they choose to take private ads matched only on their device in the browser and cryptographically confirmed, and then give back cryptocurrency to their favorite sites, YouTubers, Twitch streamers, creators, even Twitter account holders and Reddit account holders. We have Vimeo and other platforms, GitHub too. So now we have a robust way for private, I would say up to three-party commerce. And that means that there's a tricky economic revenue split going on here. You have to be willing to take advertising revenue and split it into two pieces, one for the user and one for Brave perhaps, or one for the publisher, maybe even three pieces, where there's a publisher piece, a Brave piece, and a user piece. And we can do this. We mentioned MPC. I was glad to hear Peter talk about partial homomorphic encryption. We use additive PHE. In our latest research work, we're building a system that is self-verifiable to the advertiser. There's no central trusted counterparty. And so privacy plays an important role here, not just for the user, but for advertisers and publishers. They want to keep their reporting and their sort of marketing or their publisher performance data private to themselves. They don't want it to be arbitraged across the Google Ad Exchange, which has been a real problem. The sort of ad tech superpowers have created a non-level playing field where if you are using programmatic advertising, others can swoop in and steal your audience cheaply. That's how ad fraudsters do it, and malware vendors can partake of this too. So you can end up starting with a good proposition, making some good revenue, and month by month, your revenue goes down, your audience gets stolen away, and they're being served ads on bad sites. This is a very deep social problem. I'm sure we could talk about much longer, but privacy is not just an individual, or mundane concern. It's a big concern. People even manifest this in political concerns about companies like Facebook. So we take this as a systems problem and try to solve it at the browser layer. We also do have Tor integrated as an option as desktop Brave. wanted to mention that, but I'm looking forward to seeing what Harry can do, because that approach that he mentioned, the full stack approach, is very attractive.
Thanks, Brendan. You know, when we think about new business models that are created out of having privacy, you can take them from, if you will, the traditional side or the crypto side. For example, on the crypto side, working with a number of large banks on tokenizing debt. And they would, you know, obviously start off with a permissioned private blockchain, but that's not the ultimate goal. At the same time, pure play public chains don't have the necessary encryption available to them today that would make the counterparties on these kinds of transactions comfortable, right? And so there is a need, I think, to, you know, blend these different privacy technologies and techniques in a way to unlock a lot of new kinds of business. I mean, tokenization, of course, everyone talks about it, but there's a lot of things that are holding it back, right? And the use case is part of it, but I think it's also around privacy and usable encryption for these kinds of things. Maybe a non-blockchain example would be if you have, you're an airline and you want to create a better experience, create new promotions. You know where the person's going because you dropped them off at at an airport, but maybe you want to collect the information on the hotel or the restaurants or entertainment venues, and do so in a way that you're not, leaking or providing potentially competing chains with, valuable client or customer information. And likewise, they don't want to do the same either, right? And then, again, getting back to homomorphic encryption, if we can all essentially work on the intersection of those data without giving away the sources of those data, then these kinds of models can be monetized. Whereas today, quite frankly, it's a bit of a not really possible. And I totally agree in your point about like the Googles and Facebooks and so forth. I mean, think about it. If you want to use your smartphone to go to work and find a new way to avoid traffic, right, and maybe find a coffee shop if it's really bad, you're giving all that information away. It's getting monetized, and there's a good fair part of the generation out there using social media that's totally fine with that, right? But I think that perhaps with different technologies, different techniques, you don't have to necessarily trade off all of this information about your intent and what you're doing, when you're doing it, and so forth, which could be collected, right, and triangulated, and still get the benefit of the services that you're interested in consuming.
Yeah, and I'll just try to be very quick. The essential vision of Bitcoin is to promote human freedom, to promote human autonomy over their financial transactions. But what we really need, and which we're all, myself and Brendan and other folks are all providing, essentially is how to promote our freedom and autonomy over all aspects of our digital lives, including every time we touch the internet, making sure that we can't be recorded. And it's not just advertisers. This technology, if you are under surveillance, it can be a matter of life or death. People have discovered this in places like Syria. People are discovering this in Hong Kong, and you never know what the next government we may have in Europe and the United States may be, and what will happen in the future. So I think it's privacy is a fundamental safeguard, and the surveillance-based advertising regimes are not producing very much innovation. If you look at Google, what has Google done recently? You have no interesting new products for years. It seems that they're becoming not very innovative. And if you imagine a world where we had technologies that defend our privacy, that defend our freedom, we can imagine whole different and new kinds of technology which can promote our kind of well-being through this collective public good, which we call privacy. And that may lead to much more innovation than the current, what I would call stagnation that we're seeing in Silicon Valley. So that's it. Rachel, maybe we should end up pretty soon.
Yeah, thanks. That was really nice. Interesting perspectives from all of you, all of them quite different. And I think everyone is convinced from listening to you that there's a pressing need for these technologies. So we only have 5 minutes left. I think we have a time for one very quick question. If you can all just, give a quick answer to this. I'd like to know, given that there's such a need for these technologies that you're creating, what's the current status of the projects? when are we going to have the level of privacy for the kind of end user that is necessary in the way that you've described?
So Brave believes in releasing early and often. This is the motto of Netscape from the early days. Jamie Zawinski wrote about it very well. Once you get something in front of users that they like, you can find the right path rather than having to aim 5 years out and miss the target and get lost in hyperspace. So we have users. We have over 15 million users monthly active. We have over 5.3 million daily active users. We have, I think, 2.5 million now actively engaged over 30 days with the basic attention token platform, which is optional. If you use Brave, you're not compelled to use it. You can choose to use it. And just by using Brave, you're protecting your data. But with the basic attention token, you're able to transact in this emerging system of tokenization that Peter mentioned. And that's where you definitely need not only blockchain, but advanced cryptographic protocols to protect yourself, to have sort of end party deals that don't involve any counterparty risk or centralization. So we're working on decentralizing all the pieces, because as you start engaging in this system, as we have by shipping early, you immediately run into not only businesses that are working in the old model, but regulators who are thinking in the old way. And so you have to sort of thread the needle there, which we've done. But as we push on and as the blockchains evolve, I think we're finding that everything is lining up. And it was great to hear Peter talk about fintech, I would say, or banks and debt, because I believe there's sort of a correspondence between these systems. Ad tech is kind of like a form of debt. And I mentioned arbitrage in the system built in, which benefits the big platforms, which are monopolies. So they do impose deadweight losses. As Harry mentioned, these are destructive of innovation. These are just stagnating everything. Innovation, not only at Google, which there could be a lot of innovation elsewhere, but if people can't realize the economic value they should from their own data, then they won't have the resources to innovate either. So we're committed to this long-term vision I think we all share. And we're making progress month by month as we grow.
Thanks, Brendan. From an IBM perspective, we have our trusted execution technology on premise and on the cloud. And so anybody that's interested in protecting their hardware, their applications and their data, please see us. But another thing that we're working on too, though, is really quantum safe technology. And both from the perspective of implementing lattice curves, which we have already done in our hardware, as well as incorporating those kind of protections in our homomorphic encryption, which is also coming out. I actually can't necessarily say when, but let's just say it's coming. And so, all of this provides us the ability to offer something that other cloud providers cannot. And this is this concept of operational versus technical assurance. Operational assurance simply means this: we have policies and procedures in place. As administrators of cloud provider X, we promise not to steal your stuff. But if we're offered, or if we were given or mandated a law enforcement order or request, we could honor it because we do have access, right? On the IBM side, on the IBM Cloud and the HyperTech family, which is what I work with, we have what's called technical assurance, and we provide only the end user the ability to access their content. So IBM administrators, developers, whomever, no access any of the time. Even our memory dumps are encrypted, and so. It's a whole area of making sure that only the right people have access to their content and not anybody else, especially trusted administrators, including developers. By the way, we have a way to deploy applications so that not only do we know what was deployed, but we can have it fully audited, inclusive of business processes. To your point, Brendan, about regulated industries, what they care about is how do I take a process and make it much more efficient using DLT? And so we protect all of that kind of stuff. Over to you.
Yeah, and we're currently at what we would call testnet. We have a running mixed node. You can easily run yourself. Probably this is the first running mixnet since the early 2000s, late 90s, mixed minion. So our mixnet works today. We're currently adding support for different protocols. SOX 5, it's under development, so this should allow easy integration with wallets and browsers. We'll see a few of those, at least on the wallet side, launching later in the month. And we're currently working on our incentive system, which will also hopefully launch by, I would say, 2 or 3 months. And we would love for more people to get involved, because with a mixed network, you can actually, it's a bit like mining. You can actually, what we're hoping is that people can actually make enough money to both cover their expenses, but also to essentially make a profit by essentially helping preserve this public collective good of privacy by turning your machine on and essentially allowing your machine to mix packets for other people. And I'm very excited about what the future will hold with all of our partners and hopefully with you.
Brilliant. Thanks so much, everyone. We got to wrap this up, but thanks very much for joining us. And thanks also to the audience for listening. And I hope you enjoyed the rest of the Binance conference. Bye.
Thanks, Rachel.
Thank you. Bye.
Bye.
Binance, the best for the future. Hello, I'm Liang Hong, Principal Developer Advocate for AWS. I'm excited to welcome you to the event, and in particular to AWS session. Thank you for taking time to spend with us today. Organizations around the world are moving to the cloud-based infrastructure to increase IT agility, nearly unlimited scalability, improve reliability, and lower costs. When deciding which cloud provider to select, companies often base their decision on the quality, performance, and the scale of the provider's global data center infrastructure. Companies want to trust their assets and IT infrastructure to a provider that has the most advanced system, security, processes, and controls in place to deliver the performance, experience, and business return needed by the largest of the companies. With cloud computing, AWS manages and maintains the technology infrastructure in a secure environment, and business access this resource via the internet to developer and run their applications. The AWS global infrastructure is the most secure, extensive, and reliable cloud platform, offering over 175 fully featured services from data center globally. Whether you need to deploy your application workloads across the globe in a single click, or you want to build and deploy specific application closer to your end users with single digital millisecond latency, AWS provides you the cloud infrastructure where and when you need it. With millions of the active customers and tens of the thousands of the partners globally, AWS has the largest and the most dynamic ecosystem. Customers across virtually every industry and of every size, including startups, enterprise, and public sector organizations, and running every imaginable use case on AWS. Let's talk about AWS Global Platform. The AWS Cloud spans 76 availability zones with 24 geographic regions around the world, with announced plan for the 9 more availability zones and 3 more regions in the year. As you know, AWS CloudFront is a fast content delivery network services, which use a global network of the 216 points of the presence, all supported by AWS Global Network, which connects all of the AWS regions, a network that's been built specifically for the cloud, and we continue to iterate on it. The AWS cloud infrastructure has 2 key concepts: region and availability zones. A region is a physical location in the world where we have multiple availability zones. Availability zones, or AZs, consist of one or more data center, each with the redundant power, networking, and connectivity, hosted in separate facility. Availability zone exists on isolated fault lines, flood plains, networks, and electrical grids to substantially reduce the chance of the simultaneous failure. It provides the latencies of performing real-time data replication and the reliability of the multiple physical locations. Let's look at the design principle of AWS region. The AWS region composed of the 3 or more availability zones, which is the composed of the 1 or more data center and are located in separate and distinct geographic location with enough distance to significantly reduce risk. Each AZ is isolated by distance, power, and networking. What it means is that each availability zone is a fully isolated partition of the AWS global infrastructure. This means that it's a physical separate from another availability zone by a meaningful distance. Each availability zone has its own unique power and networking connectivity. All AZs are interconnected with the high bandwidth, low latency networking over redundant, dedicated metro fiber. That provides high throughput, low latency networking between AZs. So traditionally, companies have been focusing to a binary trade-off, either move quickly or stay secure. Due to the overly manual security processes, InfoSec is often forced to slow things down to human speed so they can ensure the security of the organization. Today, it is possible to automate many of the basic security tasks. Organizations can use AWS to innovate quickly and maintain their security posture. It is important that we focus on the solution where we bring decision makers and builders together, while continuously emphasizing the security is the top priority for everyone. Our commitment to you as our customer is that security is critical. As you look at the Gartner ICE Magic Quadrant report, Gartner calls the breadth of our offering and the strength of our infrastructure, including the unmatched reliability and availability we provide. It's this innovation and the strength of our customer base which leads to AWS continuing to be the market leader in the cloud. And AWS is the longest running leader in the cloud with the 9th consecutive leader in the cloud. Having said so much, we must summarize the benefits of the AWS global infrastructure. Security at AWS starts with our core infrastructure. You can build on the most secure global infrastructure, knowing you always own your data, including the ability to encrypt it, move it, and manage retention at any time. Availability. AWS delivered highest network availability of any cloud provider, with 7 times fewer downtime hours from networking issue than the next largest cloud provider. Performance. AWS global infrastructure is built for performance. AWS offers low latency, low packet loss, and high overall network quality. This is achieved with the fully redundant 100 GB Ethernet fiber, often providing many terabytes of the capacity between regions. The benefits for its global footprint. AWS has the largest global infrastructure footprint of any provider, and this footprint is consistently increasing at a significant rate. Scalability. AWS global infrastructure enables companies to be extremely flexible and take advantage of the conceptually infinite scalability of the cloud. Companies can quickly spin up resources as they needed them, deploying hundreds or even thousands of the servers in minutes. Flexibility. The AWS global infrastructure gives you the flexibility of the choosing how and where you want to run your workloads. And when you are using the same network, control panel, APIs, and AWS services. I know that in addition to cloud computing, you also want to understand the blockchain on cloud. In my opinion, blockchain means many different things. Distributed ledger technology, cryptocurrency, smart contracts, etc., and is moving toward mainstream integration as companies looking to reduce the inefficiencies and the redundancies. Just like other infrastructure, a blockchain built on AWS can be integrated with many AWS services. As a cloud provider, AWS is the blockchain protocol agnostic. AWS encourages experiments across all protocols on AWS platform. Security, scalability, and high availability are important to cloud users. This applies to a blockchain protocol themselves and the overall platform as a whole. As a blockchain platform, we will focus on AWS services that are essential to building out networking, membership, identity, transaction and messaging, security, compute, off-chain storage, analytics, notification, and management platform components demonstrated in the diagram above. The core blockchain components and the distributed applications can still have the single points of failure. We recommended leveraging AWS computing services such as EC2, ECS, and even Lambda in combination with load balancing and auto-scaling for deploying these workloads for both public and private blockchain protocols. Not all data can or should be stored on the blockchain or be distributed ledger. We recommend digging deeper into DynamoDB to storing your key value data, S3 for the file storage, and database and file storage services like RDS, Aruro, and EFS that provide built-in resiliency, elasticity, and compliance with the industry-specific regulation. More than 1 million active customers from Airbnb to Capital One use our AWS cloud infrastructure because of our unmatched reliability, security, and performance. AWS has unmatched appearance, maturity, reliability, security, and performance that you can depend upon your most important application. For over 13 years, AWS has been delivering cloud services to millions of customers around the world, running a wide variety of use cases. AWS has the most operational experience at great scale of any cloud provider. Now, we cover a lot of ground, and I want to really thank everyone for taking time to tune in. I encourage you to make use of AWS to develop your skill and find a new way to use technology to make difference. Our customers understand the great potential of AWS technology and the many benefits that the cloud brings with it in terms of the security, reliability, cost saving, innovation, and the ability to deploy globally in minutes. We look forward to seeing the creativity and the innovation that will result from you building in the cloud in AWS. Thank you. 3 years is just the beginning of our journey. We spans
Yes, tech infrastructure needs to scale, so does our community. I'm Wanxin Chen from Binance marketing team, and I'm happy to announce one of our favorite awards, the Binance Angel of the Year. Our amazing angel volunteers are pillars of the Binance community. In honor of our 200 angels in 50 different countries, we're giving away 5 awards for the best performing angels for each specialty. Okay, without further ado, let's see the result. So the winners will be selected based on the angel peer vote and the Binance team votes. And here's our first award for Community Guardian. This is our most competitive award because most of our angels are focused on this specialty. And congratulations to the nominees. Making to this list is already quite difficult. Congrats. And let's see who's the winner here. Rivka, congratulations. Rivka is always in our community, and she is so kind and patient in helping all the users with questions. You definitely deserve this.
Hello everyone, I'm Ripke, the Binance Angel from the Netherlands, helping many communities of Binance. I would like to thank especially Hiyi and CC for being an inspiration for me during this journey. Thank you to the employees and angels who voted for me to get this first ever given award to an angel. It's much appreciated, and last but not least, I would like to thank the Binance community for always being around. Thanks everyone for being a part of this journey together. To the Binance angels worldwide, I wanted to send you a message of appreciation for working hard to make Binance community successful. It's so cool to see the communities growing and you are making it happen. Thanks everyone!
And here comes our second award for PR and KOL pilot. And the nominees needs to have pretty good network and good relationship building. And the winner goes to Tony. Congratulations to Tony. He's our UK angel, been with us for more than a year, and he's always helpful in all different fronts. Thanks, Tony.
Hi everyone, my name is Tony Jufi. I'm one of the Binance Angels based here in UK. I'm delighted to accept this Angel of the Year Winners Award. Also, I would like to take this opportunity to thank everyone that voted for me. In particular, I would like to give special thanks to Hei and Cizi for inspiring us. To my Binance colleagues, your continued support is much appreciated. And to my fellow angels, I say, keep up the great work. Let us all exchange the world one conversation at a time. Finally, Binance, happy 3rd year anniversary. And to everyone that is watching this live stream, enjoy the show. Many thanks and see you all soon. Bye-bye.
And here comes our third award for Content Master. For this one, the nominee needs to be both hardworking at the same time with a talent of skills. And let's see who's gonna to be the winner. Jorge, congratulations. Jorge is very hardworking and he produces a lot of content for us, especially in Espanol. We appreciate you, Jorge.
Hey, I just want to say that I am very happy to receive this award because it means a lot to me. Binance is my second home and together we are building something great. The Angels family grows and every day we stay more closer and stronger. So thank you so much for this.
Thanks, Jorge. And here's our fourth award for Events Master. This one requires a dedication to details and relentless execution. And who's going to be the winner? Mire, congratulations to our Latin angel. Mire is also super passionate and helpful, now helping us doing a lot of the webinars. Thanks, Mire.
Hello, greetings from Medellin, Colombia. It's a pleasure for me to be part of Binance family and speak to my Latin American communities about freedom of money. Angel program is really fantastic. You can teach and learn and meet people around the world. It's the best experience in my life. Thank you so much. I'm really happy.
And the final one, Tech Warrior. This one requires a deep understanding of our product and also able to answer technicality related questions. And who's going to be the final winner? Richie, congratulations. Richie is especially helpful in our Binance DEX community because DEX is so technical. Richie is the one that's always there to provide answers.
Hello,
Thanks,
folks.
Richie.
This is Richie, Binance Angel. I want to thank everybody for their support. I'm very happy to receive this award. I want to thank the team, the Angels, and each one of you who made this possible. Thank you. Love you all. Stay safe. And let's hope for the best in the years to come. Take care. Bye.
Congrats to all the winners. And we love all our angels in our family.
So it's time for us to say goodbye. I hope you enjoyed the panels within this segment, and I would like to thank all of our speakers.
Yeah, thank you for being with us, everyone, and stay for more panels from other parts of the world. And please welcome the Binance folks in North America and Latin America, Leah and Myra.
Hi, everyone. Thank you so much, Gleb and Anna. Hi, everyone. My name is Leah Lee, and thank you so much for joining us at the Binance Turns 3 Off the Charts conference. I will be co-hosting the last segment of our 10-hour-long program focusing on North America and Latin America. Please also welcome my lovely co-host, Myra.
Hello, everyone. I'm Mayra Siqueira from Brazil, and it's amazing we've seen Binance doing in those 3 years to come here today with such a strong presences in all America. So thank you for your constant support and for keeping us on, helping us on spreading freedom of money to such a diverse community. I'm thrilled to be part of it.
Likewise. The community is super strong when it comes to crypto, and it's really incredible to see what we can accomplish together. So as we celebrate our Binance's 3-year anniversary today, especially, we really want to thank all of our users and everyone in the community for all of your support and your feedback over the years and how you've been able to help us get to where we are today.
Yeah, that's so true. And we love hearing your feedbacks, hearing your suggestions, ideas, so we can keep on building. It's our pleasure also to present our final lineup of panels and fireside chats to wrap up this major event.
So in this segment, you can look forward to quite a few topics that I'm personally pretty excited about as well. Definitely stay tuned, and we'll be discussing the regulatory environment when it comes to crypto and blockchain. We will also talk about scalability and blockchain development, security, and how to keep your crypto assets secure, and also, of course, how the COVID-19 pandemic is shaping and accelerating the adoption of crypto worldwide.
And also pay attention that we have two stages. So we have the global stage and also the local stage. And in the local stage, we're going to bring now, from now on, 2 localized contents with stunning case of crypto study case in Venezuela, which is really interesting. So this is going to be a Spanish session for all the hablantes de español. And also we're going to have a panel fully dedicated to innovation and financial services in Brazil. So it's going to be in Portuguese, ou seja, em português para vocês. So let's enjoy it.
In this segment, we will also be announcing a few more winners and awards. Really loved hearing about all of the angels that won awards, so congratulations to all the angels. In this segment, we will announce the final influencer awards. So we will have influencer for North America, for Latin America, as well as for global. So please stay with us until the very end, and we'll also have a special happy birthday for Binance's 3 years.
And also remember, we still have one more NFT giveaway during this event. So stay with us until the end of the program for a chance to win this limited edition prize. So let's kick off the program with our next keynotes and panels. Could you introduce them, Leah?
Yep. It's my pleasure to welcome Perry-Ann Boring of the Chamber of Digital Commerce and Tina Baker-Taylor from Binance for a conversation on crypto's evolving regulatory environment. Enjoy.
Hi, I'm Tina Baker-Taylor, Binance's UK Director, and I'm delighted today to be joined by Perry-Ann Boring, Founder and President of the Chamber of Digital Commerce. Hey, Perry-Ann, thank you so much for joining us today.
Hey, Tina, thanks for having me. I'm so glad to be here.
It's a pleasure. We're glad you're here. So for our viewers who may not know you or may not know you well, we'd like to find out a little bit more about you and your journey toward founding the Chamber. So prior, you began your career as the legislative analyst in the U.S. House of Representatives. And I think you were advising on finance, economics, tax, and healthcare policy, so a number of things. Is that when you became interested in the crypto space? And what did you find most interesting about crypto?
Yeah, so just to give you a little bit of background on how I got here and how I made my way to Washington, D.C., I was studying economics at the University of Florida during the 2008 financial crisis. And the financial crisis was the real estate market, and the real estate issues were in Florida. And pretty much everybody I knew was impacted by this crisis. So I, as a student of economics, really challenged myself to just understand what the heck was going on between Washington and Wall Street and why that was impacting my family and my community and everybody I knew. And what came out of that was I was quite disturbed at the state of our economic affairs and how we got there, and felt we should have better accountability. And I dedicated my career to working in public policy and moved to DC to fight for a better economic future for my generation and those that will come after me. So in working on Capitol Hill, I learned about Bitcoin. And as an economist, looking at this virtual currency that was not controlled or created by a government or a corporation or a group of people, that was just a fascinating concept. And the more I learned about Bitcoin and the more I learned about blockchain technology, the more I felt that all of the things that I was fighting for from a policy perspective, from a more transparent financial system to a more safe and secure and efficient way to remit payment globally, I felt that Bitcoin represented all of those things. And I just became a huge advocate. And I feel this is the most important technology I will ever see in my entire life. And I've dedicated dedicated my entire focus on helping support the growth of this technology. So that's when we founded the Chamber of Digital Commerce. And our space and what we're trying to contribute to this industry is to be a reputable resource based in our nation's capital that can work with policymakers and help just answer all the questions that they have. There's a lot of fear, there's a lot of anxiety, there's a lot of skepticism and weird things about Bitcoin and crypto and blockchain. We want to educate them, we want to make sure they have the right information, and we want to make sure our voice is heard in conversations that are going to impact the growth of our ecosystem. So that's what we set out to do, and we've been pretty busy ever since.
Yes, you have. So, since its inception, crypto, that's a great story, flip-footing story. I don't think a lot of people hear I was on the Hill and I learned about Bitcoin in the same sentence. So that's, I think, a little unusual. And also, I think I'm struck by every time I talk to founders who just drip with excitement about what they're doing, it's usually because they're addressing a problem that they experience themselves. So it's very personal. And it sounds like your story started there from a very personal experience of something that you wanted to prevent from happening again.
Yeah, I mean,
so,
it's a real deal. I really believe in it, and this is what I'm spending my time on, and it's how I want to help make the world a better place. And there's really nothing else like being able to do what you love and make that also your career. So I feel very, very honored but fortunate to get to do what we do today.
Yeah, huge. So since 2008, when the crypto scene kind of exploded onto the world, there's been many ups and downs. We've experienced some great challenges, but also some exponential growth along the way. And the industry continues to grow, and yet we still have some regulatory uncertainty. So, after establishing the chamber, now actually 6 years ago, almost to the day, you're celebrating your 6th birthday soon. So congratulations, 6 years strong. What has been the most surprising part of your 6-year journey? So you kind of described, what you set out to do. Along the way, what surprised you most?
So one of the things that's been really interesting is seeing the Federal Reserve's response to cryptocurrencies. The very first, the beginning of Bitcoin and the crypto ecosystem, a lot of people were really interested in what is the Fed's response going to be to this new currency. And the Fed didn't say a word until 2013 when Janet Yellen was testifying in her semi-annual address to Congress, and Senator Joe Manchin had asked Janet Yellen, the chair of the Fed, if she could ban Bitcoin, because he was adamantly against it because of all the illicit, that was right during Silk Road. So people using Bitcoin for illicit purposes. He thought it should be shut down. Can the Fed do that? And her response was, the Fed has no jurisdiction over Bitcoin. And that was it. And she just moved on to the next question. And that was all we heard from, arguably one of the most powerful institutions. And it really didn't give us much insight at all in their thinking. And fast forward to today. So just a few years later, it hasn't really been, it seems in Bitcoin time, it seems like a long time, but in just a few short years, the new chair of the Fed, Jay Powell, just last year was asked about Bitcoin in his semi-annual address to Congress. And he said, it's like digital gold. So a store of value is one of the key use cases of Bitcoin. And to have the chair of the Fed validate that this technology is used for that purpose, I thought was probably one of the most important endorsements it could ever get. So just to see that huge change in their thinking in a short amount of time has been really amazing to see, and really shows the true importance of what this technology is and what it has the potential to become.
I think what it also shows, Perianne, is the true importance of working with and educating and being committed to influencing some of these influencers. And, the chamber by this point had spent, 3 at least years working with these policymakers to try and and change that early perception that you talked about. So that's a big leap from, let's ban it to, it's digital gold. So the chamber itself, its members consist of a number of big firms, right? So big players in the innovation space, IBM, Cisco, Microsoft, NASDAQ, Block, to name a few, Block One. So is it important to have these big companies use their gravitas and their weight to influence policymakers? And if yes, then where does that leave the smaller companies, and how can they get involved?
Yeah, so 2 points there. As someone who worked on Capitol Hill on financial services issues, my job was to meet with all the trade groups and the lobbyists and the special interest groups and all the issues Congress is deliberating on. And the incumbents, the banks, your established financial services companies, they have just unbelievable amounts of resources in these policy conversations. And I always felt that it is important that we engage them in the process, because their voice is so big and so powerful. To just ignore that would be naive and a huge misstep. So by creating an inclusive platform, and so for me, I've always wanted the chamber and everything that I do in this space to be as inclusive as possible. We welcome all those in our platform that share our values, depending, many different companies are using and innovating in many different ways, and all of those who are dedicated to growing this ecosystem and developing this technology, please be a part of these important policy conversations that we're having. But we are really unique in that I think we probably are, one of the only groups in this space that has brought together the technology companies and the incumbents into one platform. And to be able to get consensus amongst that group on the policy positions impacting crypto, that is a huge feat, but it also gives us an unbelievably powerful voice as we're advocating for the growth of this ecosystem. And you do raise a good point. So if you have really big companies, like public companies, and you have really small companies, like small startups, they don't have the same amount of resources to contribute to public policy things. And I certainly understand that. We represent over 200 companies. Every single company has the same voice. Larger companies do pay larger membership dues because they should.
Yeah.
But every company has an equal voice. And our default position when we create a policy position and we go to the Hill or we go to Congress or the agencies and we're advocating for that, is always going to be what's best for the ecosystem as a whole, not what's best for this member or this group or that group. We're advocating for the growth of the entire ecosystem. So that's where our position is always going to default to. And sometimes not everybody agrees on that because it can disenfranchise one company over another. But we want to do the right thing. We want to have an inclusive platform, and we're always going to promote the growth of this ecosystem over the growth of one particular company who may or may not have more resources than another. So all are encouraged and welcome to participate, and we ensure that what we do is in line with that mission.
So what is the upside for the industry? I've talked a lot about, engaging as well, and how to do that and how to be effective in doing that, no matter what the size of your business is. And, there will always be, those members of the community that, have a different ideological view around the involvement that policymakers and governments, et cetera, should or do have today in this technology. So what is in it for the industry? What is the upside for participating in these policy discussions?
These conversations are happening whether you want to be a part of them or not. I mean, the most powerful offices in the world today are debating and writing regulations and that are going to dictate the future of this ecosystem. So you have a choice. You can either be a part of the conversation and try to shape it in a direction that's going to be beneficial, or you can have it shaped around you. And I can guarantee you that the former is going to end up in a better position than the latter. And also for younger companies, for startups, for smaller organizations, being a part of a trade group like the Chamber, where you can share resources with other companies, is a great way to have your voice heard without having to bring in your own team of public policy experts. So there's a lot of resources you can share off of the Chamber's platform to ensure you have a meaningful voice, but doing it in a way that makes sense for a small company.
So from this quite privileged position that the Chamber, privileged is maybe not the right word. I think you guys have earned the position that you're in to be at the table and influencing some of these discussions. What are you hearing from governments and policymakers about, how do they go about formulating some of these rules and regulations? What are the considerations that they're evaluating?
Yeah, and one of the other things that I wanted to just mention, we also operate on a form of radical transparency. So all of our members are posted on our website. So anyone and everybody wants to know exactly who is part of the Chamber's platform. And also all of our policy positions are all posted on our website. So every single letter we've ever submitted to a government organization, we put it online. So if you want to learn more about exactly what our positions are and exactly what we're saying to government, we want everyone to be able to share in that knowledge and have access to that in the spirit of transparency. In terms of what some of the issues are, it's kind of interesting. So I'll just focus on the US. And in the US, we have this two-party system, with Republicans and Democrats, and both sides kind of care about two very different things. Republicans really seem to be very sympathetic to the business arguments that this is an incredibly important technology. We want the United States to be at the lead of developing and the innovation of this technology. We want US companies to be leaders in the blockchain ecosystem, and we want to give them the regulatory clarity and certainty they need to be able to establish businesses and grow and create jobs and create economic prosperity here in the United States. Republicans seem to be more sympathetic to that conversation and have been quite active in helping us get there on a number of specific policy issues, whether it's AML issues or tax issues, or dealing with the Securities and Exchange Commission, or so on and so forth. On the Democrat side, it's very different types of conversations. So they have concerns about investor protections and consumer protections. Bitcoin has been a highly volatile asset over the past, since its inception, and we've seen huge price spikes during a bull market, and then a lot of wealth being evaporated through the cycles. And there's natural concerns there, but that's also the ebb and flow of crypto. So they're very much in tune with ensuring that, yes, of course, the United States is a leader in this technology, but that we're also creating appropriate protections to ensure we have a healthy functioning marketplace. So there is a balance, and there are legitimate concerns that need to be addressed. And getting there has always been, an ongoing conversation.
Yeah. So, and I think we see history repeat itself kind of time and again, right? And when it comes to these big, wholesale technological advancements and innovations, regulatory uncertainty kind of seems to follow. It just comes hand in hand with that. What do you think we have or can learn from lessons from the past that we can put into practice today to kind of ease some of that transition into global acceptance and the mainstreaming of blockchain technologies and crypto assets that go along with them?
So education is the biggest challenge in having these policy conversations. And learning about Bitcoin and cryptocurrencies and blockchain technology is something that takes more than like a 15-minute briefing. I mean, usually when you meet with, a member of Congress or, a regulatory official, they're pretty quick meetings. They're used to like coming in, you have a quick ask, you deliver like a one-pager kind of with a summary, but it's been hard to do that if nobody really knows what it is you're talking about. So first we have to inspire these people to want to understand this technology. And then once they have a basic degree of education, then we can start talking about the policy issues. So continuing to refine the messaging and making the learning process easier. I mean, when I first learned about Bitcoin, I probably spent an entire year just reading all sorts of whatever I could find on the internet. And it took me quite a bit of time just to understand how it works, let alone how the policy implications are going to impact this technology. So
well, and imagine all the information that you had at your disposal, or you had access to then, versus the amount of information that exists today.
You can comment
right?
on
It's exponential.
Reddit and like YouTube videos of founders and tech pioneers. So, refining those the messaging, refining the educational process is key. And something that I really believe in is actually letting people touch the technology, like letting them send and receive a crypto transaction, letting them see how it works. And that's always really tricky because you can't really give a government official something of money. So you've got to figure out a way to create a demo, but still let them interact with it. So those are some of the things we're working on.
I remember working with a policymaker trying to explain custody and how cold storage wasn't like a safe deposit box, but it kind of was.
But it is, yeah.
And so we kind of got all the way through that, and maybe 45 minutes later, we're a bit on the same page. And then somebody says, well, what's MPC? And I thought, oh no. And, the whole idea that on top of the thing they just learned, now there's all these additional layers of things where, it's already evolved into something else. So there's already permutations of what I just explained to you. And I remember the look on their face, and I just thought, okay, that is for another day, because you've literally just
only go so far in one setting.
Yeah, we'll come back to MPC. So I can imagine that over the last 6 years, and probably a couple of years prior, while you were having your flippening, that there have been some pretty interesting moments in crypto for you. I get the impression that you've seen and heard a lot of things. So I'd like to ask you what your most memorable moment from your time in crypto has been.
So my most memorable moment would have been the day we announced the formation of the chamber, which we launched on July 19th of 2014. So just about 6 years ago, and we did it at the North American Bitcoin Conference. It was an industry event in Chicago. And Mo Levin, who organized the event, he allowed me to make a special announcement at the very start of the event. So I'm in there, and nobody really knows what I'm about to say, and probably nobody really knows me either. And I get up and I just said, look, we're launching the Chamber of Digital Commerce. It's launched today. All are welcome to be a part of this. We are here to serve as a resource to policymakers and to address all these regulatory challenges that we have as a community. And this is 2014, so the community looked very different then than it did today. There was no one in DC working on crypto stuff at all. We were the first. I mean, most of the people were like cypherpunks, anarcho-capitalist, like the whole narrative of Bitcoin was like, we're going to overthrow the government, we're going to overthrow the banks, and like Bitcoin's going to change, like this. It was a really different space. So I'm like, either these people are going to like bulldoze me and maybe assassinate me. I don't know. I was so nervous. I really did not know how people would respond. And to my surprise, everyone cheered, stood, and clapped. Like people were like, "This is a great idea." So it was probably the most relieving moment of my life, because I wasn't sure how folks were going to take it. But it has been amazing that there are a lot of people that do understand we have to engage on the policy. As much as we're investing on building out the tech and building out our teams and our communities and our platforms, you also have to invest in those policy issues, because if you don't get those right, it's going to put huge roadblocks. So it's, I mean, it's been a total whirlwind.
It's a great story. So we're coming up to time to round us up. What advice would you give for entrepreneurs and startups entering the space? What's next for them? What's next for us?
Yeah. So two quick things. One is keep going. it's hard to start any type of company, but we are in such a challenging space, building networks, building crypto networks. That creates a lot of time. It takes a huge amount of dedication, but know what you're doing is changing the world for the better. And despite whatever roadblocks are thrown your way, keep going. And if you need a word of encouragement, call me anytime. I'm happy to be, your supporter and advocate in that journey, as I've had to do with building the chamber as a nonprofit. And the second is be kind to each other. There's a lot of competition in this space, but at the end of the day, we are all on the same team. We are all still part of the same community. And I have seen so many companies and people just come and go. They start something, it doesn't work. They get in a fight with everybody. They, say things they regret. And then when they want to try their next idea, nobody wants to work with them because they were complete jerks. And at the end of the day, we're all working towards the same goal. We're all taking many different ways of going about that. But if we're not united as a community, it's going to be that much harder to accomplish these big picture things we're all setting out to do. So keep going and be kind to each other.
So true. Great advice, Perianne. If people are interested to learn more about the chamber, how do they get in touch with you? And if people would like to reach out to you personally, how best can they do that?
You can see us on our website at digitalchamber.org, and you can ping me on Twitter at PerianneDC.
Awesome. Thanks again for joining us. It was great to see you.
What does it take to connect billions of people, to transcend borders and rewrite the system to be more fair, just, and free for all? It takes a willingness to challenge old principles and create a new foundation that forever changes the way we transact and interact, because financial freedom belongs to everyone. Over the past 3 years, you've watched us grow from a cryptocurrency exchange to a comprehensive blockchain ecosystem to build today's crypto world and the crypto universe of tomorrow. We were never alone, because from day one, we've been working and growing together in support of a shared vision to increase the freedom of money for all. The freedom to earn, the freedom to hold, the freedom to spend, share, and give. No matter who you are or where you come from, it takes a community to change the world. Though we still have a long way to go, let's take these next steps together. Because together, we'll unlock the freedom to do more.
Whoa, I love this edition. And it's great to look back on how much we've accomplished in this last 3 years, right, Leah?
That video is so good.
Yeah.
Thank you again to Tina and Perianne too for the latest on the regulatory side. Switching gears a little bit, next up we'll be diving into blockchain on the global stage with a panel on scalability and blockchain development. On this session, we will have Benjamin Minsu from Elrond, Nick White from Harmony, Mo Dong from Stellar Network, Terry Wang from IOST, and this will be moderated by Lucas Nipsey from Coinmetrics.
And in parallel, on the local stage, I invite a Spanish panel about how hyperinflation turned Venezuela in a case study of crypto with unique and different opportunities. This is an amazing panel. It's going to be held all in Spanish, and we're going to have a chat with Jorge Farias from Crypto Buyer, also Ernesto Contreras from Dash, Aaron Olmos from Olmos Group Venezuela, and Maria Angel from Binance will be our moderator. So if you are watching on Binance.com, you can easily jump from the global stage to the local stage, and then you can watch this quite interesting panel.
And after these sessions, we are pretty excited to have Michael Gu, also known as Box Mining, moderating a panel on security, managing the keys to crypto's success, with Victor Radchenko, CEO of Trust Wallet, Veronica Wong, CEO of SafePal, Matt Marks, co-founder of Fishport, and Konstantin Gladich, CEO of Atomic Wallet. Please enjoy.
Thanks, Myra, and thanks, Leah.
and welcome everyone to the Scalability in Blockchain Development panel. My name is Lucas Nuzzi. I am the Network Data Product Manager at Coinmetrics. And since 2013, I've been building infrastructure for crypto assets, as well as producing cross-sectional research on various technologies. And blockchain scalability has certainly been a recurring topic of my research, and it's perhaps one of the biggest challenges faced by our industry today. So to discuss this topic, I am joined by a great panel of co-founders that are trying to address the issue of blockchain scalability. So perhaps to kick things off, how about we start with brief introductions of each one of our panelists and perhaps a short description of your projects. Maybe start with you, Nick.
Sure, I'm happy to start. Well, thanks, Lucas. And thanks, Binance, for hosting this event. It's really exciting to talk about scalability because it's something that Harmony is very passionate about. Harmony is a layer 1 protocol that uses proof of stake and sharding to create a much faster, more scalable, lower cost blockchain protocol for people to build decentralized applications. We started in 2018 and we did an IEO on Binance in 2019. And just this past May, we launched our mainnet, which has 4 shards and features proof of stake. So we're one of the first sharded proof of stake networks to ever go live. And we think there's a tremendous opportunity right now with the emergence of decentralized finance and a lot of really exciting use cases where scalability and gas costs are becoming a problem. So I think it's a very apt time for us to be talking about this. And Harmony is really taking a stand as one of the foremost scalable blockchain protocols.
Who wants to go next?
All right, I guess I can go next. Hi everyone, Mo from Setter. We are a layer 2 scaling platform that built on existing blockchains like Ethereum, like any EVM supported blockchains. And our mission here is to bring extremely high interactiveness and real-time user interaction to blockchain that is familiar by the people who are using today's normal non-blockchain applications. We're bridging the gap of user experience here, basically. So we launched the world's first generalized state channel network mainnet last year, and we just run a major mainnet upgrade last May, and we're seeing people expanding the network very quickly. And we're also very interested in the application, especially on the mass adoption side of a blockchain application. And we have also released the world's first ever real money esport application on App Store that can use cryptocurrency, but the user has no feeling they're actually interacting with the blockchain directly. And recently we have been also stepping into the layer 2 rollup space and focusing on some new technology and exciting development on hybrid rollup that are proposed by us that we can talk about. Yep.
Hello guys, this is Benjamin Minku. I'm founder and CEO of Elrond. Really great to be here and have this conversation. Elrond is basically the platform that I think will take blockchain from the current state it is right now, where we have something like 50 million people from around the world playing with this technology, to 1 billion people, where people not only have a really scalable architecture, meaning one that is high bandwidth, low latency, high security, and low cost, but then we've also put a lot of time into solving the user experience problem. And we think that by addressing these two critical problems, we will essentially escape this narrow crypto niche that we currently have right now and make blockchain usable for anyone in the world by making it invisible. So I'm really excited to be here and have this conversation.
I guess it's my turn. So hi guys, this is Terry. It's 2 a.m. in the morning in in Beijing right now. So really glad to join the Binance 3rd year anniversary. So I'm the co-founder and CTO of IOST. And IOST is a 3rd generation blockchain designed for decentralized applications. So according to the radar and some of the ranking DApp websites. So right now we are the top four, the top four DI platform in the world. So right now LSD is hosting about 80 decentralized applications, ranging from DeFi and education tools and games and so on. So we are also focusing on building enterprise level and government platforms for blockchain applications. So we have already collaborated with the third largest power generation platform in Japan. And we recently announced the collaboration with the Chinese National NAA, so the National Archive Administration in China. So I believe that's probably one of the highest level government's collaboration in the blockchain field. And our goal is to bring more blockchain applications for enterprises and for customers. So very excited to be here. And yeah, so that's IST.
Fantastic. And thank you for joining us this late for you. And I imagine others are joining us in inconvenient timelines, but this is exciting enough to bring people in. So to formalize this problem, scalability is not a new problem, right? It's been a recurring topic of research amongst high-profile researchers in this industry, dating back to 2014. So I think Vitalik Buterin was the first one to kind of formalize the problems around building scalable blockchains with the scalability trilemma, right? It's the idea that blockchains can have at most 2 out of 3 key properties. So one, of course, is scalability, the ability to process thousands of transactions at every second and onboard potentially millions or billions of users. The second one is security, right? Providing strong assurances on economic finality, the assurances that transactions will be final and in a timely manner. And then the third one is decentralization. So how independent is each of the validating nodes in a network so that it prevents, systems that rely on oligarchies and, some pervasive governance systems. From you guys' perspective, 4 years after the scalability trilemma has been introduced, do you think it's still valid given how far the industry has come along in terms of research? And do you agree with the formalization of the problem? Are there additional issues that you see or challenges that you see with scalable blockchains?
I would go first and try to address this idea, which is called the scalability trilemma. And interestingly enough, I would say that this trilemma applies very much to Ethereum and to the projects that came before Ethereum. But essentially, it does not necessarily apply to new architectures that can solve this problem from a higher level standpoint. Meaning that if you reason from first principles, there is no particular reason why you should not be able to solve this problem of not only scalability, but also security and decentralization in a very, very compelling and elegant way. Interestingly enough, in an interview not long ago, I think Vitalik mentioned that as he built Ethereum, he was very much aware that it would not scale. And in his mind, this was very much a kind of limitation that they were not able to address at that time. We are in a very different period right now. And during this year, I believe that everything in the blockchain space will change just because of especially 2 important elements. The first one is this transition from dial-up to broadband that we saw in the early internet era and will very likely see in the blockchain space. Elrond is one of the projects that is trying to show that you can process more than 10,000 transactions per second right now, not in 2 or 3 years, right now with 5 seconds latency and 100x lower cost than Bitcoin or Ethereum. And then obviously the second problem beyond the scalability problem will be this very, very difficult user experience problem. that is sort of like an elephant in the room after you solve scalability. So I think it will be probably the most exciting time to look at the blockchain space. And for people that have not yet entered, this is the time where they want to start doing the research, engaging with the project, and if they can build stuff or can get involved, it will likely be very, very much worth it.
So thanks for the great note there. And just to kind of add on to that topic a little bit more. I think the topic of scalability trilemma was defined within a certain solution space, if you may. So basically, we talked about decentralization, security, and the scalability cannot be achieved at the same time. But under what condition? Like the assumption back then was that, okay, we have this blockchain that every compute and storage is running on the same exact blockchain, and every node in this system has to reach consensus in a way in terms of both compute and storage at the exact same time. And for that kind of construct, it is very hard to reach these three properties all together at the same time. But things has changed a lot in the sense that we opened up the solution space a lot. Like basically, we're not only just saying that, okay, we need to have storage and computer scalability at the exact same time. We can actually separate that. We can actually introduce one layer of indirection. It's always said that in computer science, if you cannot solve a problem, you just introduce another layer of indirection and you will be able to solve that problem. And that's kind of like the promises of some of the sharding solutions, and also for layer 2 at a certain extent. That is, we're leveling up and separating these more nuanced different parameters to create new solution spaces. So like, for example, in Setter's hybrid rollup, we're trading off a little bit more of the storage scalability, but we're gaining a lot more on the computer side. Basically, if you have a more scalability on the storage side in terms of like blockchain's call data storage, then what you can actually get is a huge amount of computer power that reside actually in layer 2. And then later on, if there's any security issues, it can still be challenged back into the blockchain to the slower path. So like this kind of a separation start to explode in the blockchain technology environment. So it becomes a much more nuanced solution space than the initial topic we have been discussing about, like, okay, we have this flat blockchain and these are three properties that we cannot achieve at the same time. I think that narrative has passed and has evolved so much after that period of time.
I'd love to add a little color too from Harmony's perspective, and it kind of builds off of what Benjamin and Mo were saying. First of all, I just want to talk about two of the main components of our architecture that we feel solve scalability. And I also want to talk more about what is scalability. And to me, scalability is not just throughput. It also has to do with the cost of the transaction and also how fast can you confirm a transaction. And so on those last 2 points, proof of stake is actually a really huge innovation that allows us to have finality in Harmony's case in 8 seconds. And it also allows us to reduce the cost of running the blockchain and therefore reduces the cost of using it. So that's a big one. But sharding obviously is kind of what Mo and Benjamin were mentioning. I think sharding is the one that does in some sense solve the scalability trilemma. It allows you to parallelize blockchain transactions and storage to split them up. But just like Mo said, it actually in some sense pushes a problem, sort of kicks the can down the road slightly, in that sharding introduces its own problems just as it solves others. And those problems are that it challenges composability, which is a big feature in Ethereum, especially for use cases like decentralized finance. When you have a sharded blockchain, smart contracts can't necessarily be composable in the same way. And also the whole issue around data availability. So I think what I'm trying to say is that sharding is a solution, but it introduces more problems, and those are problems that still have yet to be solved. And so it'll be interesting. I don't think that the problem is over. I think it will be constantly trying to improve blockchain architecture. kind of like Benjamin said, from dial-up to broadband, and then there's going to be 5G. So we're at Harmony really excited about continuing to pursue the latest innovations, and it's kind of going to be a never-ending quest, I think.
Yeah, that's great. And I myself used to be very skeptical of the solutions back then when this was introduced, because I think at the time it really encompassed the state of research around these systems. And this, precedes sharding, it precedes, the viralization of layer 2 approaches. And, more recently, it seems like a lot of these issues have been addressed, and we have at least a roadmap to get to a potential solution. Whereas before, there wasn't much clarity on how each one of these individual axioms would be resolved. But at the same time, it seems like the projects that are pursuing this are somewhat siloed, and it seems like scalability has been solved, but it's also spread out into various different projects. Do you guys see that as something that is a potential challenge for your project specifically? Because not only you're having to scale, but you're having to scale and build a community that already exists and might not be fully aware of the intrinsics of each one of those individual systems. Are there trade-offs to be considered? Is it a situation where it really has to be built from the ground up again to be successful in onboarding users and growing exponentially?
I would touch on this and say that this is basically how things naturally evolve. You essentially cannot create or build a new technology and expect to have the community already, or to have everything built around the ecosystem of the project. Rather, if you look at how things have evolved, Bitcoin, interestingly enough, was not understood by the bankers or financiers of the time. And it was very much even rejected by the technical people. Many of the people that were initially attracted to Bitcoin were cypherpunks, were people that understood some very, very interesting ideas and then were attracted to this thing that looked almost like a toy, and they wanted to explore what it could do. Now, interestingly enough, if you look at Ethereum did not take off within the Bitcoin community. In fact, the Bitcoin community was full of maximalists that became sort of fundamentalists on different aspects and could not see what Ethereum was doing. And then Ethereum found a different community among the developers. I would say that any project that is trying to purely replicate the Ethereum model, will not be able to win because there's already an Ethereum out there. So we not only need to understand that this was the case with Bitcoin and Ethereum, but naturally it will be the case for the new projects coming out also. So given these facts, I believe it will be extremely interesting to see how the projects position themselves, what the communities around the projects look like, how the projects become relevant in those communities, and most importantly, what I think specifically about Elrond is that if you look at the blockchain space and where it is right now, there's this really obvious question that most of the projects and most of the people do not ask, which is, it's nice that we have a few million, tens of millions of people that are a part of the space, that are trading, that are trying to build different things, but why are we looking only inside the current community? Why are there not very, very significant efforts put in to escape this group of people? Because there are 8 billion people out there. And if we can address this, if we can not only have a network that can be or work at the internet scale, but then also offer a user experience, like I said, where you don't have to learn rocket science, but the people can really use the features of the blockchain as being invisible. At that point, I think you're finally going to see the promise of the blockchain technology fulfilled in a way that we've not seen before. And this is actually the really great promise that excites us very, very much at Belron and that we're pushing for.
Fantastic. Yeah. So for the sake of time, we're approaching the end here. Perhaps each one of you guys could tell us what is the upcoming updates for each one of these projects. What are you guys working on? And perhaps end by saying how people can get in touch, how people can learn more about your projects, and some resources that they could search online.
Well, I can
Maybe
start.
starting with you, Mo. Yeah.
Yeah, we have been pushing not only on the technology front, but also pretty heavily on the consumer side. And we're exactly as Ben said, like we're jumping out of the circle, and we are pushing a very major release update for the application that we're building called Arcade Wing, and that is kind of accumulating from all sides a large amount of users and converting them gradually to blockchain users. So you can always follow us at Setter.network and our Telegram groups.
Great. People can find us at harmony.one. We have a very active Telegram community, so I encourage people to go there if they want to learn more. We are on Twitter at Harmony Protocol. And some of the big updates we have coming up, we just launched our grants program last month, and we have our first batch of grantees. So you can see that, who we're funding. And if you're interested to build with Harmony, and experience what it's like to have an extremely low cost and fast finality blockchain, we encourage you to get in touch. We'd love to build with you. So we have about $7 million worth of grant funding. So yeah, please come to us and we'd love to work together.
See you all guys are frozen. So you can just follow IOST on the official Twitter. So it's at IOST_official. And you can also follow us in the Reddit and our mainnet. Okay, so we got a big milestone coming, and you probably can see this all over the place in this month. And also we got two of the DeFi protocols and some of the very large corporation and partnerships coming out. So you can see more of the applications we're running out. So yeah, stay tuned.
Hey guys, my name is Michael and welcome to this panel on the key to success. And we have a lot of wallets and ways to keep our cryptocurrency safe in this age. Now, this panel, we have a lot of guests, and I'll give everyone a chance to introduce themselves in a sec. But I just want to introduce the panel and say that cryptocurrencies, there's a phrase going around saying, be your own bank, Bitcoin, be your own bank. And that's kind of intimidating sometimes. When I first saw that model, I'm so intimidated. How do I be my own bank? And relaying my experiences from 2012, early on, keeping your cryptocurrency safe has been extremely hard. But over these years, this has been a lot easier with the invention of both hardware wallets and better software wallets that you can keep your cryptographic keys safe. So I, for one, I've been one of those people who've lost keys all the way back on USB drives because I didn't know how to do it. But now things are much simpler, but we can make it even simpler still. And I think this is one of the major challenges going forward. So it's a great time to introduce our panels and talk about what this session is going to be about. So let's start off with Victor. Can you do a mini introduction about who you are and what you're trying to do in this space?
Hey, Michael. Yeah, so my name is Victor, and I'm a founder of Trust Wallet. So we're mainly focused on a couple of things that we're trying to do in crypto is making crypto safe and accessible. So that's been something in my passion for the past 3 years when I started learning into crypto. Yeah, that's pretty much my introduction.
Awesome. Then we have Veronica Wong from SafePal.
Hi, everyone. This is Veronica from SafePal. I'm the CEO and the co-founder. And we are trying to make crypto secure and simple for the masses, especially for those who has recently entered the crypto space without any basic or professional knowledge about what crypto is and what blockchain is. We feel it's important to make crypto accessible to many people, regardless of how you know about crypto. Yeah, that's what we do. Thank you.
Nice. So we also have Matt Marks, the co-founder of Fishport.
Thanks, Michael. Yeah, I'm Matt. I'm a co-founder of Fishport, and at Fishport, we are combating phishing and scams in the crypto industry.
Awesome. And lastly, Konstantin from Atomic Wallet.
Hey everyone, yes, I'm the CEO and the founder of Atomic Wallets. It's non-custodial wallet application for mobile, for desktop. So we have 500,000 downloads across all the world. And our main goal is to make crypto as easy for everyone as we can. And even your grandmother can use crypto. That's all, and secure.
Awesome. And definitely one of the themes in our introductions, obviously, is making cryptos easier to use. Because obviously, one of the elements is your private key, which gives anyone complete access to cryptocurrencies and the entire balance if they have that key. And obviously, making that easier to use and to store safely has been one of the challenges that has been coming and facing. So I think for the first question to throw out there, how do we make things easier to use, but at the same time allow people to retain that full control of the key? How is that possible? And what are the challenges and kind of the challenges that to overcome in this space? And I'll leave that. I guess we'll start off in order if everyone wants to start. I mean, we can start off with Victor first, and then we'll rotate in a corner, and then we'll talk about that in a discussion.
Yeah, totally. I think, when we talk about the private keys, it's all about kind of like a balance between security and also simplicity. And you basically need to draw a line between, different private keys. We usually consider them to be like as a cold storage or a hot storage. So in which sense, some keys could be stored offline without, anyone touching it. And then there's, software wallets that have, hot private keys, which means they have some connection to the internet. So in this case, it's all about, how much security do you want to have? Do you want to keep large amounts of crypto on your wallet or not? And so this is where, every kind of company trying to do different approaches in terms of different products. So there's company who are building like a hardware wallets, who's optimizing for like larger amounts of crypto. And there's also products that are trying to build software wallets that optimizes mostly for like simplicity, because, you keep everything on your phone. It's exposed to different kind of problems. And so that's where we as developers trying to like find a better design on how to build a better storage for the private keys itself.
Is there any challenges you came across though? I mean, I think one of the issues I think a lot of people saw is, do you ask users to save their private key first, write it down first, or do you feel like you have to compromise here and let them create the wallet and then eventually push them to save and back it up?
Yeah, definitely. I think the main problem is the new paradigm, right? So if you look at like Web 3.0 or 2.0, where everyone had their email and a password that led people to access different websites. And so now people have a totally different paradigm where you don't need to have email. You actually just need to have this like magic 12 words that allows you to access your account. So in this case, we as like Trust Wallet, we're trying to like protect the users because if we don't protect the users, then they kind of put the blame on us. So our main goal is like educate users and give them guidance on what these private keys are. And we don't usually call them private keys. We just say like, oh, this is your recovery phrase that allows you to get back to your wallet. So I think it's all about like simplification of the wording to make sure people understand the importance of this so they can keep it secure in places where others don't have access to. But it's definitely been a challenge because for most people, then they kind of take it for granted. They're like, oh, it's some phrases, I can just recover them later. But then in the end, they actually lose access to the fund. So it's very important to put really good focus on it and just always kind of put everything in a red font that says like, you need to back this up or you're going to lose everything.
Got it. And how about coming from Veronica, did you guys have any challenges in this process as well?
Yes, fundamentally, I think security and convenience are conflicted to each other, especially when you are pumping the popularity of crypto wallet into the internet generation. You are facing with users from different backgrounds and knowledge level about this industry. And most people we get in touch with are not familiar with the importance of private key even, or so we face a lot of challenges of building a secure but also easy to use wallet for the users. So it would be more complex for a hardware wallet like SafePal, because security, as we talked about, has many layers. For example, at the bottom layer, you have the hardware architect, and on top of that, you have the software and firmware running on top of the hardware architect. And also, based on top of that, you still have the UI and UX running in your app or in your hot end to help people to manage their own addresses or account details. And last but not least, you need to have a responsible users who are educated enough to manage their own bank, to be their own bank. So when we talk about security, there are a lot of different layers in this whole architect. So for now, till this year, we have been 2 years in this industry. So right now, the majority of the security cases or threats that we have come across mostly come from user education. So we have a lot of user inquiries asking that, yeah, your wallet is quite easy to use, but I mistakenly transfer some VET to to the VN address. Can I retrieve my asset back? I guess most of the wallet have this kind of user cases. So we think user education is right now the most urgent part to be focused on for most of the project teams in the blockchain space.
And it's quite an interesting example because, you know, these rare cases do come about, and sometimes because the projects themselves, they have a migration to mainnet, and the projects themselves are going through difficulties. So you have to have two challenges, not only to teach people about cryptographic keys, but also to be aware of what a project is doing and how maybe a token migration is going to happen. And sometimes the addresses even look the same. So I feel like that's a great example there about education, making sure everyone is well and aware. And I think it's both from the wallet side and also project side to make sure everyone is aware of what's going on. So I definitely agree with that point on education. So going next to Mark, is there anything else that you noticed in the security and trade-off area where you're trying to get security, but you're also trying to get the masses on board?
Yeah, thanks, Michael. I think both Veronica and Victor have raised some really big concerns we have in the space. As a company that is full-time finding and shutting down phishing attacks against crypto, I can wholeheartedly agree with both what Victor said and Veronica in that you know, there's that trade-off and trying to make users understand how important this private key is, you know, just the recovery phrase or private key, and that they shouldn't be giving this away. They shouldn't be having this out on websites or clicking on links and giving away the recovery phrases. You know, that ties very much into the user education aspect, which we've chatted about briefly. But I think more than that, it really ties into kind of a bigger picture here, which is that as teams in crypto, I think we're building better and better and more secure products. So, you know, we're getting penetration tested, we're getting security audits, we're open sourcing stuff, we've got bug bounties. But I think where, and that's fantastic, you know, take nothing away from that. But I think where perhaps we haven't been the best as an industry is bridging that next gap and saying, well, I've got a product, and this product doesn't just exist in a vacuum. It exists in my own ecosystem of users, power users, community members. And in fact, my ecosystem that my product lives in also interacts with a bunch of other product ecosystems. And I think viewing things rather from an ecosystem security perspective, instead of just a product security perspective, is something we can probably work on and do better at as an industry.
Awesome. I think that's a good point, especially with the rise of, you know, decentralized finance or some sort of use case. Suddenly the ecosystem is becoming bigger, and learning how to effectively manage your cryptocurrency keys, that's definitely important. So lastly, of Konstantin, in your wallet as well, did you guys found any trade-offs? Do you think anything is extremely vital in pushing crypto adoption and managing security keys?
Yeah, actually, I totally agree with the previous speakers, and the biggest challenge is education. And so people, they don't understand that the transactions in crypto, they are irreversible. Like, okay, and the crypto is all about be your own bank to control your funds with private keys on your wallet. And it's really one of the biggest advantages in crypto. But from the other side, if you send some funds, so it's irreversible, and you cannot just call your bank and say like, hello, please decline my transaction. And the same if you share your words to someone, 12 words to someone. So, okay, it's the same like share your credit cards to someone, but in this case, you cannot decline all the transactions. And it's the biggest challenge for all of us, education. So first of all, you should explain customers how to back up your private keys, your backup phrase, and the next time, okay, so it's a blockchain, you cannot decline transaction. Yeah, but so we found that the people, they are becoming smart with every steps, and even if the first step they can lose some funds, but it's education, and the next larger deposits, they understand how does crypto work, and they are becoming happy. That's really cool.
And okay, so next up, I think with a general discussion topic, I mean, we've talked a lot about education, but have we found any interesting ways to educate users? Because something that I found, obviously, I've been trying to preach safety and security for the longest amount of time, but sometimes people just aren't interested in that until something goes wrong. So how do you make people interested before they have to learn it the hard way? And I'll just open this up to you guys to discuss this.
Yeah, I think from my experience, it's always, the best way to learn from mistakes, but I don't think you want to, go through that with crypto because, it's irreversible. But in general, what I found, the best way to have kind of education is when crypto goes through adoption through friends. So when you actually learn from a friend, you get more knowledge, and the friend is kind of responsible for education of the person he's getting on board to. We did notice that whenever someone onboarded a person to crypto, they were much more well educated than the people who were just following some pump and dump schemes where they just wanted to make money. So it's definitely always like a social thing to get people on board, and it's probably one of the most effective in my opinion at the moment.
So as viewers, guys, you guys watch this video about safety and about how to secure things up, and we've always discussed this. So if you guys are talking to your friends, I think definitely tell your friends about safety and security so they don't lose and learn by losing hundreds of thousands of dollars or more coming into the space. What are any other ways that you can make like fun, interesting, funny, cute videos or something like that? Have you guys tried that in the past?
Yeah, like we have tried something like that. It's going quite well. So I call the strategy, I call it sweet and hammer. So sweet
and hammer.
Sweet and hammer. Hammer means that we need to at some point we need to threat people. We need to tell them in front of them what could happen if you lose your private key or your magic word. So this is quite serious, and we need to warn them about when they decide not to back up their keys. So this is what I call hammer. We need to notify everyone about the risk of their behavior when they are entering this space. And second is called sweet. It means that we encourage people to take, for example, security quiz and to learn what we have provided, like SafeHealth Academy, to learn more about what is the effective measurement to keep the crypto safe. So this is what I call sweet. I think for a security project team, it's always quite difficult for us to keep everyone educated enough. So we have to grab every chance we have to send them the sweet and also warn them about the risk coming ahead.
Got it. I guess we'll continue on this topic. I think I saw a really interesting post here from Fishfort. You guys said, we should be giving simple security advice to customers. I mean, what would be a top tip you would give to someone in this space?
Yeah, that's a good question. I think of course for anything comprehensive, you'd want to really sit down and work through not just your top tip or two, but work through like kind of a comprehensive framework for engaging with crypto and how to handle your money and how to manage your keys. But having said that, if we had to kind of slim it down to five quick points, what we generally advise our customers to tell to their clients are use a password manager, turn on two-factor authentication everywhere you can, avoid SMS two-factor authentication, install an open source ad blocker, install an open source anti-phishing plugin, and finally segregate your, as Victor mentioned earlier, kind of segregate your hot wallets and cold wallets. Keep your cold wallets safe offline, preferably in a hardware wallet, and then use your web wallets just as hot wallets for kind of day-to-day trading and transactions.
And I have a question specific for you as well, because I mean, you guys have dealt with phishing attacks. Are there any disaster stories that, someone really lost a lot of cryptocurrency, or some cases that really raise your eyebrows on this?
Yeah, absolutely, absolutely. I think, I mean, more than I care to admit, I think something that sticks out to my mind fairly recently is one of the things we do as a security company, especially as a phishing security company, is encourage people to use hardware wallets because it's much harder to get phished, of course, or so you would think. But we've seen over the last probably six to 8 months a huge surge in phishing against some very popular hardware wallet brands. Which are basically just, it looks exactly like the website. You plug in your device and it says your device is corrupted. Please put in your recovery phrase. And so we've kind of defeated, and I mean, we've tracked those funds. We're talking hundreds of thousands of dollars have been stolen in single compromises from this. So single individuals losing hundreds of thousands of dollars. The total loss to crypto phishing we're talking millions and millions of dollars a week at the moment.
Ouch, I didn't really realize that people would fall for that, but I think it's just that implicit trust in websites, right? All of a sudden, this website that looks official is telling you, hey, input your key here. And you wouldn't think, oh, this is phishing, but I'm going to go straight for that. That's kind of scary that there's millions of dollars lost. And I think this is only going to be bigger and bigger amounts as crypto gets more and more popular and as more people get into this. So I guess last question, we'll start off summarizing this, but for Atomic Wallet, guys, I mean, you guys are software wallet. Have you guys encountered phishing attempts in the past? Have you also encountered victims that have been hacked and lost a lot of money?
Yeah, actually, the phishing attacks is a huge problem for everyone. And also, if you just at the social engineering team, when the people are just messaging on different forums, like offering you just to double your money or something, and they click
I mean, we
phishing
usually
link.
have a huge wave of that on YouTube as well. I mean, not sure if you guys saw that, but there's throughout this whole weekend, we saw double your money in crypto sent to this address, and there's infinite number of scammers trying to do so, well organized too. So definitely agree with you there.
Yeah, it's a huge problem for everyone, and also we constantly ban phishing domains. Like here is a Atomic Wallets, and you can recover the wallet with the 12 words here, or even download the fake application. And the last months we have banned 3 fake applications from Google Play, and it's really insane, like how Google allowed to publish these applications. Yeah, and we are constantly fighting against scammers, and yeah, that's it.
Yeah, I would say definitely like scammers, they're just all over. Like if you look at the phishing scams, they just like pop up every single day on all the platforms, as you mentioned, like YouTube. They come up like a Google Ads, Facebook, Google Play, even App Store sometimes. So it's just like even if there's like people reviewing applications or some products, scammers still find different ways how to get in and like pretend to be a different applications. And it's definitely a challenge for products to build a product at the same time trying to protect your brand, trying to protect all your users. It's very difficult because it's time expensive and it's also like resources expensive. So it's kind of both, and you definitely want to try to make it better for every developer who is out there. Help them to also secure their applications.
Yeah, I definitely think so. And I think just like what scared me when I saw these YouTube ads was like how organized they were. They redirected people to specific chat channels where they can lead and follow up. And if you just look at it, they actually dated their chat channels too. So that means like they're doing this on a daily basis, just constantly churning in newbies and stealing their cryptocurrencies. And I think one of the things we really need to home in here, obviously, is cryptocurrency transactions are not reversible. If you ever make a mistake like that, chances are you won't get your money back. And I guess that's a hammer for Veronica, like you got to hammer that into people and constantly push that forward. Where do you guys see this going? Like, so in the future, do you feel like there's even easier ways that we can try to make it easier for people to be their own bank and manage their keys? Do you feel like it could be something that we can kind of stop phishing and all these scams forever?
Yeah, I'll probably start on this. If you look a couple of years from now, so there's a first problem is like, just managing keys. And I don't think they're intuitive enough for people to even own yet. Like 5 years from now, people don't probably have any recovery phrases at all. So I think most of the technology that will be built on top will be probably built into your phone itself. And so this will provide all the encryption, all the secure element on the phone itself that allows you to easily recover it with different like social mechanism, and it will be also very protected by the phone itself. So probably in the future, the technology will get better, and probably on the OS level itself, not on the software. But at the same time, like there's still going to be some attacks with social engineering, which is very popular. But I think we can cut down most of the things just building a better technology in phones itself.
I definitely think so. I think both Samsung and Apple were talking about cryptographic wallets and keys, and I think we're making our way there. Any other ideas that we can come up with?
No, I feel quite passive on this because I used to work in the security department of one tech giant who is serving millions of billions of users in China. So actually security is an endless war for me. And it is quite conflicted between owning your own bank and enjoying the freedom not to be learning the hard points of security tips. Because people are naturally, they inherently they are lazy. They don't want to digest any difficult terms, and they just want a secure and also easy to use. That's the most important point for the users. So I think there's always space for the scammers to leak in and to cheat on everyone. So I think this is an endless war, especially in the decentralized world. You need to keep your own magic word, your own passphrase, which is already difficult enough for everyone. So I think it could take even longer than we expected to see real improvement made in this industry.
Right, and I definitely agree with that. It does take a long time, and I think we have to start wrapping up the session. So I have like a 1 minute. I've been trying to time this talk, but guys, we have 1 minute, and I really want to wrap up a few of the conversation topics here. First of all, education. I think we definitely discussed that learning for everyone that cryptocurrency transactions cannot be reversed. So if you make a mistake, unfortunately, there's very little the authorities can help you with. There's no way to call the bank and decline a transaction when it comes to cryptocurrency transactions. And this is why educating yourself about why keeping this key safe is important. Second of all, one of the biggest take homes here is that there are hackers, and more importantly, there are phishers that are trying to pretend to be legit companies, like the companies that we have over here and our speakers. They want to pretend and use their faces to try to tell you, oh, sorry, your device is corrupted. Enter your cryptographic keys here. Never ever do that. Never tell that to anyone, and no tech support will ever ask you for your cryptographic or recovery phrase. And that's important to remember throughout this. Lastly, of course, this is definitely a war that we continuously have to fight. It's not easy to tell people, you got to have education. A lot of people just go in and start using it. And I think something that we constantly have to do, obviously, sorry about this. This is a timer for the 25 minutes. So I'm going to wrap this up here and say, look, guys, definitely contact everyone here. We have Victor from Trust Wallet, Veronica Wang from SafePal, Mark from Fishport. We also have Konstantin from Atomic Wallet. These guys are great resources. Read up on their material and the products as well. And obviously, guys, ask more questions if you can. And if you also want to have more videos and tutorials about how to do that, check out boxmining.com. I start a YouTube channel, and we talk a lot about security as well. And with this, I'm going to wrap up the session and thank all the speakers for coming here.
Thank you.
Thank you, Michael.
Thank you.
Thank
Cheers.
you, everyone.
Thank you.
Thank you.
Thank you so much, everyone.
Okay. Sorry, I had a problem with my microphone. This happens on live. Thank you so much. Yeah, well, thanks for all the panelists for being here today with us. We learned so much. I learned a lot. So now we're going to the final round of our limited editions NFTs giveaway.
Woo. So for all the viewers that are watching right now, be sure to scan the QR code that you'll see on screen shortly with your phone for a chance to win at least one of the last remaining 111 possible rewards. So again, the rewards can be anything from a limited edition Binance jersey to a limited edition Binance swag pack, VIP level ups, and even up to 100 BNB.
So try your luck and make sure you've downloaded the Engine wallet to receive the NFT and prize. So here it goes.
Good luck.
Binance started as a simple crypto-to-crypto exchange. From the start, we wanted to do things differently by providing robust customer service, acting on user feedback, and continuously improving our offerings. Word quickly spread. Within 5 months, we were the most widely used crypto exchange in the world. From there, we invested our success into growing the ecosystem and making it more collaborative and inclusive by creating platforms to identify and empower other innovative crypto and blockchain projects. These were some of the first steps we took towards increasing the freedom of money for people around the world, an initiative we're still just getting started on. As we neared our first anniversary, we launched our first partner fiat to crypto exchange, bringing digital currency to an underserved market and bridging the worlds of cash and crypto. Weeks later, we launched the first blockchain-powered nonprofit to increase transparency, efficiency, and accountability in charitable giving, as well as 2 free learning centers dedicated to expanding crypto and blockchain knowledge. In 2019, we continued our ecosystem focus, launching the community-driven Binance Chain blockchain and decentralized services, delivering new levels of freedom to our users. Meanwhile, Binance Coin reached number 6 by market cap, one of the highest ever reached by a utility token. And we introduced the Venus project to develop localized stablecoins worldwide, in parallel with a host of fiat initiatives to reduce the barriers of entry to crypto for all users. Along the way, we added new services and features to the Binance Exchange, like margin and futures trading, and savings and staking programs, delivering key requested features to our users. 3 years in, and one thing is clear. At Binance, we're committed to advancing the crypto cause, growing together with our community, and powering the next generation of innovators with open platform initiatives designed to build key crypto infrastructure. We aim to support all popular currencies by the end of the year, providing even more ways for people to access crypto in order to increase the freedom of money for people around the world. So thank you for helping make our vision possible. We can't wait to show you what's next. Let's take crypto off the charts together.
I really like that video too.
Me too.
And congratulations to everyone who was able to win one of the limited NFTs. We'll definitely have more NFT campaigns and activities throughout the year, so keep an eye out for those. You can always check on our Twitter for the latest activities. I also really love those Binance jerseys and would really, really like one, but haven't been able to get one yet. And also those NFT collectibles. Myra, you have some collectibles, don't you?
Yeah, I do. I have one from the Chinese New Year 2020, and actually I
That's a good
love
one.
them. I'm expecting one from this anniversary as well. What about you, Leah?
No, I haven't downloaded Engine Wallet actually, so I'm
Oh,
not
come on.
eligible this time, but maybe next time. Anyways, I am very excited about our next panel on the global stage. So Ryan Selkis from Masari will be moderating a conversation with Kyle Samani from Multicoin Capital, Nicholas Baca from Ledger, and our very own partner and CEO of Binance US, Catherine Coley. And they'll be discussing the COVID-19 effect, accelerating the adoption of crypto.
Nice. And in the local stage, I invite the Brazilian panel about innovation in financial services in Brazil. Em português, sim, muito obrigada. I'll be joining this on the local stage to talk to Tata Setter from Convex Research, Carlos Rischiotto from IBM, Bruno Diniz from Spiralen, and also the moderator will be Priscilla Yazbek from Infomoney. So if you're watching this on Binance.com, you can just easily jump from the global stage to the local stage to watch this quite interesting panel as well. So, and if you follow our Binance Portuguese social media, you also have the direct link to YouTube. So come with us and see you soon.
Awesome. Welcome. Thank you.
All right. How you doing, everyone?
Let's get ready to rumble.
Yeah, let's do it. Catherine, Nicholas, Kyle, thank you for joining. It's exciting to talk virtually. It's been a while. I guess the starting point that I posed to Kyle was probably a little bit ambitious. I told him that he had to explain macroeconomics, QE, and modern monetary theory in 30 seconds to kick us off, just to set the stage, because we don't have a lot of time here. But while that is an exaggeration, I will lead with a prompt, and I want you to kind of agree or disagree with me. To me, there is only one thing that matters right now in crypto, and that is coronavirus case growth rate worldwide. Because as that goes, so goes world governments. As world governments go, so goes Bitcoin, and then everything trickles down from there. Are you seeing the same thing, or am I just a crazy Bitcoin maximalist?
If you're asking me, we are seeing continued growth, especially since I guess we've been in quarantine for about 120 days now, which is almost our whole operations have been around about 9 months. So we've had a big chunk of time where we've been doing most of our growing during the lockdown. And we've seen a continued, pattern of growth, partially because we were new and now we're getting more established. But also, as you mentioned, there are just so many key components to which COVID is making crypto more relevant. You're stuck at home, so anything that you can do from your home, anything that you can do from your phone digitally, that's going to be access to different markets, and anything that you can do 24/7, because most folks maybe have to still work from home, but then they've got those off hours where they're not too sure what to do. So they're looking into markets, they're becoming, trying to follow something. Sports are closed. So we're seeing kind of all these events kind of domino effect into, as you said, farther crypto adoption, which is a positive, but also a negative in the fact that we're increasing the, lack of stability that exists in our own world.
Where am I wrong? Is it not just about Bitcoin?
I mean, it's definitely not just about Bitcoin. We've seen some serious growth here in alt season, picking up with the likes of folks really being able to have different markets that they can access, especially through Binance US. Some of our leading volumes the past few weeks have definitely not been Bitcoin, but certainly we saw around the halving that was led mostly or predominantly by Bitcoin flows. So I think as more people are becoming aware of these different instruments that you can use inside of the digital asset space, they're getting more comfortable to test and try different things. We saw that with the Doge rally more recently, and then frequent the Link and VeChain acceleration.
What do you think? Is this just picking up pennies in front of the steamroller, or is there more to alt season this time around than just quick pumps and recycling? Unmute. Got him.
Yeah, to answer your first question on COVID and crypto, long-term COVID is like the most bullish thing ever for crypto, both for digital gold, maybe / Bitcoin, as well as for all the other trust minimized applications. The thing that's the weirdest about this crisis is that people are realizing the news doesn't necessarily make sense anymore. A lot of things just don't add up correctly. And that's causing people to question broad-based institutions, which is scary actually in the near term and very, very good for crypto in the long term. I'm less convicted than you are that equities crashing by 30% tomorrow is necessarily bad for crypto. It's possible that correlation will tick up, but I'm not super convicted that that's the case. I'm very convicted though that this is all good for crypto in the long run, but that could be years. I'll defer to Catherine on comments on the duration of alt season. I think she has better insights into what's happening in alt season than I do.
Nicholas, how do you guys think about monitoring the impacts of everything that's going on a macro level with Ledger in particular? Because there are kind of new divisions of the business beyond just self-custody that have launched more recently. You could talk a little bit about those, and then what are some of the KPIs that you're looking at as you monitor just broad-based health and maybe, as Kyle put it, even catalysts for crypto more broadly?
Yeah, no, sure. I think first, I'd like to say I was quite surprised by the kind of volume that we got during lockdown, because we got maybe 4 times more sales. It's even more special for us because we are a hardware product. So actually, I mean, we had a very hard time shipping things. and manufacturing things, but our team has been on top of that, which was great. I think that with more and more people learning to work remotely and learning about, well, all the constraints that you have related to that, people are probably going to look at crypto at one industry that solved already a lot of those problems. Because if you look at most crypto companies today, a lot of them can operate fully remotely. We had kind of an interesting board meeting, by the way, where people told us that, well, most of their portfolio were running around and trying to organize while we were overperforming, which was quite surprising. But I think that in the future, more and more people will look at the different issues that you have when you work remotely, and security and privacy is a very big issue regarding that. I mean, if you look at the news when lockdown started, you had a lot of discussion around Zoom and typically privacy in Zoom. I mean, people complain, they issued several patches. It's probably not fully encrypted end-to-end today. And well, we have a lot to bring in the protocols themselves. I mean, as an industry that already worked on all those constraints. And well, we brought some interesting solutions in privacy that maybe I can develop a little bit more later.
Maybe I'll open things up a little bit and we'll talk beyond just Bitcoin and coronavirus. I'm curious if some of the action that we've seen this year is more quote unquote fundamentals driven than in the past. Coley, you see the ebbs and flows and kind of the ups and downs of speculative traders. But Nicholas, Kyle, you're kind of on different sides of the fundamentals question, right? For Nicholas, I'd imagine that people that are using Ledger Wallet are predominantly going to be making longer term investments. Kyle, obviously, by virtue of what you're doing, the same thing. As you think about the fundamentals of assets beyond Bitcoin and kind of down the market cap pecking order, what do you think is closest to product market fit beyond just the digital gold use case right now? Ethereum had ICOs in 2017. Is DeFi as close as some people think it might be to product market fit, or is this still something that's in the test net and sandbox right now? Go ahead, Kyle. We'll kick off with you, and Nicholas can chime in.
So DeFi is kind of talk of the town these days. The growth and rate of innovation happening in DeFi today is impressive. I think if I were to summarize what is DeFi today in a couple of words, I would say it's trying to be decentralized Binance. Is basically what it is. I think that's a compliment, not. I think it's a very good thing. However, I think if you look at Binance today, a huge percentage of Binance's efforts are not just on facilitating trading existing coins; it's actually growing the kind of global ecosystem of people in crypto and onboarding net new people in the crypto. There's basically no evidence today to support that DeFi is growing the market in any way, or is onboarding new users. And so as I look at the market, I see the funnel of there's 7.5 billion people in the world. Some of them have heard of Bitcoin, some of them have bought Bitcoin, probably on Coinbase or Binance or Huobi. Some of them have bought Ethereum, and some of them have withdrawn an ERC20 and started to do some DeFi things. And that funnel is probably a 99.9% drop off from top to bottom. And it's not clear that part of the funnel is reaching up and over the other parts to actually onboard new people. So for now, it's cool, but it's not really driving net new economic activity or behavior. It doesn't mean it can't. It's just not clear how you get from where we are right now with DeFi to there. So we like DeFi. It's cool. We're invested in some DeFi things. Where we're actually, if you want to talk about real world impact of things happening, I think you're seeing a lot of interesting things happen kind of on the margin that are less discussed. So Helium today is in a very interesting position. LivePeer, Arweave, what are some of the other ones? Brave. You see all these Reddit, you see all these companies that they're either about to launch something really big, or they have a product now that is just it's not in the gusto of the kind of day-to-day crypto community, but they're actually making meaningful real world progress of doing things. And I'd say we probably more than most of our peers are really focused on trying to find those opportunities and make big bets on those.
Have any of those broaden the top of the funnel, or are the numbers still too small?
So in many cases, so if you look at Helium as an example, there's 4,500 hotspots around the United States today. I think they've already sold more than 10,000 that are sold out. that will ship by the end of the year. So 10,000 is not a large number of people, and some of those people have multiple. So the absolute number of hotspot owners is small, but that's actually irrelevant to the point. The point is now you've got hundreds of millions of people all over the world that are blanketed by this radio coverage that you only need 4,000 or 5,000 people to do to cover hundreds of millions. And so with that, you're going to start to see lots of companies say, wow, this is a new wireless network that never existed, and I can leverage that. And those companies don't know or care about crypto. And so you're going to, and live here is going to have a similar dynamic where you'll have a relatively small number of people, let's say measured in the hundreds or the thousands, who are operating the system. And then you'll have, thousands or millions of users who are using it that don't even know what crypto is. And so we're starting to see those kinds of bespoke applications really grow in meaningful ways. And I expect that trend to accelerate meaningfully over the next 24 months.
Nicholas, is Kyle right? Is that the extent of the top of the funnel, Bitcoin, and then everything insular from Bitcoin and Ethereum on down? Or are you finding new users that are finding other avenues to Ledger as they fall down the crypto rabbit hole?
So we're seeing a very strong interest in buying Bitcoin, I think, mostly because, well, Bitcoin today in the media, if you talk about a crypto, people know about Bitcoin. I mean, even if you talk about Ethereum, people on the street, I mean, don't really know about it. So of course, in our community, I mean, it's well known, but when you buy a crypto, the first one you think about is Bitcoin. And what I noticed during lockdown is that, well, people try to buy Bitcoin on basically every app they could find. I mean, if you had an app that was an help towards the price, for example, that had an option to buy Bitcoin, people would use that option just to buy Bitcoin because I think with the lockdown, the crisis, I mean, people are just worried about the economic state, and so they are looking at different solutions. But regarding our users, they are not just using the product for Bitcoin. So we see a lot of interest in trying all kind of different protocols. So because I think that the thing is, when you have something, I mean, when you have a hardware wallet, you want to protect something that's going to be valuable. So if you start thinking at some point that your crypto is going to be valuable, I mean, in the future, or well, if you think that you own or that you are going to be owning a little bit more later than what is the price of the hardware wallet, then you want to invest. That's my thesis, basically, to show the growth, because we have seen that, well, when prices are moving, I mean, users get interested. I mean, even if the prices are moving up or down. So that's really, I mean, that every time you have a trigger that make people think about, well, what the value of their assets could be, they think about a hardware wallet and they think about moving. So we are trying to, I mean, regarding the network effect, I think it's important as well, because once you have a lot of users playing with crypto, I mean, you can show them new services, and those services are, well, everything we do, I mean, every day in crypto, which is not very common in all kind of applications. If we think about just owning your keys, I think today cryptocurrencies is the first application of cryptography that we put in everybody's hand with that kind of control. So if we can demonstrate that you can control your digital life with crypto, well, you might want to apply that to other solutions. And typically in COVID times, we are looking at solutions that get less and less, that put less and less control to users. For example, contact tracing applications. Well, if we had ways with crypto to solve the kind of problem that puts, and actually we have them, I mean, when we think about scalability, zero knowledge proofs, and so on, we might be able to change things for good, I think, from cryptocurrencies back to the real world.
Coley, I'll give the last question to you, and it kind of ties back to Bitcoin versus everything else. I know, not every data company is as trustworthy with spot volumes data, but I know at Messari, when we look at it, Binance today, Bitcoin trading is about 5 times as much as the next several on any given day, with the exception of maybe intermittent spikes in volume with assets like Link that have just gone crazy. So by and large, people are still getting in and out of stable coins and Bitcoin in and out. What are you doing at Binance to promote education around the non-Bitcoin use cases and some of these other assets that people might be able to use as they go down the virtual rabbit hole, not just the Bitcoin rabbit hole, as they're under lockdown, as you alluded to in your first response?
Yeah, one of the things we stand for that CZ put in place 3 years ago was the freedom of choice. So giving people the alternatives for them to decide their path into crypto and what suits them best. So we outline all of the coins that we list. We have over 70 trading pairs on Binance US. That's about 35 tokens available. And we have pages kind of discovering all about you or all about each token to walk people through how they can learn more about each thing. You can rely on the information from Asari. You can reach out to the Binance Research or Binance Academy to learn a little bit more about how you're going to be accessing these tools, the different trading ways, whether it's OTC, whether it's market orders, whether it's just our buy crypto button. And just continuing to educate people, not intimidate them in this space is what we really stand for, because so much of it can seem confusing. Even a rabbit hole doesn't sound that inviting. So we are here to welcome more folks into the space and hopefully complete that funnel where you might see DeFi kind of narrowing it. We're here to continue to broaden the access to crypto for everyone.
Thank you very much. This was a short one, but absolutely appreciate everybody tuning in, and we'll hopefully see you all again in person soon.
Thanks, everyone. Bye-bye.
Bye-bye.
So much. Thank you for joining us. It was so great to have everyone. Thank you again. So Coley, please stay on the line. Can't tell if you're still here.
I'm still here.
Oh, great. Thanks for staying. Really excited for you to join me and present these next Binance Influencer Awards with me. So as background for the audience, the Binance Influencer Awards, this is the first year that we're hosting them. And our goal is to recognize the voices and the industry leaders who have really made a significant impact in the space. So the winner of this Influencer Award was 100% nominated and chosen by the Binance community. And aside from the award itself, we also want to give a huge thank you to all of the content creators out there who are helping to raise awareness for blockchain and crypto around the world.
Yeah, there's been some amazing creativity. It's really fun to see.
Yeah, I don't think we would be where we are today without all of the content creators out there. And one award is definitely not going to sum it all up. So unfortunately, only one person can win this one. But again, the nominees were all voted by the community members through Binance's official social media accounts and Google Form surveys, and all of the votes were tallied up from confirmed Binance users. So without further ado, let's see who the winner of this year's North American Binance Influencer Award is. I believe there's going to be a video.
Green eggs and ham. Crypto finally.
Oh, you can see.
Thomas Mustache or Tommy Mustache.
Tommy Mustache.
Moonshilla. And the Wolf of All Streets.
Who do you think it is?
I follow all of them. they keep me going every day. Congratulations, Scott.
Congrats.
That's awesome.
Congrats, Scott.
Binance Influencer Award for North America 2020 has been voted on by the peers in the community, choosing you, Scott.
I'm truly humbled
Thank you
and
so much
honored
for all of
to
your
receive
tweets.
this award. I think it's important to note, though, that there are much bigger influencers in this space than myself, people who are building things and who are working hard towards mainstream adoption. And I think that each of us can be an influencer in our own way, step out from behind our avatars and our screens and go out and get the people in our lives to understand the importance of Bitcoin and blockchain. I think we're at a really unique time in history now with infinite QE, money printing, and corporate socialism, and people are starting to see the cracks in the foundation of legacy systems. So now is really the time for us to each go out there and influence people to become a part of this movement. So thank you once again for this award, and get out there and do it.
I love it.
Absolutely great. I had a wonderful time learning all about Scott. I was on his podcast.
Oh, were you? How did you learn about Scott? Where did you learn?
I actually followed him because he had great trading knowledge and was one of those pure technical analysis guys that I loved to follow when I'm, keeping up with the markets. So
When
between
you're
that,
geeking out on the side outside of work.
always, that is work.
Always. Yeah. So you've known him for a while, or you've been following him for a
I
while?
think I've been following him since about middle of last year or so. So he's really ramped up and become quite a good voice in the ecosystem. So kudos to you, Scott. Thanks for bringing us all together.
Yeah, congrats again. The next award, which is also the final award, is one of the most anticipated ones, which is the Global Finance Influencer of the Year award. So this award is also fully determined by our community. And again, as Binance, we do appreciate all of the influencers out there, like Scott said, who are sharing, educating, and helping elevate crypto and blockchain knowledge for the community. So in terms of voting criteria, the process was the same. The Binance team asked the community to nominate their favorite influencers from all around the world. Suggestions came straight from the community. We weren't involved in the selection process. We were just the ones tallying up the votes. So without further ado, let's see who got the most votes. Who do you think is going to win here?
It's funny trying to say these names out loud when I've really just read them on Twitter over and over.
Yeah, exactly.
Great group of names there.
I dare you to say them all 3 times fast, 3 times in a row.
I'm not going to embarrass myself just yet. It's been a long day.
Right.
Oh, we can say that one. Alps, way to go.
Congratulations, Alps. And also congratulations to all of the other nominees
Merhaba,
too.
my name is Alp
Definitely not a
and
small
I'm from
feat.
Turkey. I discovered Bitcoin in 2013 and published my first YouTube video in the same year. I have been using Binance since 2017 and I have attended all Binance events, and this way I met a lot of people. Thank you very much for nominating me. Hoşça kal.
Awesome. Congrats. Yeah,
That's
and
awesome.
really congratulations to all the nominees for all of the awards. And even the ones who were not nominated, and really appreciate all of your work and your the time that you spent really dedicated to the community. So thanks again.
Absolutely. You make our lives so much more enjoyable reading up, seeing how you're trying to, grow adoption in crypto space. We're in there every day. So appreciate you guys communicating and chatting back and forth with us, whether it's at Binance or at Binance US. We're there and really appreciate all that you do on Twitter, keeping things positive and moving forward in this industry. So thank you so much to everyone.
Yeah. Thank you. And that is a wrap for our first ever Binance Awards 2020. Hoping to continue these in the future every year as well, to continue to recognize these important influencers and projects. So thanks again for joining us, Coley.
See you guys.
Bye. So in this next part, Myra will be joining me back on. Give her a moment. Hey, Josh.
Hey there. Unfortunately, I'm not Myra, but I'll happily
Good to have you
keep you
too.
company. Yeah. So thanks to everyone for joining us. You really are what makes Binance, a worldwide ecosystem. You are why we're here, and you are what we work for. So we would like to invite all of our friends, a lot of familiar faces, back into the room for the closing remarks. So I can see everyone's videos popping up. Welcome back. Don't be shy.
Good to see everyone.
Take your
And
covers
it's really
off the video.
unfortunate to have to say goodbye, but we are at the end of our conference now, and what an event. It's been a long 10 hours. And this event came together super quickly and it flew by just as fast. And we hope everyone who has been watching for the last 10 hours or even just for parts of it have really enjoyed it. And thank you so much for staying with us until the end. We also want to say a huge thank you to all of our sponsors, media partners, and community partners who helped make this event possible. Please check our anniversary page on Binance.com for the full list of partners.
Amazing. So, unfortunately, we're going to be wrapping things up shortly and closing today's festivities. But on behalf of all of the Binance team and the Binance family, a massive, massive thank you to you all. To all of our friends and users around the world who've joined us today, thank you. To all of you behind the scenes, thank you so much. It's been an absolute pleasure. And I'm going to hand over to Tina, who's going to give us the final remark.
Well, it's been a fantastic event, Josh. And again, the team's done an incredible job. Thank you to all of our viewers today and to all our incredible speakers for joining us to celebrate our 3rd year of providing core infrastructure services for organizing the world's crypto. We'll continue to focus on increasing the freedom of money globally for the next 3 years and beyond. We couldn't have done it without you, our users, our partners, and our ambassadors. So for now, I'd like to invite all of my team members to wish Binance a very happy birthday on 3. 1, 2, 3.
Happy
birthday,
Binance!
Woo! Thanks very much.
Thanks.
What does it take to connect billions of people, to transcend borders and rewrite the system to be more fair, just, and free for all? It takes a willingness to challenge old principles and create a new foundation that forever changes the way we transact and interact, because financial freedom belongs to everyone. Over the past 3 years, you've watched us grow from a cryptocurrency exchange to a comprehensive blockchain ecosystem to build today's crypto world and the crypto universe of tomorrow. We were never alone, because from day one, we've been working and growing together in support of a shared vision to increase the freedom of money for all. The freedom to earn, the freedom to hold, the freedom to spend, share, and give. No matter who you are or where you come from, it takes a community to change the world. Though we still have a long way to go, let's take these next steps together. Because together, we'll unlock the freedom to do more.